one point, but now my Netflix, I mean, it's chilling for the most part, but still down on it. But definitely not as bad. Yep, ad tier reaches 15 million global monthly. It's going to come out right at the open here. So let's see. Remember, the last couple of days, right when the market would open, we'd kind of just get a wild move. So see if the bonds also hold up. Remember that Treasury refunding, that was a big part of today. And then remember also a lot of bad earnings here in the morning. So you got a big list of names that you could be going after. There's even a couple from yesterday. Round one. Fight. Yalla. All right, so watch of Netflix. I think it's like 415 to 417. Watch what we get from there. ALB down. Again, that Paycom had a huge effect on like 15 other companies, I feel like. Five other companies dropped more than 5% because of Paycom. So keep that in mind. You still got PayPal earnings. Don't forget about AMD. Again, AMD guided down, and then AI data center hype is what ended up bringing them up there. Paycom again, 420, pump it up. Well, let's see again. Futures are at a very, very good spot. SPX is right above 4,200. So this is now the first time we have filled this gap. We have literally came back above 4,200. No shit. I might have to pull it back a little bit more. So the next gap fill will be 42.47. Couple of chats were talking about 42.40 being a big level. But again, whatever we do here intraday, remember, we still have Powell, and even right around the corner, you do have more data there. Paycom down like 38, 40%. That's insane. So again, I don't know about playing them specifically. They still got meat on the bone, but just remember, there's a couple of other plays that could fall in line with that criteria. Netflix, Estee Lauder. Oh, I forgot. EL. Yeah, they even hurt Ulta and all the other ones. Then you had Caesars with good earnings. What was that other one? CLLS. This was a random biotech. Again, pretty much who was, I think, NVS. Not Novo with the other one. They said that they're investing $200 million into them. Dollar is ripping, which is odd considering I don't know if the yen recovered from the morning, but yeah, the yen's giving back a little bit, but dollar was doing a little bit better early on in the morning. KRE dump, yeah, they're down by 0.7. XLF is barely up. So remember, there's a lot of bad earnings in the morning. It seems like tech and a couple of other names are doing good, but some of the more, financial value plays, not so much. It kind of looks 50-50 here. Meta's going up, Google, Amazon, I have that in the bottom right there. Square's on the low. Square on the low, even PayPal started to flip. Again, AMD, that's post-earnings now. It's moved more in 3 minutes here than I think the whole pre-market. Believe it or not, Boeing's on the high as well. Hunting season. Bank of America is still in the green. Again, XLF's barely holding on. Visa and MasterCard really running there. Airbnb on the low. Uber on the high. So see how some of these travel plays play out. SPWR on the high. Abbott. MDT. Didn't Novo, or is there earnings in the morning? TSM Pop. Canadian Manufacturing PMI 48.6. Oh, yeah, we have U.S. PMI still, too. That's all at 7. So we get ISM Manufacturing at 7, or then 6:45, too. So give it 10 more minutes. We're going to get, You're going to get global manufacturing PMIs. That's S&P, and then we get ISM with the JOLTS jobs openings. Data coming out before Powell, ISM, and JOLTS jobs openings. You got S&P PMIs, ISM manufacturing PMIs, and then JOLTS jobs openings, all at 6:45 to 7 a.m. My time, Pacific. So that's literally in the next 10 to 30 minutes. Is coin still going up? 0.28. BLDR on the high. A couple names are still holding pretty decent, surprisingly. And don't forget, Apple still too tomorrow. That is part of the earnings schedule. FSLR. Joe Rogan. Yeah, we played it on stream yesterday. We saw it was weird. It seemed very unsafe, but it was pretty cool. LVS on the high again. You had Caesars with earnings. They held up a little better, but they're kind of slipping a little. And then SPY still holding. I don't know if this is 42. Are we below 4,200? Yeah, barely, but you're still holding up this range. NCLH is on the high. Again, I think there was earnings in that front too. CVM. Why does that sound familiar? Oh, that's that was that cancer one. It's been doing this for the last couple days. Where's Outlook? They went up yesterday. They're trying to go up. Palo Alto on the high. NVIDIA. TLT is actually going up. And then another candle on AMD as well as NVIDIA too. DQ. Ulta's still down. Estee Lauder down 18. Baba's on the low now. That kind of came out of nowhere. Pfizer's finding a way to climb from yesterday. Again, they were down, so they're higher than their earnings. 4198 still just holding. Again, high-low ticker still kind of all over the place because you have a weird breakdown in terms of laggers and leaders, but you can kind of see it here. To start off in the morning, you got a nice little cat dog going on. And remember, Euro close is still an hour later, and that's kind of been stopping a lot of the moves. Pfizer's going through the high. Micron as well. Seems like chip makers are doing good. I didn't think people were that excited from AMD, but low-key, you're kind of catching a bid there. The Theo Tucker conference. I saw a clip of that yesterday. It was wild. Hunter was the plug. Very weird seeing Tucker, like, you know, he just sounded like a normal dude. I've only seen him on like news reports telling you about America, but that was really funny. That was really, really funny. Where's coin? Down by 0.3. Micron's still going. I think Roblo and Snap on the high. SPY back to VWAP and AKA 4,200 flat on the SPX. Futures are doing a little bit better. I don't know if you guys want the levels here. I think the next level is like 42.14, maybe 42.07. But yeah, I think it's like 42.10 to 42.17, then 42.23, then 42.50. All of these, again, it's the same way we played at these levels on the way down, if you remember or if you recall. RCL on the high. Again, I forgot which one it was. One of the cruise lines had earnings. They did actually decent. Gold trying to come back up. The dollar, dollar's still up a decent amount. The yen was helping out, but remember, dollar's at 30.14. Holy shit. The dollar's still continuing. That's crazy. So, hopefully it tops out. But that whole yen fiasco yesterday, it's still kind of weighing on this. The dollar's still spooky is what I'm trying to say. Maybe, again, we've been waiting. We waited all October. It didn't happen. Maybe there's a time where maybe the market ignores equities or market ignores bonds in the dollar. But for now, it is kind of hard to start to keep ignoring that on a day-to-day. It's pretty wicked. Ghost law, baby. Good morning. Welcome. Garmin, Google, TGTX. Again, they had something today. I think it was some approval or data. They're going up 46% now. Once again, MasterCard and Visa were running earlier. Targets on the low, down 1. Staples aren't doing that good, actually. I think that's pretty interesting. And then Abivai 142. LinkedIn introduces new AI-powered premium experience. Microsoft ripping through. TLT as well. Remember, the morning here, it was kind of weird. You had TLT. You had TLT up on the refunding, and then we gave it all back. And now cash open, stocks don't do shit. And then you're just holding up right near the high of all of that. So, it's getting kind of interesting. You're getting that volatility, but that was your first good driver in the morning. So hopefully that holds. 7 minutes till ISM data or S&P PMI data, excuse me. ISM is at 7. Yeah, Wayfair was down, then shot up 16. Walgreens, damn, at 20? That's the new 52-week low. Walgreens getting mollywopped here. Next level on QQQ. I don't know about the QQQ, but hopefully you're familiar with all the levels on the way down because we just worked through it. But right now it's going to be like 4207 to 4209, then 4217, and then 42 like 29, and then 4240. So you got like three little 4207, 4209, 4217. That's what I would be watching to the upside if you want to build any momentum. Oh, yeah, there was part of that strike stuff. And then new high on the bonds. Again, Microsoft, NVIDIA, a lot of big tech is just leading the way. No problem, Habibi. No problem. Apple even, they're only up a quarter there. But keep in mind the names that already reported, you know, they're literally just in their own little world right now. ACGL, Abivai again. Who is that company? Is it ARDX? One of them sold something to Abivai this morning. RPTX on the high. It's another bio. CBOE. Square is still on the low, though. So, again, it's weird because some other financials are just going straight up. Regionals are down. Big banks are holding. And, again, SPY is just literally right at the middle. QQQ 350 is the resistance. DraftKings flip. They still have to report their earnings. They just came out with news about the main sports book. Yeah, that was up in the morning like 3 or 4%. They came down. Sava's running day 2. SPY just made it above VWAP. I mean, I don't know if you have to be a rocket scientist for this one, but it feels like equal weight is down. Yeah, equal weight is just plummeting. Everything else is just getting held up by, what's it called? Everything's just getting held up by the bigger tech names. And again, some of the earnings that didn't die. Something about Hulu and Comcast, you heard? Comcast is starting to move up. Watch Disney, too. See if they're getting anything. You got Charter and Comcast going up. Troy saying he's hearing something. You say you need a rocket scientist? I said you don't need to be a rocket scientist, but it's crazy that we got a rocket scientist that was able to respond to that. That's amazing. That's amazing. God bless you, JG. Chada. Let me see. Oh, they got a price target yesterday. That's about it. Pins big red. Google on the high still. And Google still has a lot more room to run after they gave up. Yeah, Pinterest down 1. Still holding up good. And then CVS is on the high. Again, they had earnings. Their earnings were, I think, it was like bad or good. And then they had a flip-flop. But they're trying to work their way up here from the bottom. Charter Communications still going up, as well as Comcast. GLD is on the high. SPY and NASDAQ green. Russell and Dow in the red. DC files suit against Thomas Bravo's rental software unit. AMD on the high. What's their... I think they have a ticker. Where is it? No, I don't think they do. Tesla. Google's on the high still. Again, I think they're leading a lot. S&P Manufacturing in 2 minutes. Indeed, my friend. Indeed. So, yeah. 2 minutes. The number is expected to be 50. Last time it was 49.8. And honestly, S&P PMIs ain't really moved too much as of late. So we'll see. I'm kind of prone to good data will be bad, and then not too bad will be right on the money. But you never know in this environment. Let's see even how the data wants to respond in young November. So get ready. 4203 now. You're hitting a new high. We're finally breaking out there. Dow and Russell are still in the red. S&P and NASDAQ are the leader, with the NASDAQ in unequal weight. That's what's ripping everything. It's a couple of names helping you get some lift here, even though you're still watching a lot of the other names kind of get guttered here, more or less. That's been a trend you've seen. S&P PMIs edged higher to 48.6. I think it's already out. Hold on. I think I don't know if that was, I think it's at 48.6. It might have came in a little lower. It's not supposed to be out yet, but I just saw a headline. Maybe give me a second. Let's see. What happened to YouTube? Nothing. YouTube should be up. You saw that too? Yeah, it happens sometimes. So I think it is. I think that is that Canadian? Maybe. Oh, yeah. S&P, that was the Canadian number. It was exactly 48.6. So give it a second. Again, bonds are doing good. SPY just hit a new high off that. Realistically, just watch for the yields, man. If we could get some of that relief, that'd be good. 10 seconds. Powell speaks at 2:30. All righty. Reported at 50. Came in line. Estimate was 49 or whatever, or 50, and it came in at 50. So literally right at the numbers. No big change at all. If anything, done. Now 15 more minutes. So maybe we rally for a little bit more. Maybe we hit a new high, come back down again, and then rally at the next set. But 15 more minutes now. Jolt's jobs opening. I would say that's your biggest one up until Jerome Powell at 2:30. So not too bad. We're holding up for now. Again, ISM or PMIs came in at the numbers. No real shift. I think it is below contraction, but for the most part, nothing real big. And then tech is still rocketing here. Google, Amazon, Apple, Microsoft, even AMD, Tesla's even up by 1, but those are all going into the highs. Sarepta, remember they dropped like 40% the other day. CWK, Cushman Wakefield. NVO's on the high now. Will tech sell off on a Fed cut? Who knows? I mean, the first cut, I think there's going to be a lot tied into it. So, as far as assuming what will happen then, who knows? Again, remember, people thought tech would go down when rates were raised, and the exact opposite happened just because of their debt loads and all of that good stuff. So I would say let's take it one step at a time here, get through it. But God knows what the next, that probably like 6 months, a year down the line will look like, just especially with how they've finessed this year. You're making another huge pop. So again, you had a little bit of the red candle. Bonds keep climbing. I do think bonds are now going higher than refunding. So this is a very big deal here. Assuming Powell is good and then the jobs report isn't bad, the fact we're already breaking this peak, if the bonds can keep catching a bid, that's going to be very, very good. So you're starting to run like that data meant something, but you're getting that pop here. Another new high, back to 42.06. So again, 42.07, 42.09, I think, 42.10. And then we go up from that. Let me see. Yeah, 42.09, then 42.17. Mm, 4204 again. So let's get up to 4207, then 4209. It gets weird there. If you break past that, it'll open up the door to 4217. And if that could hold, I mean, it'll look like a good day. But I do think you're going to run into catalyst before you get there, unless it wants to really keep moving. NVO is still on the high. They're actually kind of running decent now, up 1.3. PayPal back to open. Check Square too. They've been getting mollywopped. Good morning. Premium looks expensive. Dude, bonds are still moving up. It's funny because this could be a bigger move, but again, I mean, you're still below the Bill Ackman level. That's the funniest part about all of this. And then yen's also coming up here too. Watch if that brings down the dollar a little bit. PayPal put. Sats Charter still going up. Again, bonds and SPY now. So I think you're above 4207. Watch 4209. If that doesn't act like resistance there, then 4217 will be the next spot. And then where else? Then 4231, then 4248. And then dollar came down on that yen move, but the dollar is still wicked. That is the only thing that's not pretty. So again, you still have the dollar's at 30.11. It was just at 30.15, even with us hitting this little high. Again, at one point, 4,200 was a low, but today it's considered a high. So again, this is still the pivot point, that 4,200. I mean, this is where all the action will go down, and it's right on Powell. Still another big wick on the SPY, though. You're holding up into the highs. Bonds have gotten 5 candles in a row, just going straight up. I want to say vertical, but it's melting up, and it's already past the pre-market high. So, it's not like it's I think vertical was right when the data came out. Like, that's a vertical move, but now you're just getting the melt minute by minute, and you're not giving it back up, which is something we haven't seen in a while. But then again, like I'm telling you, we still need to get below the peaks, and you could use some recent reference points to get an idea of where you're at, and compare it to the other moment you thought the bonds were rallying or not. Bond yields are going down. Yes, when you see pretty much if you see a bond ETF go up, that means bond yields are going down, and vice versa. If you watch a bond ETF go down, that means the bonds are going down. It's bearish. But when TLT up means yields are coming down. Well, the issuing didn't scare people today. That's the whole point. Even though they're raising a lot, it's still a fuck ton of money, and it still has negative effects. But generally speaking, we didn't get hit with more today. And everybody, we kind of got good news. The refunding was lower. It's on the shorter end. At the very least, it's kind of it's like finding out Powell is pausing to a degree, where you're still worried about what he'll do and he'll signal it weird. But for the most part, the market does like the fact that, the issuances aren't going higher and crazier like they were at the previous quarters. MTW on the high? Why does that sound so familiar? MTW Manitowoc? I don't think it's loading, but it's saying that 1279. 10 years at 484. Just got to stay below that. So that's the problem, is just that no matter what today, Powell still has the ability to move absolutely everything. So like we were talking about this whole month, we want to be below these peaks. So right now, this move, you're getting below it finally. But we need to actually stay there. That's why I think today, this is what I told you to watch yesterday, 2 days ago on the watch list. It's super simple. This chart goes down, markets will be safe. This chart goes up, markets are going to have a problem. And it's all relative to these recent peaks and figuring out really what this is going to culminate into. WMB, Navi, OI on the high, STX. Low ticker still got a couple of names, but lately it's been a lot of move to the upside here. The first, it was not even, it was like 3 minutes that just got you out of the zone, and then you popped up 8 points, hit a new high. Again, 4209, 4207 to 4209. Those were our two little levels, and then 4217. No news with Lulu. Maybe it's responding to some of the consumer earnings today. That'd be the only thing I could think of. Again, makeup, a lot of consumer-related paying stuff, from finances to products, just was not really hot today. DRVN. Where's AMD? AMD's still holding. Honestly, out of any of the big cap names like that, really but they always do this. I was showing you guys that yesterday. AMD will straight up be down on earnings, and then the next day just go vertical, because that's literally what has happened over here. So they look like Amazon. Just Amazon, I feel like, had a little bit more hype. Wrap on the low, WRAP. Yeah, AMD, bro, 99 to 103 here, 102.85. And that's just all within the first 30 minutes. So again, it's not even 7 o'clock here yet. And on that note, that means you got data in 5. So 5 minutes and 30 seconds, JOLTS jobs openings. So the number is expected to be 9.2 to 9.25. That's kind of the range you want to look at. 9.25 million job openings. If there's higher number, markets don't like. Lower number, market like. Markets go, wow, low number, buy the bond. Markets see high number, they go, oh my goodness, high number? No, 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 no. You know, so that's what you got to watch out. Yeah, EL, they're going through it, but, I mean, they are one of the bigger makeup names, and now, I mean, we've talked about getting them at a discount recently, but they've just been struggling. That's the only thing. So they're back at, 2014 prices? This would be like the ultimate value play for makeup, but the question is, do you try to, squeeze out a little bit more, or do you take it? But I don't know what the yield is at, but I do like Estee Lauder. Some people are worried it's a fallen angel and it's going to start dying, but, even their yield's at 2.5, but it definitely has a lot of potential. 4208 again. We got to get past 4209 to lead into 4217. Oil's even up by 2%. That's part of today too. Humana's on the high. Ulta strong like bull. They got clapped though off of Estee Lauder. So anything in the makeup space took a hit off of EL. Ironically enough. AMD, VLO's on the high, so you're actually getting more oil, and NVIDIA's coming down. So watch out here. That early morning ramp, even though SPY and Dow and NASDAQ are now green, I mean, the early morning ramp was just all those tech stocks. Cigna's on the high now. Again, that's another healthcare name. I just saw Humana too. Yeah, healthcare's waking up. Humana's down. They had earnings. Oh, he's Russell. It's been like that. I think the Russell had one of the worst months. The Russell dropped 7% on the month or something. It's insane. But again, it's sensitive to yields. It's sensitive to rates. Again, there's a lot of names on the Russell that are interest sensitive more so than not. Even a lot of banks. Russell's near the critical level. CLS 4206. My goodness, line. The line of life and death. The red line. 4206. That's first little red on the bonds there. They were chilling at the top. So watch if it comes back down to this level. See if it breaks or not. This was the pre-market high after refunding. If that could turn into a support level, that'll look great for bonds. And once again, the only problem is young dollar in the background. Paycom. I didn't check out the full earnings. I know they did bad, guided down. They got a lot of downgrades, but I don't think I would have even looked at them prior without the drop. So again, I don't, with adding some of these companies to the long term, if it's payment banking related, I just went with JP Morgan. And then if I'm really going to buy it, the only other one was, extreme value on MPW or IRM. CLS on the high. Tesla at the bottom, but still up. Again, Microsoft holding very good. Same with Amadon. AMD. I'm going to call it Amadon. It's holding well and equal rates recovering. That would be nice. A little bit. Equal rates down a quarter. SPY's up by 0.3. NASDAQ 0.38. And then data in 1 minute, Chad. Get ready. So again, JOLTS jobs openings. 9.2 to 9.25 is the expectation. You got 1 minute, and that should move the bonds and markets. So, again, we're right at VWAP in the high. That could change everything still for the day. Remember, high number is bad. Low number is good. 1 minute. 1 minute. Netflix rises 1.4. Oh, I forgot about that. Netflix was running on the news. Oh, they came down a little bit. There was a headline on it. Okay. 30 seconds. Bonds holding. Wait for it. Wait for it. Amazon. I was trying to say AMD, and I called it Amazon. That's why I think we could call it Amazon. Again, 9.2 to 9.25 is the number you're looking for. Last number was 9.6. And last number was an increase. The one before that was a decrease. 2, 1, boop. And we're off. I think it's already good. ISM numbers are coming out too. But where is it? Jolt's 9.5. I think the ISM is what got people excited. Jolts came in 9.5. Oh, they fucking revised last month down by 400,000. So again, they revised last month though. So last month was a huge they revised it down by like 1 million, I think, or what? It was 9.6 or 9.8. So they revised the job openings down last time. I think that's what's giving you the response. And then it was a slight miss. Again, job openings came in, I believe, 200,000 above. Damn, revision. So 9.53, estimate 9.25. And then ISM manufacturing came in weak. So I think that's another thing that the markets liked. But for the most part, the bonds are not getting killed off of it. But I think the revisions are helping you out. So even though Jolt's jobs openings missed, I think a small revision because remember, last Jolt's jobs openings, we went down because we were freaked out on how big it was because the last time it dropped. So now you revise that number down by a fucking million almost. I mean, that could go a long way. So slight, and then now it looks like month over month. You get it, right? Because now you look at the chart, month over month job openings only increased by 100,000. That's the way I'm kind of looking at it. Whereas again, it was 8 to shooting up. It shot up like almost 1 million. And then if it came down, but now it's like, month over month, it's not really that big of a change. And then a weaker ISM is what I think the market likes. I don't know if I would ride on it fully, but for the most part, the market's been liking the data. You're still going up. But again, the revisions are making it a little bit of a problem here. But a problem or blessing, depending on how you want to look at it. Because like I'm saying, I do think the market is taking that in stride. Yeah, 10-year flushed a little harder after that. This could be good, man. God willing. We'll see if the rates actually stay here. But you got a little bit extra of a flush, so maybe it stays below. But for the meantime, you need that to actually hold now, and then that's our thing up until Powell now. This revision thing again, like I told you in like 2008, the revisions were very common, but just unfortunately, a lot of our data here is just, I was bringing this up yesterday. You have to kind of come to the reality that a lot of the data is disconnected from the market. And that's sad for somebody who loves macro as I love it myself. But generally speaking, I mean, what I'm saying isn't that crazy because this is why we freaked out the last earnings season. Why? Because quarterly earnings were showing something a lot different than economic data. GDP was hitting records, and you have more companies missed than in the last 12 months, this last 3 months. So stuff like that where it's just like there is a real big disconnect between that data. So it's like the revisions, all of that. I mean, it's you get a market reaction, but you got to be mindful. So it's like maybe you could trade with it, but as far as like analyzing the economy, I don't know if we really know the amount of job openings. I could read it on the website too. You could go read through it and see, how many of it was government jobs because that could change a lot of things as well. So that's what I look into. But I think revisions saved us because I feel like without a large revision, I don't know if that number would have been received well. And then also same time, PMIs got weaker. So bonds still holding, but equities, again, they hit a little bit higher and they're kind of slowing down here. 42,112. We worked into chapter 11 as soon as next week. Mr. Newman. SRPT, Caterpillar, DGX on the high. Okay. Stocks up, bonds down. Where the dollar at? Dollar came down, still up a quarter and still up above 30. My fiance said L makeup is for women in their 50s. I've heard that too. I can't say I haven't, but it's, still a good company. Maybe they'll hire Justin Bieber or somebody. You know what I mean? I don't know. They'll rebrand it on TikTok. You could rebrand anything nowadays. Just ask Bud Light. So it's just stuff you never know. Maybe they come back. Maybe they do what Crocs did. Maybe they just start putting holes in the makeup bottles and they make you look really weird. And then everyone's like, oh,
so that's why I'm thinking
cool.
we get through the 80s.
You never know.
So
again, a lot of companies, that's the beauty of having a OG name like that. What do you drink in the morning? I wake up and drive, baby. That's it. That's the difference. I don't need anything. I just take... Bro, it's Powell Day. Did you not realize how shitty this last 3 months was? And then the market just, arrives perfectly at a pivot point the day of Jerome Powell. Oh, man, you should be hyped to wake. I was so hyped to wake up this morning. I woke up. I took my dump, everything. I was like, oh, man. Then they're refunding all of it.
The ES just cannot
there's
get
a lot.
back
You got to wake
up.
up and drive, man.
Up there, 34 ES. So
what we're dealing with today, there's a lot to get interested in.
Trouble.
112. 4204. All right, man, a little lower. Back down to VWAP. Like I said, bonds are holding up. Markets not so much. A little interesting little data reaction. Been a couple of minutes for now. IMF staff impact with Somalia on 36-month credit line. Mass lawsuit against Apple over iPhone batteries can go ahead. London tribunal rules. Is Apple getting sued? I don't know if that's going to affect them. Watch out. Watch Apple. Again, something about them getting sued or a court case being allowed.
Down there to the 40s again.
It's a few minutes old. So I think it was maybe right here then. Something about the battery. FMX on the high. SO, we're Square and PayPal. Bond's still going up, and SPY may just be doing its own little thing.
Back here as well.
As much as I want to see maybe if the dollar keeps going down, but the dollar is damn Frankenstein. And then gold too. Gold is doing that little baby climb there, another 0.25%. It's still mad early, Chad. We still got 2 hours still, 2.5 hours till Euro close. So it's again, it could be a weird one. We are moving a little bit better than the other day. So if you guys remember, just the last couple of days, we haven't been moving till Euro close. So, I mean, so far now, you've moved 12 points, bottom to top, a little bit baby of a gap up, but even then, and it's still 42.05. SRPT, that was the name, down 40. They're coming up. LMT, bonds, 30-year hitting a new high of the day, or close to it. I swear I just saw LMT on the high ticker. I don't know if it's loaded. I think LMT's at 455. Yeah. DGX. This one's kind of going. Quest Diagnostics, they're at the high right now. Looks like they're getting volume recently. I don't know if there's news, but that's into the high, 1.3%. Iraq's oil exports averaged 3 million barrels a day in October. 2-year, 10-year yield curve flattens further after U.S. data. Israel releases names of 4 more soldiers killed in Gaza.
I'm going to go to the bathroom real quick. Oh.
My YouTube is not on. Really? That's crazy then. I really need to go see a doctor. Because this whole morning, I swear I've been talking to YouTube. If not, I'll get it checked out or something. But either way, like the video if it's even a possibility. You know what I mean? I don't know if it's possible for you to like the video in this circumstance, but run that up if possible. Get you some Prozac. I wonder what would happen if I took Prozac.
What I miss?
Like, would it do the opposite, or would I just get even more like excited? I don't know. I used to make Prozac jokes when I was younger, when I first discovered what it was. But, you know, no, I haven't really gotten that far.
What if I escape?
LRN. I don't know if Chad was posting that earlier. Up 1.1. High ticker has a little bit more activity. Let me get you a breakdown now. Now that we've gone through the data.
Tanya thinks we go to 504. Okay.
So, Dow Jones right now, you have 14 names red, 16 green. So, Dow Jones practically 50-50. NASDAQ one, man, this day is going to be crazy. NASDAQ 100, 52 red, 49 in the green. And sure enough, S&P 500, 250 red, 240 green. Y'all get it? Not only are you at 4,200, not only is it Powell, you're at the pivot point. Right now, about like, what, an hour or so into this, you have everything 50-50. So literally half of the indexes on the Dow, NASDAQ, SPY, half of the names are green, half of the names are red. So you got 50-50, Habibi. 50-50 coming into it. Coming into all of it. 50-50, Habibi.
I'm quick.
With bonds up and then equities, again, barely up here. That's why I think the equal weight stuff's kind of weird, but you have the, what's it called? The tech stock's doing good.
I'm up $5,580. I could probably keep trading. I could walk away. Two ways to look at it.
Jerome Tato's pal. Yeah, we're going to see. Powell speaks at 2:30 p.m. Eastern. So if you could do me a favor, since I love answering your questions, if you could like the video, I'd appreciate it. Because in scrolling up to like the video,
right? Yeah,
you know, or in this case, down for me, you will see the like button and you will see Jerome Powell live at 2:30 p.m. Eastern, as well as the title of it being the FOMC live. So all I ask is one like on the video, you know, and that way it works out for both of us. It works out for both of us.
Right now, so I can't even go voting if I wanted to. Well, I could go wakeboarding, but it's actually kind of cold in Florida today. Maybe I'll fly up to New York City to have lunch with Tanya.
Statement at 2, Powell at 2:30. As always, never changes. That's the beautiful part. So it's same schedule. We talked about it yesterday. I hope you were here in the morning. If you heard, everybody thinks it's going to be a nothing burger. Which is kind of weird because
we can do more.
I think it's kind of surprising.
We can do more. Come on, guys.
With everything considered, but a lot of people are really just saying Powell.
Dollar pulling back.
He's going to defend optionality. He's going to defend having the ability to raise rates again, and then that's it.
How long does it take to put new motors on the boat?
I agree with that. However, I do believe that it is how he discusses long-term rates, tightening financial conditions. I do believe that will be the most important part. That's what I'm going to be listening for, and then I initially think Powell is going to be read as hawkish. So what, like literally right when the statement comes out, and then right when he talks, I think the market is going to take what he's saying as very hawkish because I think everybody's fell behind on what has happened this last quarter. So I think now we're focused on the markets going down, and we're like, wow, it's so bad. Maybe Powell is going to focus on this. It's like, no, I don't think Powell is going to open up with what we think he's going to open up with. I think Powell is going to open up with the hawkish pause type beat. You guys remember the hawkish pause? You guys remember that one time we had the Fed minutes after the hawkish pause and everybody was like, oh, shit. And they got kind of caught off guard. I think that's going to happen here today where you get a little bit of hawkish reaction initially. And I think it's going to be the same speech, but everyone's going to be like, oh, shit, he's really like down to raise rates. And they're going to, just because Powell's backdrop over the last 3 months was every single data set going up good as alongside oil going 60 to 90. So I do think it's going to be shocking at first, and then I think market's just going to digest it. And if he talks favorably about longer rates tightening up, the market's going to like that. But at the same time, I said it, there is a black swan scenario today that even though, and again, this is where you know I'm very different, you know, Bloomberg, CNBC, everywhere else right now, Financial Times, they're all saying it's going to be nothing. They are all saying it's going to be nothing. And although I can get behind that to a degree, I think initially hawkish, I do believe there is one black swan scenario that does exist for today.
I'm not here to fucking
would you guys like to know what it is? Or if you don't want me to scare you, that's fine. I don't want to, you know, but you know what I'm saying? I'll just hit that like button.
I love it.
And SPY's going up.
I fucking love this game.
No, it's not that he raises 25.
I wake up in the morning and the first thing
No.
Am I gonna win today? People think it's all about the money, but it's nothing to do with the money. You start making money and it's whatever.
No.
Winning
Not the yield curve. It's super simple. It's not even like, again, like I'm telling you,
really
long-term interest rates are the key to today's meeting. If however he discusses financial conditions in relation to longer term rates and when how much has happened, that is going to be of the utmost importance, in my opinion. So where does a black swan emerge with that being the most important?
If we get through that 80 area, I don't see how we don't go to the 600s now after this pullback.
I'll tell you.
And this refuel.
If balance sheet reduction speeding up would be bad, but simply if Powell just says, hey,
she wants it.
You know, we've seen long-term rates tighten.
But
if he says, you know, we actually want longer-term rates to affect financial conditions more, that's it. We're dead. We'll be at 3,900 by middle of November, maybe tomorrow, if that makes any sense. So do you get what I'm saying? That's a very hawkish pivot. If he goes on to discuss how long-term rates, if he supports it and wants to see them come up higher to tighten more, and he gets behind the rates hurting the market, then you're going to have a really big problem.
Are you serious?
Well, it's not about higher for longer. That's what I'm saying. He could say higher for longer. He could communicate that he's down to raise rates. He could do a lot of things. But if he green lights long rates tightening financial, literally tightening up financial conditions, then we're going to have a problem.
I want to see that dollar break that.
That would be a phrase that would be like a Jackson Hole phrase. That would be a phrase that you're going to look back at and be like, oh shit, if he did that. I don't think it's a possibility or a high probability, but like I'm saying, it's a two-way sword or a two-way street with financial conditions and long-term rates, because it could be really good if he communicates it positively, but at the same time, if he communicates that he wants more progress on long-term rates to tighten financial conditions, that will not be received well.
That information.
Some members have communicated it. For the most part, the last time, though, Powell communicated that he was pleased with what long-term rates were doing. He said he was pleased with it, and he used that as a reason to not raising rates. So do you see how it could be a good thing? So if Powell comes on today, and this is what I think he's going to do, I really do believe he's going to talk good about long-term rates tightening up, because he's going to say it tightened financial conditions, and that gives us room to pause, even though we'll still raise if we have to. That helps us remain, in a good position as we wait and see. But if he says, oh, no, something's wrong, and, actually we need more of that, then you got a problem.
We're going to fuck everybody at this 80 level today. She wants it. We bounced off that pivot point. We're back above that pivot point, and again, stuck there at the fucking
I'm live
80s.
on stupid YouTube. Let's go, baby.
At the goddamn 80s.
Have a good day,
again.
Robin.
How is that possible?
I'm gonna limit you to like 3 tinfoil rants a day.
What a
okay.
Joke.
Other than that, we good, baby. You in
real.
here? You in here, baby? Let's go.
Wednesdays.
VST 1.4. SPY still near the high.
Literally, the high on that candle, 80.
This late in the rate hike cycle in potential cuts, why do you think real estate haven't moved? Fuck the real estate stocks. Honestly, again, builders, they collapsed and rose before everybody else. That's just the nature of their business and how they could turn profits. But at the end of the day, real estate, just wait till job losses come up. And some people, again, I don't know if you guys are aware, but some people are under the impression that the next like 3 to 4 job losses, or even coming into next year, are going to deteriorate rapidly. So if that does happen, then real estate will start to go down. But if not, it's the jobs. Just super simple. I can't stress it enough. The job. I mean, jobs has kept so many industries and assets stable, whether you realize it or not.
Nobody knew it. What if he was? Nobody knew that Nutty Bar was a fucking billionaire. There it goes through. Oh, you got to go. You want this thing straight up here, boys. You do not want it to stop again at the fucking 80s. It's going. Let's go right through here. Again, go. Are you
Tesla on the low, Novo. SPY's trying to work its way up still.
These fucking
I'll
shorts.
take it.
Baby Jesus. Denied. Once again.
J&J on the high. Guild. That's more healthcare names.
Wednesdays.
Cameron
Market
Byers.
stuck at a level all day long. If it wasn't FOMC day, I think we would have already gone through that level. But
Watch
just
June
playing
chart.
games
Fed
right
day.
now, people.
I'm down to put it up. You know why? Because I brought up June yesterday on the what's it called, on the watch list, even here. Because remember, it was like May of June of 2022. That's when you started discussing financial conditions. You guys remember that? Ain't nobody brought up FCI up until May or June of 2022. Why? Because that's when we started to, like, again, the tightening, and that was the first thing that spooked everybody out.
Market's rigged. Market's rigged. I give up. I don't want to play this game anymore. I'm on the wrong side. I'm on the wrong side of the rigging.
Thoughts on soft landing? He's going to say what he says every time. He'll be like, you know, he's going to say it's not the base case. He says it looked like odds were good. They kind of diminished, but he's going to say that's what they're trying for. He's going to say that he sees possibilities, but it's not necessarily the base case. But then he's also going to say that recession isn't the base case. So every single thing, he has a balancing act to it. You get what I'm saying? So even if he supports soft landing, he also, or if he doesn't support soft landing, he's going to support that recession isn't base case. He picks one or the other. So one good, one bad. That's where I think a lot of people think Powell's going to do nothing today. And I agree with that because he is going to, you know what I'm saying? Like, he is going to, he's going to play both sides. The real thing, like I'm saying, I think people will be shocked initially. But then we're going to go looking for something new. And the real newest development has been the war in Israel, as well as what's going on with long-term interest rates. Everything else is old, and everything that is old is that oil and inflation was coming back up. So that's our difficulty coming into here, and that's where I think we might get caught off guard. But after that, I don't think it's gonna move too crazy until he provides new info or he shows his hand by discussing financial conditions relative to longer term rates. So that's simple, complex, but not really. And it's like we don't have to forecast too much. It's not like I'm saying this is going to happen, that's going to happen, but it's more so, you know, we got a range of what could possibly occur. And then it's going to be about responding. But, you know, we'll know it when we see it. If it's really bad, you'll know. If it's going to be good, I do think you're going to know as well, too. And then that way, hopefully we could get November started off a little smoother. Holy Meta 305. Even Netflix too. They're going up to 418. SPY a new high now, 0.6. You're moving up more than yesterday. So remember, like yesterday we were making that move, and everyone's like, "Wow, it feels so squeezy." But remember, you were up like 0.6 here. So it's only been like 30 minutes, maybe a little longer, but you're back to 42.20 now. You broke the 42.17. That was the other level I told you guys about. So 42.25. And then 42.31, then 42.48.
Look at this thing. Boys and girls, boys and girls, boys and girls, boys and girls, boys and girls. Tanya, I hate to tell you so, but I told you so. Don't go chasing waterfalls. Listen to the rhythm in the place that you used to. I don't know why anybody
and at the
wants
high
to
too.
be
I'm putting out a stream
against
alert.
me.
Again, at the level, EU regulators bans Meta's use of personal data for personal behavioral advertising. So again, this is moving fast now. You're getting a little squeezy. My bottom is at spot 440 to 3995. Good luck, baby. Amen. Netflix will skip some ads if you binge watch. Ooh.
She got a new mentor.
I've never heard of that. So it's an ad thing that's designed to both maximize ads but then keep people watching.
One by one.
I'll take it for now. Market is up 3.2% in 3 days. Well, yeah, because we dropped that much in 3 days. You know what I'm saying? Like we literally did that down in 3 days. So now 3 days down, 3 days up. You're right at the same spot. That's the craziousness of all. We did that exact move on the way down in 3 days.
What a move. And obviously, I took profit early for you.
It is getting a little squeezy here, but don't forget Powell. So far, we brushed off every data, even if it was borderline. Again, we've just been running through it now, and then we're setting up here into the final Powell. So 4224, you are feeling a little bit better. Like you broke every level. So compared to yesterday, most other levels we would be like very slow. You ripped through 3 levels today. Now you're at 4225. So this is one more level here. We get past here, then 4232, 4233, then 4247, and then you could start really working your way up, as high as 4300 if all of this really does squeeze. But I'd watch those levels as support and resistance. All the levels today, even the ones I just told you, and then the ones from yesterday on the way down. It's getting interesting, yeah. I mean, it's sending us up into Jerome no matter what. We're barely above the 4,200, but, this pivot line, I mean, this is where all the action should happen. So we'll see, and just don't forget, you have the biggest event today, and then you even have Apple and non-farms, in the 1-2 punch after that.
I like that 50 area sitting up there. Look at that.
Mirror, mirror on Wall Street. Tell me which earnings did not beat. I'll raise the rates in Powell's who we hate, but no matter what, I'll trade the expiration date. I don't know. I think I remixed it too much. I don't know what melody we were going off of. We were down a little bit pre-markets because there's a lot of shitty earnings in the morning. I'm telling you, if you were here in the morning when I was reading that list, bro, it was like down 9% earnings, 9% earnings, 10% earnings, 19% earnings, 8% down on earnings. There was a lot of there's at least 3 big names, Estee Lauder, Paycom, and one more, but both of those names lost, literally 30 to 18%. Off of one report.
Right now, holding up at the lows. Like I said, that.
And then there was a lot of sympathies related to it. It was just hideous.
This is what we were looking for.
Treasury yields declined 15 basis points in one day. That's amazing.
Right.
So that's big. I don't know if are we past? Yeah, you're at Bill Ackman high almost. So that will be the real decider here following Powell. So remember, Bill Ackman covers. We've rallied. Woo! Then we sell it all out. I know. Oh my God. Then you dump for 3 days, but now you're getting back up. And then just don't forget, though, the last time you had a real sizable rally, don't even show up on the chart anymore. Last sizable rally you had, bro, you vomited that up so quick. It was hideous.
Gotta love when you see those setups like that.
So we'll see. But SPY's holding up decent today. Again, you even got past a lot of different levels.
Kind of lining up, and you see those things, the dominoes falling. That's when you can be confident in the move.
Realistically, we're months away from the bond play, assuming no financial black swan or emergency cuts. Yes. But that's why, you have to see the... not the fallacy, but the weakness of it. That's why Powell is effectively confusing everybody. The markets are effectively punching every mother effer in the face right now, making you really, really, doubt which way you want to go. Again, they were even talking about this on Bloomberg. They were saying, literally, there's a fund manager this morning just saying, hey, these values are cheap, but looking at the sentiment, how everybody is just getting crushed.
Order filled.
Because right when you think it's cheap and you buy it and it gets even cheaper, it's messing with a lot of people. But when it's all said and done, though, I do think that, the paradox is you don't know when the cut will happen. You don't know where the economy is abruptly going to slow down. You don't know if China is going to have that. But yes, you're totally right. That's why I tell people to be careful about it. And we got to wait till it's right in front of us, because when it's all said and done, it should be months. You know, we could go another year if nothing negative materializes. The economy does not slow down because of the high interest rates. There is no black swan. There's nothing. You could go another year of the economy being better than expected, and then inflation, you know, popping up here and there, and then, you know, we do exactly what we did this year, next year. That's what we did from last year, this year, if you really think about it, which is kind of wild.
Just spot on. We had a pivot point on the NASDAQ, obviously, as well. So anyone who says these pivot points don't fucking work.
Breaking, Jordan is recalling its ambassador to Israel. It's directing the Israel Ministry of Foreign Affairs not to return its ambassador who left Jordan.
Pivot point.
NASDAQ climbs 1% now.
Point for now, so.
That was a little earlier on those other candles. Came back down.
I like to make money. You know, that's what it comes down to. I like to make money.
Schumer House plan to cut IRS as part of Israel aid is dead. Schumer says White House GOP continues to waste time on aid bills.
We making the money. We making the money, people.
Schumer's not the dude who died, right? Who was the other guy? Is that McConnell? I don't know how McConnell still has his job. All these old people. Yeah, he's Nancy's friend.
All right, it's got to go. If it's going to go to 50s, it's got to break it right here. You don't want this thing just getting stuck again at the 40s.
Crude inventory, 773. Estimate was 1.8. Watch oil. Again, oil was already up. U.S. Cushing inventories, actual 272 versus 213,000 previous.
This thing long term today, that's fine. Go for it, whatever. But
and then gasoline inventories rise 65,000. Estimate was draw of 133,000.
Level again. So it's got to just keep momentum going and squeezing these shorts.
I mean, even Netflix too, if that could keep going. Microsoft as well. XLE starting to run on that, so watch energy. Yeah, Meta's up 2 now. Remember, Meta had I don't want to say the best earnings, but for a name that dropped like 7%, Meta had good earnings. Remember that. So remember Meta, they had their earnings and they had that little dump, but they're only up because of the it looks like they've moved a lot, but this was the day before their earnings, I think. They just had that weird little fiasco with all of it. The range breaking out. I mean, we'll see. Hopefully. I know Netflix, I'm waiting for that thing to break out, because if that could make its way up, we will be good. We're at a nice 50-50 now on those shares. CRSSP, they have good news. Oh, CRISPR? Yeah, it was an AdCom. They didn't do a vote, but it was good news from there. So Tesla's at the low, actually. So again, a couple of those big techs went up. A couple are going down now. High ticker is still gassing. AMD through the high. Unfortunately, SPX is getting a red off of that. And then bonds started coming down after hitting another high. And business once again. Amo. Oh my gosh.
Respecting the low of this
Every day, bro.
Oh no.
I love you. God bless you, man. You know, I don't like
that trap candle here.
Shook it on.
Got this fair value gap on the 1 minute chart. 16s.
My goodness. Legend. It's Ummu business, Habibi. Ummus. I know, man. The amount of love he shows. For real, man. God bless you. That's what I'm talking about. Thank you. Thank you, my friend. Bitcoin stocks won't rip until the rate cuts. I mean, it's weird, bro. First, I'll start off with this before I sidetrack. Crypto is one of the best assets in the world this year. It's unreal, honestly. Even the fact that crypto, it's wicked to me how much money is sloshing around if Bitcoin's at 35,000. But it's not dude, it's so weird. You're not even getting the same unrestrained hype and all of that. But I also think things are weird. Again, I've been saying that for a while. And let me show you. This is what I mean. This is why we don't know the truth.
I don't want to chase it.
We don't know the truth. And unfortunately,
I mean, we're
this
definitely at a
highlights
point
my
now
problem
where
with
it's starting to
crypto.
get
You
dangerous
can't, unfortunately.
to
I'm going to show you
initiate
right
more
now. Are you ready?
longs. I mean, even the question is, like,
Are you
what's
ready?
the upside potential there? So,
I don't know if you want to see this.
I mean, look at the 3-minute chart. There's just, you know,
Who do you think that is?
I don't know.
U.S. East Coast diesel stocks fall to the lowest since October 2022. Yikes. Do you? No. Who do you think it is? Shut up. Don't. No. Who do you think this is?
HFX. Didn't I tell you 1460?
I saw it. I thought it was Tyler
For
Durden.
life.
Yes, exactly.
Congratulations.
Thank you. Somebody. Dude, I thought this was
Thank you
fucking
for
Brad
watching.
Pitt.
I probably shouldn't ban the people that watch my live stream, but whatever.
I'm not. I'm letting this process for us. This is what I'm telling you. It's all.
I literally warned him this morning. I said, "Hey,
I don't know if
tell
you
us
feel
your
me on
levels,
this,
but
Chad.
do not remind me in an hour from now. I don't want to hear it.
This guy
It's fine. Everybody can fucking throw
The
levels
court
out.
sketch
Hey, numbers,
is saying this is Sam Bankman-Fried.
It's silly. You're just wasting your breath.
This guy
wasting your breath.
is the same as this guy. Let me show you one more time. Market's still at a high, but this guy. No, hold on. Don't blink. Just stay focused. This guy with the cucumber is this guy. I need to see the sketch for Caroline to really see how far they're taking this. Tesla's flushing. Oh, whoa. Tesla, that's all that's printing on the low ticker. 200 break. Tesla's going down. Again, SPY's still holding up. We're watching a little bit of moves there, but literally they're going down. Apparently, it's not a legit sketch according to community
I'm all
notes.
for people, sharing
Thank
ideas
God.
and all that, but like
It
we
better
don't
not
need.
be.
We don't
It
need
better not
to
be.
fucking.
Like I'm saying, if that
have you
was
spam
the
the
real
chat an hour
sketch,
later and tell
I would.
everybody,
I'm not
"I told you
touching
so.
crypto
I
with a
told you
20-foot
so.
pole.
I told you so." Like, hey,
If that's how the
congrats.
court reporters and that's what I'm saying. I'm like,
Made
no
money,
way.
congrats. Like, that's
This
the whole
stuff's
point.
getting way too deep, bro.
Like, this ain't a contest.
It's getting way too deep.
It's not like a who's
It's
right,
getting
who's
way
wrong.
too
It's a
deep. That's
contest
my
of
thought.
who's
Like I'm
money
saying,
in
if
the
that
account
is
and
the
dick.
real photo, and that's how
You
they
make money,
choose
the
to
more you make
represent him,
money.
everything I'm
cares?
saying is still true. And I'm like, this is too
Congratulations.
sketchy.
I'm happy
That's
for you.
all. It's just a sign of the times. I'm like, that's way too sketchy for me. If they're really trying to like get away with that, like that's how he looked. No, it's not, bro. It's okay.
Patrick, I want to have a trading competition. I'm like, the competition is literally at the end of the week.
No news on Tesla
It's
again.
money. It's-
You got that little
I don't
flush
need to
there. A
fucking
lot of people talking
have a
about
contest
scooping
with
it up
some
at
other idiot on the
200.
internet. I just need to fucking make money. That's how you win. It's like what am I trying to win here? A trophy, or am I trying to make money? So, a little silly, I'd say. 14,650, baby. She's still sitting there on the book map. This thing is holding up there. Like I said, kind of that 30 area really needed to hold. Most of those candles.
Do they
closing
delay
above
my
30s.
deposit?
We'll
Not
go
on
back to the
all of
50s
them,
here.
but I still, as I'm going to get access, I think they told me 10 business days now
Dollar,
to the
go,
big
go,
account,
go.
unfortunately. Just being a numbnuts. But then also, too, you can't even log into TD Schwab until the 4th, unfortunately. Earnings preview, yeah, we'll do that later in the day. Probably after Powell or maybe ahead of Powell. We'll do the PayPal earnings. SPY's hitting another high. Am I buying Bill with the money? Maybe, but there's a couple of names I want. And again, I mean, it just depends on the market. But I do want names because, if we do get any relief on some of those defensives, I mean, I still believe in it. I mean, there's a lot of names that like we were talking about earlier, there was names that were very, very valuable, or they have a lot of value, and you think they're cheap, and then they keep going lower. And then it's just like, then it starts to come back up. So it's just, I'm waiting for the time they go up, but I do believe in the value of some of these blue chip names. Will they be the best plays for the next 12 months? Maybe not, but in the next 5 years, I don't think I'm going to get mad scooping up some of
The
these.
fact that I'm green right now, I'm totally fine with that.
And SPY's going up. You emailed me some sketches. Oh my gosh.
Derek Scott, do you get paid daily?
Yeah, that's more like it. That's last one. That Caroline sketch kind of wild, bro.
If I don't know.
What the hell?
I'll fly out to Miami one day and we'll
So
take
this
you
is
out
from
to
Wall
dinner.
Street
How about
Bets.
that? Fly
This
to
is
Miami,
wild.
take you fishing. You live in America?
You're saying
Derek?
peak 9.1 rates. That's Sam Bankman. That's
in Indonesia. Oh, well,
that's Caroline. September 3.7.
Curtis 6
And then
days
Fed
green.
2% target, man. And then look at that. Even Caroline looked good right there, bro.
What do you
Hey,
think?
bro, that went from that's crazy actually. Come on, I didn't even think you can make Caroline look like that.
Look where we're
I'm
at
very
right now.
impressed with AI.
This pullback earlier, fucking money, right? Like, this is the money setup. Especially, like, think about it like this, right? We had that high there, the 80s. We couldn't get through it. We couldn't get through it there.
AI,
we
man.
pulled back.
Yeah, that's wild.
We finally start to curl back up. It's like, this is a great setup. You got fucking 2 pullbacks into this trend line. Then we get the breakthrough there. It's like, why would I get long?
Tesla's still on the low. No news. Match
You know,
even
at
on the
that
low
point,
as well.
When
Again,
we
they had
a beautiful
earnings.
Move there. We had the move at open. Is it needed? Do I really need to add more risk? You know, that's the way I
Like,
look
do
at
it died? Yeah, but like, I'm not really too worried on that one.
Like, I didn't even
By
really
do dies until it
capitalize.
doesn't.
I mean, I took fucking.
So again, the
Took
violence
fucking
on the rip
95,
will
they
be
went
there,
all the way to
but we
40,
just got
so
clapped on
I
the
said before, like, if
again
I'm
the
not
whole China
confident
play.
in this
But
move
it can
to
die
buy,
more. That the
go to
big
the
worry
fucking
is if it
moon,
really
well,
goes
then I'm
down.
sure as hell
Unfortunately,
not
but
gonna be buying
I'm still waiting. Again,
up
it's
here,
either we
no
average
pullback.
above
I mean, even
100
though
or
we've held
below.
there,
So I'm waiting until we at least
I don't
get
really know
something
what's
moving in our favor.
the upside
Right
from
now,
here?
the
How high
momentum's
can we
going
go
way
from here?
against us.
You know,
TGTX up 28 on earnings.
how high?
SPY
can we
still
go
working
for
its way up.
here. Like, where's the next level at?
Netflix 420.
Up
Yeah,
to the 80s.
so that's good. We're down now like what, $3?
No.
So you're down less than 1% on that Netflix position. Fucking finally.
I mean, it's definitely holding.
Why is
like
the
I said,
court
that-
artist
as long as that
idealizing
30
SPF? I think
kinda
it's fake.
holds, it
Again,
should
that was
go,
just a
but
fake one, but I'm saying if that's real, then
just
I'm
going
not buying
sideways.
crypto until it crashes. Because clearly there's something going on in that
the problem
weird
is, if we
world
sell
of
down
Sam
here, it's gonna
Bankman
be a fucking
and the
just
government, and they won't tell us
waterfall. Like,
who gave
what's my
the
risk on this
loans.
trade? I'm gonna risk off this low here. The problem
30 on
if
UUP, the
this
new
thing
bottom.
fucking
Damn,
comes through here,
you
it's gonna
crazy, man. You
shoot
crazy.
straight down.
30 is a very wild point. I mean,
So-
maybe it is the new bottom, but I don't know if that would really be the best thing for markets.
Yeah.
We are going to find out about rate hikes today.
I don't know.
I mean, quite frankly,
Sometimes
you don't
I
need
gotta
to,
talk myself out
like,
of
if you're
taking
worried
more
about what's
trades.
going to happen with rates, you already know. It's
And remember,
priced in.
you know, when I look at my
He is going to
P&L
pause. He's
over
not going to raise
the
rates.
last
Virtual
month, the last
certainty at this
whatever,
point. So,
those
and that's
days
kind of
where I
ironic
tried to hit
considering
home run
last Fed
trades,
meeting we
they
were
normally
freaking
don't
out
work.
about November,
Like, that
but
day that I had a
for the most part, he's going to
$20,000
pause
day, when I
rates
made
today.
$20,000,
The real question
I
is,
didn't
what does
have
he say
one
during
home
his
run
press
trade that
conference?
day.
What does he feel
was
about
just taking
longer
it
term,
was just
you know,
taking
rates
good
and how they
setups
affect
over
financial conditions,
and over,
and that
breakout
will be
setups
the meat of the
over,
bone
you know,
rather than
$2,000,
you know, just
$1,000.
raising rates or not. We've
You know,
kind of
it's-
moved past that.
It's that simple. So I think that right there really gives me the confidence to believe that at the
And
end
then
of the day, I
SPY,
don't need
bonds
home run
holding.
trades.
I mean, it's nice
just
for now.
need
The only
setups. I need
problem
good setups,
is the
good
dollar like
setups,
yesterday. But again,
$2,000,
yesterday we closed up green
$3,000
and now
per
we're still
trade.
green, even though the dollar was up. So 4225, that was the other level I've been giving you here.
know?
So again, next level is going to be the top end 4233. We get above that, then we're going to start
Derek
looking at
Scott,
4246.
Florida.
Otherwise, you still got all these,
We
again,
gotta get Tanya,
4217,
we gotta get all the moderators in
4220,
Florida.
or 4209, all that on the way
Moderator
down, and then 4200.
Patrick Whelan,
But as of
moderator
now,
Christmas
this little
party.
melt
It was
has been
gonna be
working. SPY
loud.
up
You
three
think the
quarters,
live stream
Dow
was
half a
loud? Just
percent,
imagine what's gonna
NASDAQ
happen at the
0.9,
Christmas
Russell
party.
0.18.
What's just imagine what's
I
gonna
don't
happen
understand
at
why
the
he
Christmas
wouldn't
party.
raise rates. Economy is too hot. It's because
What's my
long-term rates are
sizing right
finally
now,
going
Patrick,
up.
after the
So,
payout? I'm
and then
still
there's,
trading
remember,
big
there's
size,
long
10
and variable
contracts, 15
lags.
contracts.
So
I
he's
traded
trying to
15
play the wait and
contracts at the
see,
open.
but if at the same time
I mean,
you don't want to over-tighten and then cause a problem, because you
I'm
see
not
it
gonna-
right
I'm
when
not gonna
long-term
size
rates went
down.
up, financial
Trading big
conditions
size
tighten.
doesn't
So if he
mean to where
raises
I'm at,
again
so no point
and
in
it
changing
tightens
the,
that fast and there's still a delay,
you know, changing
Powell could run the
the
risk of
process
just
here.
totally clapping you. And at least that, even if
How many
it
trades
didn't
is it
clap it,
making
that would
on
bring in
average
some
per
fear.
day?
So
Honestly, it really just
for the
depends on
most
the
part,
market.
you know, that wait and seeing, this is nice.
On
You
a
know,
day
it's
like
been
today,
18
I've only
months,
taken 2 trades.
16 months of rate hikes. So, you know, this is
So-
finally our back-to-back, no more
We
rate
really
hikes.
only had,
And I
you know,
said this
2
a
good
while ago.
setups
If you guys remember the
far.
watch list, remember I told you, once he actually
Can this go
pauses
higher?
that will be the evidence
Sure.
of the pause. And this
Is it
is
a
what
good
you're getting.
probability of
Not
going
only did
higher?
they not raise last time, this is now going to be two
Not
times
what
in
I
a
like to
row
see.
on history. When you look at the chart, nothing
One thing
happened.
that I've learned
No, I sold
is
out of RTX literally
greedier that
2
you can
days
be with
too
your
early.
entries,
I got
the
like
better,
$1,300,
right?
but I
'Cause it just
left.
gives you a lot more
I think I left another
confidence.
400
If you're
to 600
greedy
on the
to
table.
move, like this move here, pulling back into this 30 level.
Powell at 2
you see how
o'clock
we're
Eastern,
curved
and then the
back up,
press
we're bouncing,
conference
we're holding
at
this breakout
2:30.
level
So the
from earlier.
FOMC at 2,
You know,
and then
why
2:30
did
for
I,
the
people
Powell
might say, like,
speech.
Patrick, why did you not want to get long right here, you know, on this? Because, like, well, you can see it just wasn't a clean enough pullback there, you know? Also, go to the bigger time frames. Bigger time frames will always give you a better view of kind of what you're looking at here. If you look at the 5-minute chart, it's not really a good breakout setup right here. You had this big red candle, no real wicks, no traps down here. We didn't really test anything other than like right here. We closed at the lows. This candle just kind of tricky. There she goes. She wants 50s.
If they raise, you're going to die today because it would be an unexpected event. That's the paradox. So right now, it's a virtual certainty Powell should not raise. If he does it today, you're going to be at 3,900 real quick. But that's a good thing you don't have to worry about it. That should not happen. And that's why most people are thinking this is going to be a non-event. I think it'll be a little shocking in the beginning, but other than that, I mean, you shouldn't get anything of that nature.
So, yeah.
So
That's the thing, like, one thing I've
4233
really-
again,
if I can teach
4233,
one lesson, if you guys don't ever
4232.
listen to me about
That's the next
anything,
level. You're working your way
can't
up.
see the
This
setup
is
on
way
the
more
1-minute chart,
squeezy
start
than
going to the
yesterday.
bigger
Again,
time frames.
we haven't even had
Get
Euro
confirmation,
close,
like,
bro.
okay,
That's the
look.
crazy part.
Like,
You're
I see
just
a little bit of
rocketing
setup
up
on the
again
1-minute
every
chart.
30
I'm like,
minutes,
okay,
every
cool.
hour at a time.
But then I'm
You
like,
are
well, let me
literally
look
hitting
at
a
the
new
bigger
high.
time
So
frames. I look at
this
the
is
2-minute,
way,
I'm like,
way
okay,
better
it's
than the
kinda
last
not
couple
too
of days.
good.
This is your
I look
first
at the 3-minute, I'm like, oh,
semblance of a
okay.
squeeze, and the only part that sucks
there,
is
you
that
know,
it's
like, the
happening on
bigger
a
the
day
time
where
frame, the
Jerome
setup, the
Powell
better.
can literally upend
That's all.
everything with one statement. Ironically
Zoom
enough,
out.
I think it's just
Chop
getting. I mean,
candle.
it's going through every
You know,
level. I don't know
wicks.
how does
If I'm
the
looking for a breakout setup,
downtrend look. I don't know if you
wicks
drew a line here.
on the bottom of the candles.
I don't know if that breaks it out of any trend line. I haven't looked this whole time down,
You know
so
what I mean? Does that
if
make
anything,
sense?
just been riding it out.
If you guys are still watching, hopefully that gives you guys a little idea. Same idea here. Look, wick. We want wicks. Showing us that the buyers are stepping in there, pushing the price
85
back up.
bonds are slowing down though. So
You don't
again,
need to buy
stocks are
fucking
moving
red
more.
candles.
There's
Like, look at
Netflix
this
on the
candle. Like, you
highs.
need to buy
Dollar,
the bottom. No.
dollar's negative now. No
Don't try to
shit.
buy the breakout on that
Hey, hold on. That's actually, I was telling you the dollar's the problem
And also,
child,
look at
but
this. Like, this
this
is
is
a good
actually
setup as
good.
well.
You may top out,
A good
even though it started by
example,
hitting
right?
a
Yeah,
new
this big
high.
kind of push up.
I mean, if
These
we could
candles
start
did
moving a
not
little
give
lower
back
on the dollar,
this
if you
whole
give up
candle. It kinda
yesterday's
moved,
gains
like,
too,
right into the
if
middle
you
of that
could
candle.
close below,
That's
if
a
you could
very
get to
bullish thing. It's
29.81,
telling
I'll
us
love
that
it. But
buyers
if you
are
could
willing
start
to step in
creeping
here.
into
These
yesterday's
three-
advance on the
these two red
dollar,
candles are small
dollar's
red
starting to look a
candles.
little better
Not
here.
a lot
Again,
of
it's gone
range.
straight down.
Consolidation's
Dollar's up by
happening.
0.3 at
Get
one
ready for
point.
that next move. This candle right here, we just dropped fucking what? 30, 40 points, close at the lows. Buyers did not step in there. It's all
LT
about
purchased
thinking.
earlier.
Think
I
about,
have to
like,
wait,
where are
unfortunately.
the buyers
So I
buying,
don't
where are
really
the
have a
sellers
choice.
selling?
Again, even my Schwab account, it doesn't
now we're looking at the
get
5-minute
active
chart.
until the 4th. And then my other E-Trade that I moved the other
we got a
account
high
to,
now.
I'm still waiting on that. So I won't have access until after.
High
So there will
now
be
up
at
there
least
at
a
the
week delay, I think, on any
649
long-term
50s.
purchases. And then by then, I mean, if everything already rips, I'll just probably put it in the bill. But if things are still cheap that I like, I'm down to buy. The correlation between the dollar and the stock market.
Look at that.
I mean,
Wow.
I could give you the simple one.
magic?
If you try to look into it, it's going to confuse the shit out of you because it's much more complex than that. But at surface level, dollar cheaper, prices
Is
up.
it
Dollar
magic?
strong, prices down.
Look at that.
A
We
good
ran
example is
right up into
Japan.
that 50
Every time
level.
Japan's currency weakens, their
Denied,
stock
denied,
market rips.
straight back
Why?
down now.
Because although the yen is weakening
This
and
is why I
hurting
did
them,
not wanna get
the
long
Japanese are
off
getting
there.
rich off of investments because now it costs more to get the same stock. So in a weird, that's the simplest way you could look at it, but it is more complex than that, and there's way more factors, and in different times and what we're going through now, you know, the relationship between the dollar and equities is quite finicky, but in a broad sense that is prone to error. Higher dollar, cheaper prices, lower dollar, higher prices, lower dollar, higher stocks, higher dollar, lower stocks.
Beautiful move back down. So
I don't own any treasury yield stocks. No, I have a 30-year bond future, but it's not
Nothing
like
wrong.
I'm in love with it. If anything, I'm
Today
holding
is
the yen like it's a damn
historically,
30-year
it's
bond.
FOMC day. Even though this, like, honestly, pretty good FOMC
Yeah, TLT
morning,
up.
to be
TLT up on a
honest.
lot
Like,
of
pretty
things,
good
from
price
refunding
action
to even the
for
data.
FOMC
Found a way
day.
to not disappoint. AMD is just
The closer
killing
we
it,
get to
man.
FOMC,
What
the
a
more fuckery
post-earnings
that's gonna
move. It did
happen.
exactly what it did last
Nothing
time.
wrong with walking away, taking your profit.
You never got any messages. You'll be
I
good.
know,
They'll
I
tell
said
you
the
when
other
you
day,
need to
like,
switch. You
know,
could
to
stay
go hard
on.
when you're up, green on the day.
But if they tell you
the
you
great
need to
thing is we know
switch
we
and you
got
don't
Thursday, we got
switch, then they
Friday.
close your
On the
account.
week right now, I'm up like 15 grand on the week. I took a $16,000 payout yesterday. Why mess with perfection? You know, if it's working, don't fuck with it. People always ask me, like, Patrick, you know, I make money in the morning, but I lose money in the afternoon. I'm like, well, why the fuck are you trading in the afternoon then? Right? Like, that's everybody always like, oh, Patrick,
Nuances
man, I
in
made
dollar
money
is
this
the
morning,
next thing to
but then I
learn.
gave it
Yeah.
all back in the afternoon.
Definitely, nuance is a great
Imagine-
word. There's just a lot of
Imagine
little
if
things
you just stopped
that factor
trading in the
into
afternoon.
all of it.
How much money would you make? Do it. Just try it. If you fucking lose money in the afternoon, then stop fucking trading in the afternoon, people. You know? It's not rocket science.
What if your account has money in stocks in that? What's
not
going to
fucking
happen?
rocket
They close
science.
it. They sell it out. That's why, like,
If you
I was
make
trying
more
to
in
do
the
it.
afternoon,
Now, I
trade the
mean,
afternoon.
they've moved my
Everybody's
one
different.
account. It's still in the
I know
process,
people
but
that
they
lose
just
money
move
in
your
the
whole
open,
thing.
and they
So
make
if you
money in
don't
the
move it, they
afternoon.
close it.
Whatever works for
So
you
they will
works
sell
for
out
you.
your options. They will sell out your stock.
serious
You'll
questions.
have to
15
take the
contracts,
taxable
5
gain or
contracts, and
loss,
3
whatever it
accounts?
is,
No.
and then they
15
would mail you a
contracts in
check
one
of the
account.
amount.
I'm trading all 3 accounts separately now. I'm not doing copy trading because, like I said before, the problem is, like, let's say I buy a breakout at open in one of the accounts. Let's say I buy a breakout at open and all 3 accounts get stopped out for the day. Well, then I'm done trading. So what I'm doing right now is I'm trading 15 contracts in my my big account, trading a little bit smaller in the other accounts, and just giving myself.
All right, coming down here finally, even the bonds. That was a nice little amount of squeezing there. It's 750. We still got an hour and a half.
In all 3 accounts, I'd rather basically be wrong in one account and then
They
have
told
2
me it
more
could be a
accounts where
year
I can
till you
make
get
money back.
asked. Oh wow.
I might
No
have
way.
$3,000 loss
To
in
switch?
one of the accounts, but I can make $3,000, $4,000 back in the other accounts. So that's kind
My
of
internet is good. It
that's
should
what
be.
I've been doing lately.
We had
That's my
one
thought
issue today,
process.
but I have
know in
it.
the past, I talked about trading.
got another, like,
5
hardwired
contracts across
connection,
all 3 accounts. But
and
the
then
problem
I
is, like
made
said,
sure all my
if the
lines were
first trade of the
upgraded.
day is a
So,
red trade,
and then now
it's
I have
almost
like I
guaranteed
have
that I'm probably
2
gonna have a
hard
red day.
wires
It sounds funny,
on
but, like,
2 separate
if you look
networks.
at
So
my data,
usually, if
when I
one
look
goes
at
down,
back
it
at
should
all my trading
immediately
data,
go to the
if
next
my
one.
first trade
That
of
was
the
my
day is
problem
red,
the other day,
it's like
where both of my
70-80%
networks got
chance that I'm gonna have a
clapped
red
out,
day.
and then one of them
So,
wasn't hardwired in. So I had to get that on there.
I think it's you really.
But we'll
At the end
see.
of the day, you really
I don't know. I may
gotta
have to. I don't know if I have
look
to
at
change anything
your
else,
history as a
but
trader and
I have
know,
2
like, and find your
gigabytes.
weaknesses,
Again, gigabyte
then
up, gigabyte down on
try
both of
to
them.
avoid little things. I know Tanya does that. You know, so that's you gotta. Trading is not a battle of fucking knowing when to buy and sell. It's the battle of knowing when you need to control yourself, control your emotions. So, 100%. Like I said, if I
Sounds
have
like both connections were on the same incoming fiber line,
there's a very,
either
very,
neighborhood
very
or
good
your
chance
house.
that I'm gonna hit my
I
max loss
think
on
it
the
was,
day.
but like one of
So,
the things
I
the
think
guy
that
showed me, but he
knowing
fucked
that
up
is like,
yesterday.
why
Dude,
would
that was
I-
so funny.
I don't wanna take that data.
Dude, I'm talking to this guy. He comes early. He was supposed to be here at 1, and then like he's just telling me what he needs to do. He's like, let me just go check outside real quick. And I'm like, all right, man. I was just like, please don't cut the internet though. I was like, I'm working right now. I have some stuff that I need to do. I was like, if you are gonna cut it, just let me know. But just don't cut the internet right now, right? And he's like, yeah, of course. Shakes my hand, walks outside, bro. I come back in on my desk, and then he fucking cuts the internet. And I'm like, oh my fucking God, dude.
I think TopStep TV.
I'm like, dude, this is crazy.
It would be fun to have other people on here.
And then I'm like, I got so mad, bro. I was about to go off on him.
Yeah.
I was about to go off on him, and then I was just like, okay, calm down. It's okay, Chad. I missed the Chad, but I'm like, this isn't good. And then I had to go out there and talk to him, and I spent an hour following him around. He cut it down for like 30, 45 minutes. I was using my phone to message you guys.
You can see here, people always ask, like, Patrick, you never
Did you question him why he cut it?
Oh, there's my.
I was trying to like lead into it because I like stood out and I was like, yeah, I was like, well, I don't have anything to do now. So what's going on? But then he started complaining. He upped me with more complaining. And then I was like, okay, shit, fuck it. Whatever, man.
We made $3,000
He got everything done, though, eventually.
Payout. Now we're up to $24,451. My goal really is I would like to have like another big $20,000 day and then pop this thing up to like fucking, because you got to think I took $16,000 out already. Right now, I'm up $40,000 in this account. So I'm getting pretty close to that $50,000 mark.
I literally did.
And TopStep's definitely got to be like, hey, we're putting you in the live account now.
I was like, yo, can you just not? I was like, if you need to cut the internet, come and tell me. I was like, just don't cut it.
At a certain point, I'm getting better. That's one thing. I don't know.
And then he just walks outside and cuts it. It was like one of the, you never had that where you like communicated something like really clear to somebody? And then they're like, yeah, for sure. And then they just do the exact opposite, like right away. It was funny. It had an element of humor because I was like, there's no way that's exactly what he just did.
Like, I'm only gonna get better. You know what I mean? Like, I'm only going to become a better trader in time.
He's like, yeah, sure, lizard guy.
Yeah,
straight up.
The more work that I put in,
hold on, man. AMD up again. Netflix still going.
It's 11 o'clock.
And even Nvidia, high tickers all over the place, but bonds are down and equities are going up, down a little bit at a time right now.
Tanya, I'll go to Chipotle. We'll have a FaceTime date. FaceTime Chipotle date. I'm calling you, baby.
Don't know for satellite internet's slower. You can't get it this fast, unfortunately. But I'll take it, man. Thank you, Oscar. Shout out, baby Oscar.
Is there a difference between the Express and the Live? So the Express funded account is still trading basically on a simulator. You get paid out from it. TopStep kind of uses the data to trade against, or trade with, I guess.
On ticker fix.
The Live account is actually trading.
That's not Stitch Fix, is it?
Like real live money in the
Comfort
market.
SY. I don't know about this one. I'd have to look into it.
Definitely a risky trade.
A lot of people lately have been bringing up some names. It looks good on the chart. It looks like an outperformer. I would be mindful of the premium, but Comfort Systems USA.
Kind of went too hard, trying to hit big profit targets. And
are your two connections from separate ISPs? Yes,
I've had plenty.
They are, but how they were set up. Again, I only had the ability to hardwire one. Now, after yesterday, I have both hardwired. So I was able to get new Ethernet ports and then make sure all of everything was just upgraded. Because it was weird. I've never had both connections go down. I thought the wiring in my house got messed up or something.
Patrick, I never blew up an account. Like, well, you did blow up a combine. You've never passed
AMD
the
still, again, fix is coming down. And then Netflix 420. Yeah.
I'm just trying to figure out, is it a benefit for them or you to go live? I really don't want to go live because if I go live, then I have to get real fills. I would love to stay in the XFA forever, to be honest. I know people are always like, oh, why are you not on the live account? Like, I have a live account. I already have a real account, money account. So, like, the XFA, there's no
I have a Starlink at your holiday home in rural South Island, New
trading
Zealand.
15
That sounds beautiful. The pings
really
are crazy.
easy. Like,
Does
if
it
you
work
didn't
good,
get
though?
out,
I
like,
just heard
there's
that
no
satellite...
issues.
I
So
want
that's the big
Starlink.
benefit, right?
I think it'd be a good third alternative, but at the same time, I did it's like wireless, like it's kind of spotty. I'm pretty sure.
He bought egg futures. He bought a bunch of egg futures, and then he didn't close out one of the positions, and he actually ended up getting the eggs delivered to his house. Like they delivered like 1,000 fucking like bushels of eggs to his fucking house. He was like, "What the fuck?" And I've heard about people with oil doing that as well. They will actually deliver.
You're a true broadcaster.
Real,
I am, but at the same time,
to your house.
It's all for you guys.
Literally had like
because early on in the years of streaming, I realized that if I break my schedule because of the internet and I get cut off,
I might
you all think I die.
One day. Ship a barrel
no matter what.
House.
There's no in between. There's no nothing. So I went about it I put the burden upon myself to get 2 internets so that you would never have to worry if I was dead or not.
Decorative
because
gourds,
it happens quite often. No, even if I put a pin message that says everything is okay, you guys are like, he's dead. He definitely died. There's no way. This is not.
Nord Trades even knows what a hedge fund is.
They're literally like, yeah, that's good. I like it, man. I hope that consistency speaks volumes. But we got you, man. We got you. Don't worry.
Is hedge funds are hedging their positions so that they can, even when the market's going down or going up, They always hedge their position.
I couldn't even play 2K. I had no internet.
Is to basically
That's the sad part. You can't even play career mode without internet.
Are not trying to make billions of dollars. They're really just trying to they're trying to grow their clients.
Once Starlink becomes solid, I'll be the weird guy in the mountains. Keep you plugged day 7 hours a day. Amen, bro. I'd be down too. I'd be moving to the mountains. If Starlink could get me gigabit internet from like a mountaintop, I'm down.
$400 million worth of fucking 0-day options. Come on. Who the fuck's gonna give Nortrades $400 million to trade fucking 0-day options? Come on.
Okay.
Like, come on.
Effect? What is this?
SBX.
Transform that EU rule.
Option. Yeah.
I was like, what is that?
Let's go. $400 million hedge fund. You guys get ready for that. It's gonna be lit.
How much time is left? I mean, you don't have any events for another, what, 2 hours? No, 3 hours. 3 hours till the release, 3.5 hours till Powell. And then you got another hour and a half till Euro close.
0-day options? Wow. How's that working out for you? I don't know. It just seems a little... You might as well just fucking buy lottery tickets. They sell. Yeah, that's the difference.
Speaking of 2K, they were doing the trick-or-treating. They gave out
Most,
hundreds of
like
boosts.
70
I saw it. I was
like
going to do it, but then I was like, hold on.
End up expiring.
No.
So if you're,
So like, I was just, I got to play, bro. I just need to get my 1 or 2 games in that I have the time for in the rec, and that's it. I was like, I couldn't fight. I didn't have any of the clothing. I was like, I ain't going to walk door to door, man.
That's the difference, my friend.
It's crazy.
There's a difference between fucking knowing how to trade. Yeah. 10% annualized return over 10 years.
Microsoft dumping.
I don't know how you're fucking...
How do you share?
That's crazy.
No, not really. There's everything tech is holding very good today. That's the only thing I'm pretty surprised, honestly. Today has the most relief out of any of the other ones. It sucks we have Powell.
Like I said,
I think XLV was down before, but that was the only weakness. Maybe XLF. That shit even came up. No way.
Tell them right now.
So maybe if the banks, though, they're right at the cusp. Watch if those flip.
The Patrick Whelan show. We'll do something fun.
My favorite MLB stadium, Petco Park. I've only been to like Petco Park. No, I've been to Dodger Stadium. I've been to a couple, but literally Petco Park. So dope. I love it. Like if you live in San Diego and you haven't gone to a Padres game, like you're missing out. It's a vibe. It's a vibe. I could get behind it. I don't even like baseball like that. Google in November 23, the Google Ads gambling and game policy, United States country specifics will be updated. Yeah, AMD is insane, bro. I wanted to make a play on it, and we were talking, every time I want to play earnings, I'm like, all right, wait a little bit. It already went down, and then it just fucking rockets every single time. So your day of earnings move is always negative, and then the day, like literally right after, it goes nuts. Oracle and San Fran, but I gotta be ready to risk your life. I didn't go into the park. I was walking around there by the Embarcadero. Last time it wasn't too bad, but it was pretty like, there was a lot of homeless. I didn't watch anybody get robbed, but besides that, I mean, it wasn't too bad. As someone who hates San Francisco, I could say that. Padre games at Qualcomm. Yeah, the location of Qualcomm was better, but the stadium goes hard. Windhorse, La Perla, Lingerie, UK unit shuttered over tax debt. Or, I meant lingerie, UK unit. Oh, lingerie. It says Lingerie. I need to go to the bathroom. Follow me on Instagram at the Trading Fraternity. Kind of starting to turn up here, but so far, a little bit of a squeeze relief day, and we are still waiting for Powell. Follow me on Instagram at the Trading Fraternity, and I'll be right back.
And then 8:30, when the refunding announcement hit, another jump higher, and then you get the weaker ISM, and then you're around the highs of the session, which leads me to the 10-year yield. The 30-year is getting all the headlines there, down 15 basis points. But this is still down 13 basis points. If you're going to issue more on the front end, it takes some of the stress away from the long end. Also, a weaker ISM, maybe the Fed is justified in being kind of done, even if it's on hold. All of that kind of rippling through the market. Dollar yen, though, a little bit idiosyncratic. We saw the BOJ come in and kind of defend that 1% level for 10-year JGBs. So they're kind of trying to put their money where their mouth is when it comes to intervention. However, 151. I don't know. I feel like if I had seen that 6 months ago, we all would be freaking out at this point, Guy.
Yeah, it's interesting. Maybe we will at some point. Maybe that will become real very quickly at some point, but maybe just not yet. I want to come back to that issue you were raising about what is happening in the bond market right now. Our question kind of relates today to kind of which is the most important factor. Is it the Treasury? Is it Janet Yellen? Or is it the Fed, Jay Powell? I guess you've got to pick your spots on this one. But I think this chart behind me does kind of tell an interesting narrative, and I would urge you to read Bill Dudley's opinion piece on the Bloomberg today. This is the US curve. Back in the summer, it is the blue line. You've got this very inverted curve. The front ends come up. The Fed's been raising rates. That's the bit it controls. But the longer end, the duration story is still kind of firmly anchored around 4%. Then we get this big move between there and there. The front end doesn't move very much, but the long end comes up really strongly. And this kind of goes to the idea that maybe it's the issuance story that really is driving the narrative in terms of what the biggest story is out of the bond market. But Bill Dudley's piece today, I think, raises some interesting questions. Is that move higher, term premium, as maybe the Fed would like it to be? Or is it actually a higher R star, which is going to imply longer rates for longer? Is it maybe the market not believing as well that interest rates, have done enough and inflation has been beaten and maybe rates do have to stay high for longer? I think that's an open question at this point. But in terms of where the action has been, you can clearly see that it has been that big move at the long end that has dominated. Today's story is at the front end. There, I think the battle is more even Stevens between the Fed and the Treasury. Alex, I think
Even Steven. No. As long as the long end chills out, bro. I don't know. Short end, nobody gives a shit about the short end. That's long. You got 2 years. It's great right now. I think the short end is very simple, but this long end, 10-year to 30-year, how it affects things, that is the main story of the day, in my opinion. Anyone see what's going on with Sony and the game developer? They own Bungie, makers of Halo and Destiny. They're laying off half the staff. I think I heard something about that. And then Sony, didn't Sony guide down? I think they guided down in one of the units. I think they're having a lot of problems. Block is running. That's good. They were down earlier. Yeah, Block came back up. They're red to green. PayPal, I think they're still red. No, they're green by 0.3. Netflix is just holding up there. Meta is rocketing. Again, Meta back to 306. Even Google near the highs. Amazon and Apple, too. Apple not really running into the highs, but they have earnings coming up. PRFT, Olma. Oh, my gosh. That thing's at 14 now. CVS, red to green. Yeah, almost, actually. So a lot of things, even the equal weight was smashed in the morning, but it seemed like tech was the first one to get the bid, and then everything did kind of come up here. Bungie cut the staff because some of the projects were draining cash. Halo was sold to Activision some time back. Halo. Shout out to Bungie, though. They gave me a lot of good memories. Shout out to BXR. Shout out to Double Shot. You know, if you know, you know. If you know, you know. Spirit Arrow says boosting cash flow is top priority. Market before Powell, is he going to say some BS? Well, actually, most people think he's not going to say much. So now that all of the data so far today, I mean, it makes sense why we got a little bit of lift. Who's to say it'll stay up by the time he comes on? But for the most part, you know, that data in the morning, we kind of we skirted a lot of bullets there. We dodged a lot of them and found a way to go up off of everything from the from the bond refunding to the ISM to the jobs openings, all of that. Literally, you know, 15 basis points on the 30-year, 10 or 13 basis points on the 10-year. That's big. So, you know, when we saw those on the reverse, we would be panicking. So it was a nice little relief on that front. But for the most part, it's a little cushion into Powell. I think we should be right at 4,200 by the time he talks. I mean, again, that's what I was saying the last couple days leading into it. So we're a little above it now. Got a little bit of relief, but you do have a couple of hours till you hear from your man. You're impressed? Gaming OG? Oh, yeah, bro. I was gaming before stocks, and then shortly after, you know, the stocks came about my life. But, yeah, man. I mean, you don't see, that's it, bro. I be killing it in 2K. I just got old and I can't play sports anymore. And I shifted to the sports games. That's it, man. I can still play sports. I don't know why. I don't want to hurt my knees. If you know, you know. Now you're gaming stocks? Well, no. Well, you mean like gaming stocks? Yeah, but like stocks that revolve around gaming, no. We talked about Activision the other day. I do think Grand Theft Auto 6, that release will get the stock hyped up a little bit. I also think Take-Two, or not Take-Two, not Activision, but Take-Two, bro. Oh my gosh, I think they are literally. I think they are spending, or so many people are spending money on VC. It's crazy. I think they're going to do good on it, the way they've been incentivized by it. Email, what's your name? Let me search for your email. Or email me right now, tradingfraternity@gmail.com. Because, again, I remember you saying that. Usually everybody gets contacted within 24 hours without a doubt. So send me your name right now or email me, tradingfraternity@gmail.com. Because it shouldn't be this long. All right, now tell me when you send it. I'm going to be waiting right here, waiting for it. Calls or puts today? It depends, but as of now, I mean, again, I think we're going to get a little bit of bearishness to start, and then the new information or the same info, that's going to vibe out with it. The house, I haven't comped it out yet. I could probably do that here in a second. Yeah, I sent you to spam for some reason. Let me see. This is my email. That's what you said? It says if you're from the UK. All right, I got the email now. Forward me the other ones, and I'm gonna get that to them. But if you're from the UK, if your number is not United States, it won't work. So that could be the easy answer. Other than that, though, if it is a US number, we'll get it set up. And you are coming down a little bit. Again, Bonds did this last time, and then we worked our way up. And unfortunately, I mean, you still got an hour, 20 minutes until, what's it called? Hour, 20 minutes till Euro close. $540. Honestly, yo, that house isn't that bad, Lucky. It's small. That's the only thing that sucks. Is like I showed with all the other houses, is that it's harder to sell when it's time to sell. It's harder to sell the smaller units, but based on what they paid, it doesn't look that bad. I would try to keep it lower. You have one low comp in the area recently, but I think 600 is a fair price. And if it has the other unit, even better. I mean, if you want to put in an offer, bro, let's get you a cold real estate agent to do it then. I don't know. If you want that to live, it's not bad. Again, the area, I think the price they bought, I think the people who bought it overpaid, but you get to benefit on that a little bit. And then 4217 now. So 10 points down in 3 minutes. Remember, this was one of the first levels here. We didn't get to that 4235. That's what we were waiting for. But you got a nice little Raul there. That was 10 points. 10 points right back down to VWAP. Bonds are coming back down. And bonds are still well above, actually. Let's see. So bonds, they did not get up to the Bill Ackman level. Unfortunately, that's where the relief stopped last time. Riding Raul. Raul is the rug pull. So Raul, he has a lot of different names. Delta Airlines sales of flights from JFK to Tel Aviv through November are suspended effectively today. All remaining Delta service between Tel Aviv and Atlanta and Boston has been canceled. Delta monitoring security environment in Israel to inform cancellations to flight schedule from Ben Gurion Airport in Tel Aviv. So literally more flights halted to Israel from Delta. How do you feel about the Israel conflict? Good morning to you too. So that's a really deep question, sir, but I don't support any war at all for any reason. Any violence, I'm not with it. I know I'm a hippie. I'm a weirdo. Maybe I'm naive. Maybe I'm ignoring a lot of things, but nowhere in my mind does killing anybody for any reason work as a viable solution. So I will keep my naiveness, but, I hope principles and radical ideas could change the world, especially if it's based on peace and love above all else. You know what I'm saying? Because that's what I stand for. That's what I mean by no violence. That's what I mean by no war. So, amen. Amen, man. And I encourage all of you to be the generation that put an end to war rather than the ones that encouraged it, because it's wicked, bro. When we were young, we would read books about history. How did World War II happen? World War One, literally things from the Holocaust all the way down to just literally massacres in the world. And it's just you ever wondered how that happened, how it was allowed? And it's how did people just sit by and watch, millions and percentages of the world population die? How did they watch that happen? I think you guys could see it now, right? It's society. It's when you have people supporting violence and, justifying whether it's through defense or not defense, whatever the reason may be. But, you know what I'm saying? You're witnessing it right now. You get to experience what it feels like because it's the same thing. We have a culture. We have a war culture. And unfortunately, it's not good. And I encourage all of you to be bearers of peace and fight for peace rather than each other. You can't have peace without war. Listen, I've heard this so much. It's been 3 weeks, man. Oh, the war could take a back seat, ladies and gentlemen. Bradley Frizzle and the Peach on Powell Day. Are you kidding me? Oh, no. Wow, Peach Nation, get your ass up. Bradley Frizzle and the Peach. Oh, my goodness. Oh, my goodness. Thank you. Yes, I want the peach, man. That's it. That's the global diplomacy. That's that peachy timing. It's great. Whew. It's beautiful. It's beautiful. Oh my gosh, thank you, Bradley Frizzle. Mm-mm-mm. Every 19-year-old French male was dead by the end of World War II. Yeah, it's wicked numbers. But, like, I mean, can I make a funny joke without, I don't know if it's too soon. But I have a funny joke. I thought of it the other day. My joke was, I was shocked. I was just thinking about it, like, no fucking way that, like, the little TikTok, like, the TikTok generation is, like, been more supportive of war than anything. It's the wildest concept to me. Like, who would have thought that the mother effers, like we're sick. You got to realize that. We will go and do, like, a little TikTok dance, make this weird-ass video, like, giggling, and then turn around and then just support a massacre. It's like that generation they are gangsters, whether they realize it or not, because they are just down to they'll be like, yeah, dance, yeah. And they just murder, protest, kill them. What? Who would have thought that the little dancing generation would have been the more, like, war-hungry one? It's mind-blowing. But then it's the old guys. The boomers tricked them into it. Yeah, 100%. The boomers, they say, come here, youngin', and they got you to get mad about their issue, and you're gonna be fighting the boomers' last war. It's messed up. Mm-hmm. But it's weird. I didn't think that, like, a dancing generation would be down for war. It blows my mind, bro. Like, that's a different type of, like, but it is very American, where it's just like we're very detached from it, and they're very just like, that's it, man. They're just gangsters. Because they won't be fighting. They will. I mean, let's just hypothetically speaking, if all of this stuff, this is why I keep telling you all, stop supporting violence. If this keeps going down the slippery slope that it is, and we run into another Middle Eastern conflict and wherever else from here, everybody is involved, unfortunately. Mm-mm. Jen just loves the underdog. Doesn't matter if they're terrorists. I really do think so. It's kind of part of a societal, I wouldn't call it a societal flaw, but there is just a pervasive thing. I've seen it with the younger generation, and it's not bad, but they really are just all about the underdog. That's it. It's just, you support the underdog, and no matter what, that is a character trait, I'd say, of the current generation. Powell didn't happen yet, so you're good. You got Powell in a little bit. The only thing that happened was the bond refunding, the announcement. Yellen decided not to sell more 20 years, which was good. Bonds got a bid. Then ISM came in weaker. Bonds and equities got another bid. Then jobless claims came in a little hot, and with everything else, we were still able to get a bid, and it kind of squeezed us up here. And now we're waiting for Powell. If anything, we're waiting for European close. That's going to be in an hour, not in 9 minutes, believe it or not. And then we get into Jerome Powell at around 2:30 Eastern, 2 p.m. for the actual release. Schwab lays off 2,000 people out of 35,000 staff. Yeah, we talked about the Druckenmiller thing about Yellen. He was kind of right. I mean, it does make a lot of sense, but he did go off on her yesterday. 425, I mean, it's on the table, but I wouldn't get your hopes up too high. I mean, even right, we were looking really good, but now you're crashing back below the levels. Maybe crash isn't the right word, but it's not really showing too much respect. You're going to go all the way down. Like we said, it was a big move leading into Powell. We'll see where it leads us, but then again, Powell will be the set-all be-all for today. Sunrun did good, or no, First Solar did good. They were one of the only ones. Them and who was the other one? Jinko. People still buying these expensive cars at high rates. It is. I went car shopping yesterday though. After we looked at the Lambo index and I saw that vet, I was like, let me look around. Car prices are down across the board though. So the cars are still expensive, but they're still like, it's lower. It's definitely the lowest it's been in a couple of years, but it's still like high. So I found some good deals on cars, but it's still like, if I feel like if you're financially prudent to a degree, it's just not worth it, or nothing. Even if you want the car, even if you're financially imprudent, I don't think it's like appetizing, if that makes sense. Do I care about speed? Are you talking in a vehicle, or are we talking about velocity in the market? Speed in a car, I mean, I don't really give a shit, but in the market, I do care a lot about it, yeah. 737 output for fourth quarter ranges from 37 to 42 units per month. Spirit. 34-month chat milestone, baby. Rich Daily. Amen. The car that you flipped months ago, I still have it. I didn't flip it yet, but the value's still up, surprisingly. So that's the reason why I bought the car. It was just extremely rare, but that car, I mean, if anything, I've seen the prices go up on it. So I'm chilling on it. I drive it like, if I take my girlfriend out to like a nice dinner or something. Otherwise, I think I put on, I don't even know if the car has like more than 300 miles on it. I barely drive it. It just sits there. So that one was just like, I got a good deal on it. I was going to flip it, but I'm still kind of waiting. I don't want to take it into the consignment. That's why I just have it at a really high price. I'm down to list it. Viva las Chad. What car? I've not told anybody actually. So it's been one of my private cars for this year. I agree with Josh with these salespeople are criminal. Realtors telling people to get bank statement loans, and all the car sales people are doing house financing, saying you can refi later. It depends. I mean, realtors want their commission, you know what I'm saying? But at the end of the day too, sometimes like I've been in a place where I had to take a bank statement loan, and it wasn't because I couldn't afford the house. It was because of both regulations, how it was, again, if you're starting off a new business. So there's people out there, like there's some of you guys who you've made money in the last couple of years, but if you didn't set up your taxes and your corporations and you didn't do it all the right way and have a good track record of it, you won't qualify for shit, even if you want. You know what I'm saying? So it's like sometimes it makes a lot of sense, but for vehicles, I wouldn't say, if someone's telling you to refinance a vehicle later, you are going to go negative equity. Housing, it just depends. Like if someone's trying to, if you can't afford it, I don't think real estate agents, none of them do this. And we don't stand by it at all. Like if that person can't qualify for a home and can't afford it, you don't tell them to go buy it. But there is reasonable instances where, again, people can genuinely afford it, but how it is for qualification. And don't forget, banks are tightening up loans right now. They don't want to give out their money if they're worried about long-term rates moving around. You got to think about it. Why does a bank want to give a mortgage right now? Guess what? They don't. Why? Because what if the rates go higher and they could get more for it? That's why they want to be very, very specific. So unfortunately, there is some reasons. But I do agree with you. There is predatoriness, both in real estate, and that's why, you got to conduct yourself better. And then in cars especially, very, very predatory. So you do just got to watch out. But don't think you're going to refinance a fucking car, because by the time you go to refinance, you will be underwater on it most of the time if we're going on OG logic, not 2020 logic. Toll is ripping. You need to refinance to bring payments. That's good if you can, if you're at a higher rate and not, but at the same time, like if you refinance the car, just make sure it makes sense. Don't refinance to a higher term, and then just keep in mind, if the equity is lower than the loan, that means you're underwater already. They still give loans, but the lending is tightening. So it's not like they're refusing to give out loans, but in general now, being a borrower right now it's not easy to be a borrower. That's all. If you want to borrow, you better show you have money. You better put up good collateral, and then you still are going to have to pay a higher rate. So unfortunately, it's getting harder to borrow money. And this shouldn't surprise you. Look at the interest rates. Again, look at what happened with bond yields and all that. This is financial conditions tightening. This is literally what Jerome Powell wanted, right? It's not to stop all financing, but it's making it slow down a lot. At least 320 foreign passport holders crossed to Egypt from Gaza in first batch of evacuations, Egyptian Security Council sources, a Palestinian official. The student loans, make sure your student loans are low. So right now, like we had this talk yesterday, some people in here, they have student loans at 3% and 4%. You hit the fucking jackpot, because all you got to do is take your yearly payments, put it into a bond, go collect 5%, pay your loan off at 3%, and then you still pocket 2% gain on your loan amount, which is nuts if you think about it. So that's beautiful. Or your payment amount, I guess. So that would be the best case. If you are above it, and if you could refinance, if your rate is like 9-10%, I would try to refinance to something lower if it's possible. But then again, rates are high. Egypt is not cool with housing all the refugees. No, they are down with housing some of them. But Egypt, even yesterday, people were getting mad at Egypt because Egypt was, they were saying we don't want. They said they're willing to fight to not let any people in because, again, the worry is you want to help people. You want to help the Palestinians that are being unfairly treated and that are being, murdered. Literally, there's Palestinians that are not Hamas. But at the same time, you do run the risk if you let a mass migration in through your border there, and then it's, backed upon, there is literal terrorist groups that are around that area. They are worried that they're going to let Hamas get a presence in Egypt. So they have been fighting against it. Yeah, they're only taking foreign nationals and those on their deathbed. They're fighting to not take any more people, though. And a lot of people got mad at Egypt for that. That was all in the last, 48 hours. Do you think this will have an effect on the southern border? I think it already has. I mean, you got to be kind of naive to think that people wouldn't just come across from the southern border, even if they were from the Middle East, But at the same time, too, though, just look at the way that there's public support on both sides of this. My hot take, I don't think you're going to get a terrorist attack in the States. A lot of people are scaring you and telling you that, but I'm like, no, why would they when Americans are supporting terrorist organizations? So I don't think they're going to attack you here because that didn't work well 10 years ago. We don't respond well as Americans to terrorist attacks. We pull out the F-16s. We respond more to underdog social justice. You'll have everybody on your side, even if they didn't listen or not. So that's my hot take, is that although I do think there is the risk of the southern border and terrorism, it's like at this point I don't think a physical terrorist attack helps terrorist ambitions when you could just play the social card. James Harden to the Clippers. I very wild trade, man. Very wild trade. I was shocked by that. I don't know if it's confirmed, but I did hear about that. It's just what happened. They're trying to bring all the All-Stars to LA. It's like a repeat of the 80s. Clippers are playing the Lakers. No way. Harden is the worst. I think Harden is really good. I think people just like to hate him, bro. How could you keep your debt payments in a bill if you're paying monthly? Go buy a 1-year bond that pays out a monthly coupon. I don't know if the 12 months pay a coupon, but usually above a year you could get a coupon. Or you could go buy an older bond. You could go buy somebody's 5-year bond that pays a coupon and that still has the yield. You could buy a secondary bond and then put it into the bond, and then you pay your payment with the monthly coupon. And then, yes, you will get taxed on it, but again, you can write off the interest from your loans as well, too. So it should net out no matter what. You gain on the interest, and then you pay an interest that should net out no matter what. You could buy bonds on TD Ameritrade. I've done it before. You could go even on E-Trade, just go find your broker's bond center, go look through it. There's either new issues or, like I'm saying, you could go and find existing bonds for sale. So do you guys understand? I don't know if I could show you here. Let's try. But do you guys understand what that means? It's actually kind of a cool point if you think about it. Fuck. Okay, I could log in still. I could still log. Whew. I was like, damn it, it's not even letting me log into it. All right, so let me show you. We're going to go here. You're going to go trade and then go to bonds and CDs. I've done this before. I've done this in the past for you guys. U.S. 4-month bill draws 5.3 allotted at high 25%. So this is what we said. You go to treasuries. You select the duration. Right, so let's go to 1 year, 0 to 1 year, and then you could go to new issues is when you buy it brand new. That's the government. They auction it off. If you're doing a new issue treasury, these are literally like treasury auctions. You could see what's up. Again, 4-week treasury, it's going on now. Oh no, the 4-month bill, but you could bid for the 4-week or whatever. This is just getting in on the newest auction. Are you guys following along? I've done this before. I did this at the beginning of the year when we were making Bill videos, and I was telling you about Bill at the beginning of the year, saying how cash will be the best trade. I did go over how to buy a bond because I said this is something else you could do. This has been the highest yields have been in our generation. None of you have seen this for 20 years or so. So it's like, you're able to get in. The fee clapped me because I put it on margin. So do not misinterpret it. That's the whole logic. Why? Because I borrowed money to make a play. I just wanted to see how it was going to be. So if I did it on cash, I would have made money. I would have made my $20, $30. But since I just wanted to test it out, I put in the margin, the margin rate and the rate you got pretty much. I lost like $5, I think, $10. But I just wanted to see how to buy the option on TD or how to buy the bond on TD and then how to go through it all. You can buy it on E-Trade. I might be able to go through and show you. But my E-Trade still, it still has all my personal info on it, unfortunately, as I'm still transferring that account for the new one. But the general idea here is that these are new bonds. So again, you go to new issues, you could buy them, but let's go back. We'll go to bonds and CDs. Where is it? Trade. So let's go U.S. Treasuries. We'll go 0 to 1 year now. And then do you see all of these? These are already existing. So this is telling you when they mature, but then you could also see when they were issued as well. So what I mean is you could buy a used bond. You know, like you could buy a used car. Well, you could buy a used bond. So this is telling you this one matures in 2024. Let's see, when did they first issue this one? So dated date 10/22, maturity 10/24. So what are you looking at right now? Does anybody know? What does this mean? So United States 4.375, 10/31/24. What is after all of the info I've given you, what can you determine? There is a coupon. The coupon is 4.375 and the frequency is semi-annually. So this tells you a lot. There you go. Look at that. Boom. So this initially was a 2-year bond. Why? Because it was issued in 2022 and it matures 2 years later on Halloween of 2024. So somebody bought this bond 1 year ago and now it has 1 more year left of payments left on it and they're willing to sell it to you. Are you following? So like literally they'll sell it to you for $495,000 and by the end of the year it will mature at $500,000. That's the simple way to look at it if you wanted to. So you could buy it though, but do you see where I'm saying is that if you bought like a new issue 12-month bond, it may not have a coupon, but if you wanted to find one with a coupon, you could go buy an older 5-year bond. So that's the whole idea. Just all those companies, the held to maturity, all that shit, you know, they have bonds for sale. So, you know, some of them sell it, some don't, but you could buy anybody's bond in here and it could have been issued a couple years ago, a couple months ago, but pretty much you go through and you find what you want. Again, semi-annually means you only get paid out once every 6 months. So if you're trying to play that game, this may not be able to work out more or less. Maybe we go for a longer duration bond that pays out more actively, but then has less time till maturity, more or less. They get the maturity value of year 1. Yes, but chances are they probably lost money. Why? Think about it. Honestly, you all should be able to understand. They lost money no matter what. And even then, by them selling it to you, the fact that they have it for sale and want to sell it, they're going to realize the loss once somebody buys it from them. Yeah, this should be easy. Interest rates went up. We're talking about a 2-year bond at what? We're saying the coupon is 4.3, 4.37. Costco, a little bit at the high. So why should that be weird? Because guess what? Yeah, your 10 year's at 4.7, but what's your 2-year at? Your 2 year's at 5.0. So do you see the problem? In a weird way, why the fuck would you buy this bond? Think about it. It only has 1 more year left till maturity. That would be your only incentive. So, like, take a look. Again, we go back 1 year of time, October 31st, you know, the 2-year bond year was like, where was it? It was like 4.1. But again, it's higher, so you could get way more now, but the only reason you would buy that bond is if you want the 1-year duration, but why would you want 1 year of duration left for only 4.3? When right now the 2 years offering you 5, the 1 year's offering 5.5, Bill 3% is offering, so you're leaving, if you buy it secondary market, you're leaving, it does not make sense. The only reason why you would buy it is if you want the coupon payment, because the short terms don't offer coupon payments, but you want the coupon and then you only want 1 year of time to tie up your money and you're willing to take almost 1% less on the whole deal. So, but again, it's not really a rational decision. That's probably why this thing is going to sit here and, you know, someone's trying to sell, you know, 25,000 of these, which is a decent amount. You can offer lower, but I don't think you would get filled. Yeah, I don't think you're allowed to. So they give their price, but I don't think you'll get filled. I don't even think you're allowed to offer lower. the person selling still made the money. They got the interest but lowered. No, because they bought it at a discount and they're selling it at a discount. So they get all their money back at maturity. He may have gotten a portion of it back. So I don't know if he's winning or losing. It really just depends how he did the deal. But for the most part, it's not as if he gets to keep all the money. So again, let's say it matures at $500,000. He probably paid $490,000 for it, right? And now he's selling it at $495,000. He was supposed to get his $500,000 back for the return. So he may have gotten a little bit more depending on if he actually paid $490,000 and then coupon payments. But it just all depends on how it all played out for him. Yeah, he might be at break even or a little down or a little up. It just really depends. That's the weird part about bonds, because depending on when you made that deal and what price, well, then there you go. The incentive to sell the bond, great question. Welcome to the banking crisis of 2023. Why would he want? So why in the world is, again, this is a real trade just sitting here right now in the secondary bond market. There is just this bond sitting here waiting for anybody to buy it. Why would they want to put up this bond for sale? Exactly. He wants cash or he needs cash. That's why he's like, well, fuck it. Instead of waiting another 1 year to get all my money back with 4.7% return, I'm down to just cut it out now because I need liquidity. I need cash. So that would be the only logical explanation or rational, which, like I'm saying, a lot of this rationally, some stuff makes a lot of sense, some stuff doesn't at all. Why do all of that when you could put your money in Webull or Robinhood and get the benefits of bond interest with daily payouts? I mean, the real answer, and I hope you don't get offended by it, is because this is just big money. The bonds are the biggest money in the world. You know, we're talking like the minimum thing right here. It's saying minimum quantity is 500. So the minimum purchase on this is $500,000 minimum. So, and guess what? You put any money into Robinhood, you keep it below 250, you're insured. So this is the only way you could put big money and get some level of insurance when it's all said and done at massive levels. CNBC just called it Airbnb bust. I'm happy. It's okay. That's it. Ever since I saw that Airbnb shits on Hilton and revenue, my peace soared. So that's all that I care about. That's all that I care about. Listen, high yield savings are dope. Like I'm saying, if you could go do that, and if you have that option, like I'm saying, this is all because we're talking about college loans. So I'm telling you that if you have a college loan right now below 5% interest and your payments are going to restart, you should go take your money and put it into bill or a bond. So then that way you can get interest payments on your money you were going to spend for your loan. So like, let's say, hey, how much, someone give me your loan payment. What's your average loan payment? Someone just tell me, I'm going to go with the first couple I see. Just give me a real life loan payment on your student loans. I think like what, $350? Is that reasonable? Not percentage. How much you pay a month? I see 500, 325, and then 454. Let's average that out. 500, 325, and then 454. Divide by 3. So 426 a month. That sound good? That sounds like a good average, right? So 426 and 33 cents a month times that by 12. Okay, that means you're going to need $5,111 a year. So you just need to pretty much put in enough in bill to either get that payment of $426, or you just need to make $5,000 in interest a year, or again, find a way. But what I'm telling you is that you go now, put this into bill, but let me see. What's the other one? We're going to take, if you took 10,000, or how much would it be at 5,000? So 5,116 times 0.055 5, you're going to be making $281 a year. So remember, what's the paradox going on here is that your payments, this is all of your payment. You're paying principal plus interest. What are you doing with $5,000 here? You're getting just interest. So that is now, divide that by 12. Back of interest. So I think you need to double that up. So you're going to need probably, I think, 25,000. You might need the whole balance. And so you need cash to do it. 1375. You're getting interest. No, you're just not getting principal. That's the problem. That's where the gap is forming from. Do you see what I'm saying? So even at 25,000, you would be doing, you're still shy of it. You would need about 100K, sadly. We need to find a way to get the principal, unfortunately. So if you had, so pretty much you would need the cash to pay off the loan. So this doesn't really help as much now anymore. Yeah, you got the principal is still the killer. So best you could do is you could save 20 to $100 a month in interest off of it. I'll pay the lamb loan. Unless you could, the only way it would work is if you could issue, you would have to AKA refinance it, but there's no way that would work. You would your interest payment would be lower, but again, I hope you see it, because if your payment's $426 a month, after 12 months you're spending $5,000, right? But that's interest in principal. So again, even if we don't know the interest rate in this situation, so if we calculated that, I'm sure you would be saving money, but at the end of the day, it's not going to make it where you could set aside the whole amount and then just live off of it. This will not work, unfortunately. Yeah, principal depends on how long they've been paying. So it goes into the minutia, but there is an opportunity of it, but it's not gonna save your principal payment, unfortunately, unless you put way more principal to get interest to calculate for the principal as well.
Question is,
all right, you have a wild question. You're going to send an email. Maybe chat as an opinion. You're Canadian. Your mom sold her house as fear of rates. I said keep it and tried to buy, but who knows with the bubble or extended bub. Anyways, we have cash. I want a diverse states, cheaper places here, short bonds to have cash open and bill, etc. Should we be trying to come to real estate as Canadian? Should you join Core Real Estate and get my card? I would join Core Real Estate, but I'm kind of confused. What do you mean, like, so you want to go to a cheaper place in the U.S., but now you're saying short bonds to have cash open and bill? I wouldn't touch don't short anything with your house money. Does that make sense? Don't honestly, what you should be doing with that much cash, assuming you got hundreds of thousands of dollars, you know what I'm saying? Yeah, hold the cash until you find something. I mean, if you're down to go to the States, I would do it. Hell yeah. Or even if you don't want to live here, maybe go buy a cheaper rental in the middle of nowhere out here, or again, one of the cheaper areas, and that could do it could go a long way for you. Yeah, you're trying to double dip. You still got to take the payment out, but if you save on the interest, 100%. Canadian real estate is in the gutter, so I can't blame them. Listen, if Canadian real estate is the gutter, I want you to bring that gutter over here, okay? Because all I know is the Canadians go up 20% every year somehow. It's like 5 to 15. I see you're big here in real estate with friends, so you just want too much to expand. I would do it, yeah. Core Real Estate, we've helped a lot of, back in the day, I used to help out a lot of foreigners. Again, there would be people in China and Canada who just wanted property. that's one route you could do. But if you want to like really expand, I mean, you could do a lot of different things. But I definitely, that's the plan that I've been executing on. Literally get yield, buy houses when they're a good deal, and chill. It's gone a long way. Pretty much get a cheaper one here. No, just if you don't have to get another house in Canada. Just go buy cheap houses in America and call it a day. But then maybe if you get enough cash flow, whatever you buy in America, hopefully it pays enough to cover your rent wherever you want to live in at home. Yeah, straight up, honestly, if you're in the GTA, I would hit up UMAD from Cole Real Estate. That's our Canadian guy. I mean, he's helped a couple of Chads, even like just Chads who wanted to buy or sell their homes. He helped them out with it for the Canadians. So I would contact him. Email me. I'll forward your email to him. And then we'll go from there. Yeah, he helped you sell your townhome. Let's go, baby. And you got that house, baby. Make him move. And all in Canada, too, bro. It's just crazy. You know, again, like I say, in Canada's real estate market, man, it just goes up and up and up. It's wicked. After a long time, you're back. What's your take on today? You're going to have to wait a little bit. We recapped it in the morning. I'm down to rant about everything once again right before Powell comes on. The market's going to force Powell's hand. Maybe. I said it yesterday. It was very fascinating. I think it's kind of interesting. But, like, do you guys realize what happened to the yen yesterday? This was all on the watch list. So I just know you know, if you're going to be like, wow, this was mind-blowing. Wow, this is a cool information. You just laid on it, bro. But what happened yesterday with the yen, it died. But what some people were talking about was that it was a messaging error, meaning that, like, Ueda, he was trying to do, like, a half-ass attempt at, like, moving the market, but without, like, changing anything. You know what I'm saying? Like, it's kind of like when Powell does nothing, when Powell says the same thing over and over again. So that's what he was trying to do. He made a slight adjustment, but didn't abandon it. And at first, it was a small reaction, but then what people were talking about, they were like, this was Ueda's crash course in, like, hey, if you try to play it too soft, you know, and the markets fight back, you end up worse off than you would have been. And that's where, in a weird way, maybe that happens to Powell. Maybe Powell does the same dance of nothing and goes both ways, but then the market just can't handle it, or they want to throw a tantrum by not getting, you know, real actionable info. We just had an example of that happen in Japan last night. So, I mean, maybe that occurs here today. I don't think it's a high probability, but after what you witnessed with the yen, I mean, it does make it very fascinating, considering Powell has done a lot of what Ueda, you know, very gentle, very slow, try not to say much and move it, but it backfired for Japan yesterday. I mean, we'll see if Powell still got the juice. J. Powell always got the juice. We'll see, man. We'll see. Every time, though, we do. He's always impressive. He is always impressive. Now, Fed futures are literally virtually pricing in a certainty of no rate hike today. Airbnb, you mean Airbnb bust? Yeah, we got today. And PayPal. Woo! No rate hikes, good or bad. It doesn't really matter as much as his commentary on the other factors of rates in the economy, unfortunately. Still should be a pause. Yeah, no questions asked. That's the part where I'm like, man, the market's so effed up. Because remember, last September, we were freaking out on what was going to happen in November. The last rate hike, and then sure enough, you got over that one quick. .25 is negative. It would be negative because it would be a surprise. So you got to realize if they hiked rates, then after everything we've gone through in the Fed futures today, it would be a surprise. The Powell hasn't surprised. No Fed chair has surprised the market like that in over 60 years. So what I mean, this is the age-old. You probably learned this here from the Stock Market Live, but we've told you for a long time. Whenever the Fed futures price in an outcome, the Fed has not gone against it for minimum 60, 65 years now at this point. So in general, I don't think that Powell would break everything for no reason today by raising rates when that is not the expectation. How long would need to pass for you to be confident rates will be lower? 8 months, 2 years? I'm not following. I'll be confident rates are lower when they fucking cut them. That's the only way. Otherwise, the long-term, as long as short-term rates are up, whatever long-term rates are doing, it's because of assumptions of policy in the future. But at this point, I don't think, that's why I'm saying, that's why it gets so weird, because if it don't go down, if they don't lower the rates eventually, and whether it's this year, next year, 2 years, 5 years, the rates will stay up. The VIX at 1732 right now. It is down. Not at the low of the day, but VIX smash for sure. It's at the low of the week, and then we're back to where we were at kind of at the rally of October, but market's much lower. Too late to buy Bill. Did it reset? No, now is the perfect time to buy Bill because now it's reset. You won't get the dividend till the end of the month. If you bought in before the reset, you got the dividend and then your equity reset. But buying in today, this is the perfect time to get in on Bill. It's the start of the month. So yeah, you won't get the dividend till end of the month, but for equity wise, you're good to go right now. We'd have no raise rates, but his commentary, if it's dovish, we flush. No, dovish would be good. On the first, you get the dividend on the first week, but if you didn't own it before the reset, you don't get the dividend. But then it's good if you're at the beginning of the month, you get to take all the equity, and then it will rise up every day, and then at the end of the month, you'll either get the dividend and it resets. But then that way, if you want to sell out middle of the month, you could still sell out with yield without having to wait till the end. That's the beauty about getting in on the first day. Buying the yen is still the plan. For me, it is, yeah, but at the same time, it's not a plan that is wrought with safety, if that makes sense. Again, I think eventually it will prevail, and it doesn't have the same, risk as a bond because it's not duration. It's a carry trade. That would be the risk of the other currencies and values. But for the most part, it's whenever it stops moving. That's the only issue is because it could keep moving down before it goes up. Disney lows. You're buying 5 shares a week. Well, listen, don't do that for the yen. Just buy the yen every time we get close to hearing an update. Anytime you get CPI data in Japan, production numbers, the data that's going to prove that they could abandon their policy, that's the moments that I would, rather than just arbitrarily every week. And that's what I would do. But at the same, or again, I've already made I only got one more purchase left on it, so I'm waiting for the final one. I would buy a T-bill ETF that doesn't pay out its interest and keeps accumulating its share price so you get capital gain versus regular income. Not bad. Not a bad strategy. Again, but at the same time, just talk with your tax professional. Although the bonds do pay out and you do have to pay taxes, again, just how you're structured, it may not be as bad as you think, but that is definitely a good alternative. Just make sure it's a good ETF, though. Make sure it's backed by the right assets and it does what it needs to. New Apple Pencil available to order now at Apple Store for $79. Woohoo. Oh, Eli Lilly, I didn't even see their earnings, honestly. I know Eli Lilly and Novo, they did good, but I'm surprised people didn't talk about them as much. Unless they were supposed to be this morning, right? Oh, no, they didn't report? On November 2nd. Yeah, they're tomorrow, so we still got one more day. Yeah, that one, because I was saying I still got to make a move. I got to make a move with my NVS shares. How many hours would you spend trading, would you say? Oh, a lot. I could probably check. So, like, this year on, where is it? Just this year on Twitch. I can't check on YouTube. Let's see. From January 1st till today, I have streamed 1,625 hours and 57 minutes. You playing 2K? I mean, you can knock out like 40 hours from 2K, maybe. Maybe 40 hours. I doubt it. That would mean I played 2 hours a day for 20 days in a row. I don't even think we got that far. But maybe. The bill, yeah, they set it up so you can't. They know what you're trying to do with Bill. That's why it's like that. They figured it out. They know exactly what the plan was. Oh, I forgot. I have to even get that up here for you guys. That being said, I'm going to pin the Twitch link. Lunch before Powell. I forgot these. So again, you got the Twitch too, just in case it does lag throughout the day or during the press conference. They got pinned. Okay, good. I think Powell will be hawkish after Yellen's announcement. I think we got to observe Powell's attitude, but I just think Powell is going to surprise people. I just think a lot of the market, a big theory of mine today, is that a lot of the market is ignoring what got us here. And that is the simple fact that before we were worried about the market coming down and conditions tightening with rates, it was because oil and economic data was showing that inflation was surging back again. So in addressing that, I think that's naturally going to be hawkish. But everything else from where we end up, we are going to need to interpret the boy and see what he have, because, you know, Powell could, if new info or not, will determine a lot. He's going to look hawkish, talk dovish, and be neutral. Amen. Amen. Mm-hmm. What happened? We had some internet issues, poor communication. Upwork under 10. UPS, I mean, they had bad guidance the other day, but we kind of ignored that. And what time is it? 9 o'clock. Bro, y'all ready for this, man? Down. 30 minutes until Euro close. Yes, we can do PayPal earnings preview. You fiend. You can't even wait. It's been an hour since you last asked me. As you ready to go, JG? Even then, I forgot. I remembered one of your questions last time. You ain't even bring it up till randomly. You want that PayPal, huh? You want that PayPal. I could tell they want the PayPal, baby. I'm in it, bro. I know you will. Let's go, baby. Let's go. All right. So I'll even give you a little extra. They're saying PayPal. There's even some analysts, they're saying they do not expect fintech will have meaningful developments in Q3 earnings. They anticipate challenges will persist in coming quarters due to lack of near-term catalysts, continue to see headwinds resulted from competition. So that was the latest analyst update leading into it. This is kind of behind, too. I don't know. I need to check if analysts have moved. So these aren't the accurate updates. So this is mind-blowing to me still. I can't believe you can make Caroline. I'm still mind-blown. Anyways. You don't want to be a pest? No, man. You never are, bro. It is truly my pleasure. Thank you for everything, JG. You know what I'm saying? So don't let my jokes take away from that. It is my pleasure, my friend. I'm excited. I'm excited that you're excited, bro. Let's go. Let's go, baby. So here's PayPal earnings preview. Again, it makes sense. Maybe we'll do Airbnb after this. And why? Because, again, we are going to be getting into Powell very, very shortly. So keep that in mind. But PayPal revenue is expected to be $7.3 billion, which implies 7.9% year-over-year guidance, or year-over-year versus guidance of 8%. Transactions, $6.65 billion, other $735. Non-GAAP operating margin, 22.1. EPS of $1.23 versus guidance of $1.22 to $1.24. TPV of $379.26 billion. Ending active accounts, 430 million. Take rate total 1.9. Transaction margin 46.1. Full year guidance, EPS expected to be $4.95. Price history since last close. August, PayPal is down 29.3. S&P down 8.3. XLF down 8.6. Near-term options imply a 10% move. Last 4 quarters, loss of 12, loss of 13, gain of 3, loss of 2. Revenue has beaten 13 of the last 20 quarters with 1 in line. EPS has beaten consensus 16 of the last 20 quarters with 2 in line. Forward quarter revenue has beaten consensus 7 of the last 19 quarters, and forward quarter EPS has beaten 7 of the last 19 with 4 in line. So PayPal, again, they're trading way down since last quarter. Analysts, if anything, analysts are pretty, like, the guidance is low. Analysts do not have a high bar, and everybody's expecting nothing to happen. So if PayPal does bad or even at the numbers, at the margin isn't good, and then if they surprise, I think they'll get a huge lift because, again, nobody is expecting them to be good at all. So keep that in mind. That didn't sound great. Yeah, it's awful. It's not, I mean, hopefully none of you have been swayed to believe otherwise. But again, there's a reason it's a value play. Remember, PayPal has been the company like Sam where they've literally lowered guidance every quarter for like 2 years. You get what I'm saying? So if they come in at the numbers, it's all bad. It's not a good sign. That's what's happened at a lot of their last earnings. But then if they do good and they actually rip on that, then we're good. NVT, FMX, and XL. What's this? FMX, XE, EXEL popping, and then NVT. 2 of them are energy plays, I think. I don't know if XL is or not. What catalyst do they have to do well? Just really honestly, I think it's just reining in on the spending and the expansion that they had from 2021. It's kind of just normalizing and adjusting to the market. So the catalyst I think they have well is $369 billion of transactions in a quarter, 420 million active users. You know what I'm saying? Like, that's where I believe in the company. I don't think it's going on anywhere. Again, even at $50 a share, the EPS is $5. You know what I'm on the year. So it's like, to a degree, there's stuff with way more premium that you're getting, even though this doesn't imply that there's no premium. But in general, it's just a matter of them stabilizing, holding up, and doing what they've done, you know, providing a good percentage of global transactions. And that will get you a long way if they could just not spend as much and not get killed with, you know, trends changing and going back to normal. You're coming back down here, so hold on. I mean, we were looking very squeezy in the morning, but I mean, you're still doing very great right now. It feels a lot better comparatively, but watch out here if we start to break down, and then, I mean, before you know it, it's 15 minutes till Euro close, and then that's it. What's stopping you from adding to the long term? I have no money. I think that's a good reason, right? Yeah, I don't know, but I have no cash. I've already invested, and at the same time, I made sure I didn't just go all in on one play this year. So even though plays have gone down, I mean, I'm diversified. I have Pfizer, PayPal, 3M. We got a little bit of the MPW. We have all the other stuff that's working, and then even MO. So I'm just making, then Disney too. So I'm making sure I'm getting a little bit of everything, but for the most part, I'm down to buy more PayPal. If I had more money right now, it would be my first choice. I would probably wait till after earnings, but it's definitely, it's one there. I'm kind of broke. I mean, I don't know how to describe it, but I'm like long-term broke. I have no cash. I've literally, I get my deposit. I'll have $2,000 in cash, $200 on the small account. But until I get the deposit, I have no flexibility to buy anything else because I've bought everything else. Mm-hmm. If you had to pick Enphase or SEDG, Tesla. I don't know. I liked Enphase for a little bit, like just because of how it moved. But honestly, with everything going on with all of these, I mean, you might be able to get a little bit, but you'll be good. You're all in. Low key, I've been all in for most of my life, sir. In a weird way to describe it, but yeah, in the long term, I am. I'm always all in until I need a house or something. Mm-mm. Girlfriend takes all the cash. Nah. Sometimes I ask her for her like, I need money from her sometimes. Well, it's hard to explain. She has one of my credit cards, so she carries it. And then that way, if I need it, everybody thinks she buys everything for me. And I'm like, it's not what it looks like. I hate it because then she flexes too. She acts like it's hers just because she'll know, especially if other people notice. Mm-hmm. I'm a sugar daddy? I told your mom to not tell you till you turn 30. That's crazy, but welcome. That's crazy. Your mom was supposed to keep that between us. Yeah, I hit you with the your mama joke. Damn right I did. You turned 30 last year. Yeah. So welcome, man. I got a house for you down the line. Unless I write you out the will. Thank you. Thank you. You got banned from YouTube for your mama joke. SMH rules for thee. Hunter Biden loves crack. Do you really think I only banned you on YouTube for your mama joke? I'm sure you didn't act like you were Hunter Biden and were in the chat with some out-of-pocket shit on the daily. I'm sure it was rules for thee and not for whatever. You know what I'm saying? I'm sure that is exactly what occurred. That your mama joke was that was the red line. I was like, Obama and Syria, that was my red line. I said, nope, you're not going there. I witnessed it. You soft at times. No, I just remember everything, unfortunately. So I know your baby back bitch. And if there's a pattern that you didn't pick up on, I will pick on your baby back bitchness before you do. That's what I'm saying. I could watch all the messages. I see them. I remember. I could refresh my memory. And I'm like, oh, this is a pattern. You see what I'm saying? You know how like I be looking at them charts sometimes? And you know I'm be like, yo, the level. And you know the levels? You know what I'm saying? All of you guys have levels as well, too. It's the same. That's what I'm saying. So, like, eventually some of y'all just stop respecting the levels and y'all keep going out of pocket. And y'all really think, you know, again, I say 1,300 hours in a year, bro. Sometimes I'm just like, you are out of pocket. It's time, you know, you got to clap them a little bit. If YouTube's freezing, it's pinned up there if you have any lag. Yeah, but it's good, though. I mean, at this point, though, the beauty is that most of you have already encountered me so much. So, to one degree, like, maybe I shouldn't be a little bitch at times, and the same thing applies to me. But also, at the same time, some of y'all know exactly what y'all getting into when I am in a mood. Like, you know what I'm saying? At one point, you know exactly what you're stepping up against. You know exactly what is like you should, if that is even to the point where you could tell me that after the fact, I'm assuming you are aware then that, oh, maybe Josh on this serious ass rant after clapping multiple people, maybe his patience is very thin right now, and maybe the little shit might get clapped. I don't know. Maybe. But hey, you know, I'll take responsibility, like I'm saying. But either way, I hope you're having a good day. Hunter Biden loves crack. It's literally his name. That's what I get banned for. You're friends with Nancy Pelosi. What? No, how did we get there? That's... Glad you're back. Yeah, we had an issue yesterday. I'm glad you're back too, man. Get ready, though. Today gets even more fun. Trust me. This is a Powell day. We even got to recap it. I still got to give you more earnings, actually. So let's go. Do I have Airbnb preview? Let me save it. Bro, I just love it, bro. I love that Airbnb. I can't believe it now. It's a milestone. They make more revenue than Hilton. I'm telling you, that's an honor to me. Oh, JG, I got a hype train. Let's go. Let's go. Hey, man, EDR running. Remember, takeover stuff earlier. EDR, big pop. It's only like 0.8, but remember, there was news of takeover stuff or like merging with somebody earlier. EDR, big pop. It's only 1%, but out of nowhere. So maybe Silver Lake said to seek Mubdala backing for Endeavor bid. I got news on that. There it is. So you got the first pop and the confirmation. What's Mubadala backing? Yeah, hitting red. We got that. I got it early just off the high-low ticker. So that thing started to pop. And then we have Euro close in 7 minutes, too. Yeah, what's a Mubadala backing? Oh, yeah, hooking me up with Ethereum, baby. Thank you for all that Ethereum. You didn't have to. All right, and then I got Airbnb earnings preview for you. Let's keep up EDR. Airbnb revenue 3.37 expected by analysts. The company guided 3.3 to 3.4. Gross booking value, $17.92 billion. Nights and experiences, 113. Gross booking value per night, 157. EBITDA of $1.74 billion. EBITDA margin of 51.7 and EPS of 211. Since last quarter, they are down 18%. SPY down 8.1. XLY down 12.4. Options imply a 9.9% move last 4 quarters. Loss of 11 or loss of 1, loss of 11, gain of 13, loss of 13. Revenue has beaten 10 of the last 11 quarters, and revenue has beaten consensus, or EPS has beaten 8 of the last 11, with 1 in line. Forward quarter guidance has beaten 5 of the past 8 quarters. Ta-da! Bosch Health Court dismisses Norwich's suit versus FDA. Oh, Roche had something, not Bosch. I want to flip Airbnb. It's going to be weird because this quarter, I don't know, did they guide? They guided lower, right? I don't know if their guidance was lower or not last time, but I think it was. But in this time, though, I mean, the economy has actually, oil was going up during here. We've had a lot of changes. So I want to see how it's going to play out. But even then, I mean, I just read you the thing. They've missed revenue 1 time in the last 3 years, and their earnings, you watch how it plays out. Even EPS has missed twice over the last 3 years, 12 quarters. So how it's going to play out will be interesting, but I don't know what the numbers will have. But at the same time, I'm hoping that if Airbnb blows it out the water, I really hope it gets the immunity reward in rockets because, like I'm telling you, I mean, we went over Hilton earnings earlier. Let me see if I can find it. Yeah, look at this. Bro, they shit on Hilton. Like, that's what I'm saying, bro. Like, this is not, that's the part. Oh my gosh, what happened? Bro, what just happened? I pressed the button on my E-Trade. Oh, and now it went over here. Okay, that was weird. But like I'm saying, just Airbnb, you got to go through the market and everybody dealing with the valuation. But, I mean, this got me super stoked. Again, their EBITDA, Hilton did I think even Hilton missed a little bit. But $800 million versus we're talking almost $2 billion of EBITDA. Again, their revenue is 2.6. We're talking 3.3. And that's revenue off of taking the fees. They're booking $17.9 billion of trade and travel. Like, that's why I'm like, man, I don't give a shit. You keep doing this, whatever, 4 years, it's at the weird spot. I mean, who knows how this, but we're already eating one of the OGs. That's what I'm telling you. This is the whole reason why I've liked Airbnb is again, the growth in tech in the market space that it's in. It has the ability to take market share. But remember, Airbnb wasn't bigger than Hilton. Now it is. So again, by both market cap and now revenue, gross bookings, even EBITDA. EBITDA is earnings before interest, taxes, depreciation, and amortization. So it's saying after, a couple expenses and everything before the finals, it's like a good measure of not necessarily pure profit, but how much they are earning before the nitty gritty of taxes, interest, debt, all of that. Get ready. Euro close. Honestly, we've had big moves from Euro close. With a day like today, maybe Euro close is a little event, but maybe this is bad timing for Euro close. Actually, no, I need to go to the bathroom, though. Is that awkward? I don't want it to go down on Euro close, but I do
adding
need
to the energy. And let's be clear,
follow me on
the
Instagram,
overweight
@thetrainingfurniture.
exposure
I love you.
within the strategy to energy, there's no other sector that can compare to that. By the way, the activity in this rebalance was the lowest that we've experienced since January of 2021. There's only 22 names that went in and out. So I said the other day, less is more. But we really maintained the energy overweight exposure. But I'll say this about energy. This is a prove-it quarter. This quarter, coming up, it has to happen for energy. Or I suspect that you will begin to see the strategy reduce significantly the exposure to energy. I think we're at that moment. I think we're at the moment where we've witnessed so far relative underperformance in the energy sector to the other sectors year to date, and now it's time for energy to step forward and advance from here and begin to outperform.
I mean,
it has to do that.
Brandon, it's the worst sector in October, down 6%. You obviously have a ton of exposure there. We get a ton of earnings tomorrow, before the bell, after the bell, even today after the bell with Marathon. What are your thoughts?
So I think from actually a momentum strategy, this is interesting because there's a ton of dispersion of return. So like this year, a Diamondback's up 18%, crushing the S&P, by the way, right? Each Energy Transfer up 10%. You see a lot of individual energy names have done very, very well, with the juxtaposition of a Devon, which I also own, is down 25%. So I think it really matters what you own. We prefer to play RSPG, which is the equal weight, because I don't want to have 40% of the portfolio in Exxon and Chevron. I want to have more smaller and mid-cap exposure, like the Marathons, like the Diamondbacks, and RSPG gives you that. And so you don't have just such a big, I think, headwind of what those two companies do. But I think it's a great momentum strategy going into the end of the year.
We're equal weighted as well, so we look at it the same way. It's not as if we have.
I don't know, bro. I showed you guys today or yesterday, but oil's a trip. The one, I guess, phenomena that I have observed over the last couple of years is that inflation time oil, we have really not had a period to determine what energy is doing without an armed conflict, unfortunately. So just like 08, or leading into the latter half of 08, I guess, but it depends how you want to break it down. But once again, oil is not like the fact that, it's one thing about inflation and everything else going on. Remember supply chains, but all the while, half of these charts that you split it up, it's one war here, and then now you got this other war here, right as it was starting to come back up. This was like the only period of like the war stuff kind of calming down or not reacting, and then sure enough, oil rockets back up, and then we're into another conflict. So that is a crazy phenomenon. That's why I'm like hearing about oil. I'm like, man, it's one thing to look at oil in terms of conflict, but now it's like we haven't really been able to look at oil in regards to inflation, lack of everything else. Rates are not going to get cut today. So the chance right now is that rates get cut in 2024 based at the end of 2024 based on the dot plot. The only real chance of that, and that's even reflected in the Fed futures, it'd be like middle of next year or end of next year for the first cut, believe it or not. We have not. You want to bet $100 for today? I'm down. Yeah. If you would like to bet, I mean, I don't think you're going to pay me, but I'll just ban you. I'll remember your name. So you tell me confirmed, and we'll lock it in stone. If they cut rates, I'll PayPal you $100. If they don't cut rates, I ban you or you give me $100. So if you're down, just say okay, say yes, confirm. Say less, I'll Venmo you. All right, there you. All right, we're on, baby, we're on. I don't want Venmo. No, you could do it on a super chat. That's fine. I'll let YouTube get in on the racket. They'll get some of it. And honestly, fuck out of here, though. You don't need to bet me. I'm telling you, if you want, I think this trade, if you're right, I honestly think $1,000 can turn into $100,000 if you're right. Just go fucking short the Zaza. What are you talking about right now? Don't bet with me. So again, if you go buy the Fed futures right now, don't even short them. If you buy them and we get a rate cut, I mean, you'll make hand over fist on just buying one of these, and then I think the loss will probably be $100, like you're trying to bet. So there is a way to bet the market maker instead of me, if you would like to go about doing that for today. Welcome to the market, baby. Welcome to the market. This is a very, very deep thing. There's a lot going on. How you buy /ZQ. If you really think there's going to be a rate cut, you fucking buy /ZQ. They cut rates. That's going to go from 94 to 99. And then boom, you just made like what, $1,000 a tick or something. I think it made like $50,000. I think you do 50 G's. You would do like, again, 1,600 to open it, or 2,000 to about 50,000 if they did cut. That's just to give you an idea of how surprising that would be. No one's priced there, but the reaction would go insane. We don't get the scatter plot because it's every 3 months, the summary of economic projections. So next meeting in December. If you think it's going to be a raise, you would short it, but I don't know if, again, none of that's going to happen, unfortunately. Like I'm telling you, the Fed futures are pricing in 100% odds right now of no rate hike, no nothing. Literally 97. This morning it was 99.9, I'm pretty sure. So it's kind of chilled out a little bit, but for the most part, the Fed has not violated this in the last 65 years or so. So that's what you got to watch out for. It's just that there's no real odds or possibility or probability that Powell is going to raise or lower rates today. He shouldn't do anything. Mm. %98 is not. That chart should weird you out. I'm telling you, man, because we were tripping out about November a month ago. And all of a sudden, even with the data, better, worse, whatever happened, those Fed futures blindly just priced in no hike. In a weird way, I don't know if they bullied Powell or not, or if Powell wanted it, but in a weird way, I mean, I did not expect a month ago that the decision would be this easy. I did not think a month ago that I would easily, 100% odds, 99, 97% to say, oh yeah, it's not, no matter what, nothing's going to happen today. You know, that's where I'm like, man, it's that's the weirdest part about all of it versus then, you know, just seeing it the day before, the day of, just in one spot. That's not as surprising. If he does nothing, we're going to have a normal Powell day, and then we're going to wait for his conference. And whatever he says, and depending on new information or not, that is how we will be able to react. Man, what are you guys talking? There's a lot of dating talk in the Twitch. I'm like seeing a couple of stock things, and I'm scrolling up through it, and you guys are like dating in 2023. What do you say? Summed up, 4s are 10s, 7s and ups are scams. Tattoos and thongs are supposed to be personality, man. And then they going off in here. They going off about dating scene. I think Stacy's gonna make a dating app. All right, man. So we've talked about cult dating before, but then I was like, I don't think it's gonna work with like a 99.7% male to female ratio. I don't know. You guys will definitely find a squad to play games with, though. 100%. How many times will you say data dependent? I don't know. Did you guys see the thumbnail for yesterday's watch list? I thoroughly enjoyed it. It was so good because I laughed. I giggled after I made it. And after I giggled, I was like, I don't know. If I laugh at my own thumbnail, that's for me personally. I love it. I love it, bro. I love this. You don't like this? I feel like it looks like a show. Like, I feel like if this was like an entry, you know what I'm saying? Like, like Family Matters, when they would like freeze it on the screen of like Steve Urkel. I feel like this is like Jay, just like data dependent Jay. And he's like, with like the music play, you know what I'm saying? I've been really just like, I'm like, oh, I wonder who the other characters are. And, but this is like, if it paused on him like in a sitcom, it would be data dependent Jay. Like, yeah. So I thoroughly enjoyed that. Could we get one for Yellen? Didn't I make one with Yellen? Oh, I had one. I had one queued up for Yellen the other day. I didn't use it. This was for the refunding. I didn't add any words to it. I got her old ass plotting and scheming. She honest, I ended up not using that one. I did do one with Yellen though, not too long ago. It was a good Yellen too. I was very pleased by it. Oh yeah, this one, bro. You don't remember this one? Biden lifting, Yellen with a barbell, bro. This one goes hard. This one goes hard, bro. Leo Ja, baby, welcome. As always, God bless you, man. I create these with AI. This is through Midjourney. This is super, bro. I've been doing this for like over a year. My first AI thumbnail was October of 2022. Or I think a little bit before that. So this has been around for a minute. That's why it's crazy, because like I should have just bought NVIDIA from the moment I made an AI thumbnail, but still, this is it's been around for a minute. You having fun? I have a lot of fun making it because it's cool. Like, I've never been like a artist, like a draw pictures type of artist. I've always had a lot of creative ideas, but I've never been able to put them to visuals. So it's really cool because you play around with it. I've gotten a lot better at it, but it's really fun. Like I'm saying the other day, like just playing around, I learned how to create other things. So it's like, it's cool. I don't know if I'd be an AI artist, but it's like, that's something in my life. Like if you ever see me draw a picture, dog, I'm the worst artist ever. And we're coming down right now, bro. Hold up. Welcome to Powell Day. 30 points from the top, back to 42. We're going to hug this. We are going to hug 4,200 coming into it. Back to the range. Yeah, 42.04. That's wild, man. So again, you're below 42.07, 42.09, all of those. CVC Capital decides to postpone IPO till next year. Good choice. Good choice. Should go back to the low yesterday by end of day. I think that depends on Powell. I think to make that judgment prematurely, I can't get behind it. If Powell is indeed, that hawkish surprise, then fuck yeah. I think, again, like I'm saying, I think Powell could bring us as low as 3,900 on the SPX. But until we get the data, until we have whoever knows what he's going to say, I think this will be the brick wall we'll run into where we could ignore all the technicals and everything, assuming the right setup is there. Again, the AKA Powell says the right things. If he doesn't say the right things, though, I could get behind death and destruction. Is there any correlation between the time Powell speaks and what he does? No. But, in my process of studying Powell, because I listen to it in real time with you guys, and then I go back and listen to them afterwards. I know I'm a weirdo, but that's what happens. That's what's created this. I also play 2K. But at the same time, what I've noticed is that when you go to read the transcript or go back to the previous Powells, it's not synced up properly, meaning that by the time they post the recap for you to watch it after the fact, then what ends up happening is that, the time he speaks, and if you wanted to see how the market moved, it's off by a couple of minutes. So I pay attention to how long it takes him to talk between when they start this speech and not, because that's right when he starts talking. That's where everything is going to be based off of. But when you go back to look at it, there is some differences. But other than that, there's no real correlation between how long he talks, time. There is the words he uses could be deemed as more dovish or hawkish, but that's about it. In the song Have It All, Uncle said, I remember what I read. I'm like the lender in the tree. A wee little man was he. Yeah, you don't know who the little man in the tree was? The lender in the tree? I'm not talking about JP Morgan or Jerome Powell. You don't know about Zacchaeus? Zacchaeus was a wee little man was he. He climbed up the sycamore tree. No, you ain't know that? Oh, yeah, look at that. Even Uncle Uncle threw that into a rap song. That's insane. Yeah, that's a Vacation Bible School classic. VacationBibleSchoolClassic.com. Oh, the latest Vacation Bible School hits. I got the joy, joy, joy. Zacchaeus was a little man. All of your favorites from church. BibleHolicsMixtapes.com. Don't forget the cult classic, VBS classic, Father Abraham had many sons. Order now will include this little light of mine. Free shipping and handling. Act now before interest rates go higher. Time to make that cover. Don't worry, baby. Don't worry. Oh, man. That's Tim. Tim's like, I see the opportunity. We're chilling. Where's AMD? That one ended up holding up. Wicked day, too. Thanks for the roses. All the banks are sound and resilient. And then what's this? You guys are talking. Man, y'all still talking about the girl? Honestly, these seem like good stories. I'm learning more about some of y'all, too. But I don't want to distract too much. Seems like there's, JG and Techno? So what's the moral of the story? Is it just don't trust these hoes, or what? I'm trying to get to the bottom of this. You say some random stuff. That's what 7 hours will do. I mean, usually if you haven't picked up, like, honestly, what happens is like I'll go on like a 5-10 minute market rant. You know, again, we were just talking the phenomena of oil, energy. We're talking about bonds. We're talking about Powell. We just went over the Fed futures. We're going into what to expect. And then usually after like 10, 15, 20 minutes, I just go off on a random tangent. And then we return to the market. That's usually how we do it. The moral is that there is always wolves trying to get into the hen house. Honestly, I think that's some good advice, regardless whether we may not like to hear that or not in certain contexts, but that's not bad. You don't need to defend your context to chat. Oh, I'm not. I'm just trying to open minds. You know what I'm saying? I'm trying to let homie in on the insight to like, hey, you're going to get a lot of random stuff, but like, you know, if you vibe with it and flow, I mean, what we cover in 7 hours, man, it's a lot. So just trying to put you on game, you know, no defense necessary, but defense wins game. The wolf tries, but the fox enters often. EYPT. Can't let evil into your circle and think it'll stay the same. Damn. All right, man. Got one trying to get into the hen house now. Bro, even then, though. That Inky, that was good, bro. I knew it. That shit was meant to be, bro. I'm glad you sent me that one. After listening to that, man, regardless, I don't know. He said a lot of stuff there, bro. Yesterday was the perfect day for me to listen to it. You have no idea. I even had a long drive, and I was like, nope. I was going to have to put something on, and I remembered. And after the first thing I said to you when you sent it to me, to now listening it, I'm like, man. So I don't know. Hopefully that'll help you out too, with regardless of what it is. If the rates are guaranteed to stay the same from the meeting, is that going to affect the market, or what from the meeting, just the conference? Yes. There might be a chance that they change the statement, and if they do change the statement, that could cause a bigger move. But for the most part, it was, I do think it's going to boil down to the press conference, and then him talking about longer term rates. Happy Jerome Powell Day, baby. Keep the circle small and evil out. Amen. It gave you goosebumps listening to it. Dude, it was awesome. Like, honestly, I don't even know who the guy was, but like after I was like, who is this dude? I started looking up, but it was very inspiring, bro. I actually was like, I was kind of mad I didn't listen to it earlier, but I remember that I was like, man, maybe I'm meant to listen to this the way that I stumbled across it through you. But I was very glad I got to listen to it literally yesterday. So it was beautiful. Let them bulls out. SEC charges SafeMoon crypto and its executives with fraud. Damn. SafeMoon. Yeah, I might make the Chad listen to it. Cause I didn't know who he was, and I looked into it. But he brought up some good stuff. The whole teammate, being a teammate, how he wouldn't change things. Oh, dude, I was mind blown listening. It was very inspiring. Honestly, I loved it. So however that all worked out, that was good. Bitcoin would have hit 100K in 2021 if shitcoins weren't a thing. Yeah, but you have to realize the shitcoins helped bring in money to the, it helped bring money into all of the crypto. That's the weird part. You remember, because crypto is already going up. It's like if there wasn't shit coins, I think Bitcoin would have went up a lot higher. But at the same time, without shit coins, there would have been at least 5 million people who would have never invested in a crypto at all without a shit coin. That's the thing you got to realize. The shit coins bring out the portion of the market you would never have gotten, or that would have adopted Bitcoin 5-10 years down the road. So again, they had to pay for it depending on how they got clapped with it or rewarded. But for the most part, like that, those shit coins, that's what brings in the level 2. That's where you had, again, you had guys like me bought Bitcoin super cheap. We're fucking loving it. And everyone's like, whoa, what the hell? Like, it's going up. But then once they see like, okay, I saw that go from $100 to thousands of dollars, but now there's one that's pennies. That's where you get all the people interested. And there were so many people who piled into crypto and still love it today, who would have never bought crypto in their life without the appeal of a semi-penny company or coin offering them, what you were looking around, you were waking up, random kids were making $20 million, $10 million, shit like that. Shitcoins also help push the leverage train with no one to justify the equity. Indeed. Now they have a bad taste about crypto. Some do, some don't. That's the ironic part. Like, that's why I love humans. You know what I'm saying? And like, this is where personality is so wild, man. It's crazy to think like your personality does vibe into investing. I hope you guys realize that. Like, you show part of your personality with investing. Because literally there's like, it's always fascinated me. I've seen some people who got only shit coins got washed the fuck out. And to this day, the crypto is their number one investment and they love it. It's so mind blowing. And then like you're saying, I've seen other people, they're like, I'm never investing again. They're like, I'm not buying crypto or anything or like this. So it's wicked to see how the same event caused, it's very polarizing or more or less a fork in the road. No pun intended, since we're talking crypto, but it forked people into two different directions. Very fascinating. Because again, there's some people I'm like, oh, he's going to hate this. He's going to be dreadful. No, it's like, that's his new career now. And he lost everything on it. And then the other guy who like literally only lost a portion or not anything small. And then they're like, oh yeah, I love this. Or they're like, I hate this. I'm never doing this again. Same thing with AMC and GME. Yeah, I don't know. It's kind of weird to this day, but it does share some similarities. But GameStop and AMC were limited. You couldn't go and work for AMC. You didn't want to go work a job at GameStop. Like I'm saying, I know people who knew nothing, were literally like engineers and shit like that, got into crypto, NFTs, made a little money, lost it all, but now their new career is working on Web3 and developing and coding, shit like, you see what I'm saying? Like that's where crypto had the ability to, even if it fucked you up, it offered, an economy to be a part of, and some people really did, and they loved it, versus all the other ones. Josh, I need all hundreds. We bet $100. What do you like? You want me to pay you in $100 bill? I think we can arrange that. I'll make sure it's available, but I don't know, man. I really think this is going to result in you getting banned. So I'm sorry to be the bearer of bad news, but this is honestly how I feel about this situation. I hope you enjoyed the attention while it lasts, but it's not. It's here today, gone tomorrow. Yeah, Web3 is the old busted. Honestly, it is weird. We did go from Web3 to AI real quick. Are you guys still hyped on Web3? I know people that still are, but what do you guys think? Are any of you still working on Web3? Do any of you see that as your career path? Define Web 3. All right, so we're going to start with Web 1. Then we're going to go to Web 2. And now we at Web 3. Duh. Easy ass question. Next question. Honestly, man, it means a lot of things. It means a lot of things. At one point, that's all you heard for 3 months. Oh, I have Airbnb because I was going to give you the preview. Oh, wait, I think I already did. Oh. AMD. I don't have CLX, no. Hype for putting music on Web3. It was really hype at first. Remember when they were doing all that music NFT shit and like people were making money, the creators, all of that. I still see it. Like I think even Justin Bieber still be selling songs on NFTs. We got 5G with AI now. E-Trade not loaded. Yeah, it's a Java issue. I had to update your Java. It'll fuck your shit up. But yeah, I've had weeks I couldn't even load it. Or it'd be like if I pressed the wrong button, it would stop working. You just got to update Java. A couple weeks ago, there was a day I couldn't even open up my E-Trade. But then I like re-updated Java, updated all the Java on my computer, and then it allowed it to work. It's very annoying. I've dealt with it. Like if you Google the problems, you'll find shit on like Substack and people explaining it. But like what I've realized is that just make sure your Java is installed, reinstall it, update it, and make sure like Java has permissions. And then be careful too, because if you give Java too much permissions, it could actually hurt you too. But that's what I did to fix it. Means decentralized web apps. Is that why the stream? No, I just had to fix my internet because we had an issue, and then I wanted to make sure we had no problems, especially coming into Powell Day and everything else. We're talking about fixing E-Trade. So sometimes your E-Trade Pro, it just may not load. Like I've had very weird issues where like it would take me 10 logins in the morning just to load it up. And even then when I load it up, it just wouldn't operate. And it's usually an issue with Java because E-Trade is it's a Java-based application. That's how everything runs and does it as fast. But if you have one problem with Java or you update your computer and your Java falls behind, your E-Trade will suffer for it. Yeah, again, weird day so far, bro. It felt very good in the morning. You're back to the first little level in the morning. Bonds were doing very good too. Bonds are still killing it. Bonds are still above pre-market, but they have calmed down from that little high. So, and then we did have Euro close. I think we sold off on Euro close. No, yeah, we went lower and we were selling off ahead of that. Just clear cash and replace CFG file. That used to work, but it's just, I'm telling you, something, I don't know if it was remember, it was like earlier this year, I had a lot of E-Trade issues, but once I updated my Java and made sure all of my Java settings were correct, that is the root of the problem I noticed a lot of times. Doesn't take an oracle to see that Java is your problem. Your friend ANET would have killed. 2 standard deviation, 163 to $9. Oof. That's good, but it's not at the same time. Because I would have never bought 2 standard deviations for $1.60. I feel though. But no, what time frame did you go on? Because I'm looking at these. So like a lot of them yesterday, they wouldn't have hit. So I don't, maybe if you had time, but 160 was kind of expensive. These ones went from 80 or 90. Like this, maybe next week's would have hit 50 cents to $3. Again, last time ANET, we hit 2,000%. That was this year on an option, just literally 3-4 months ago. Yeah, next week's you would have had like maybe 300, 400%. That's a little better, but everything else, I was kind of happy I only went with one play on the downside. But definitely, the ones with a little more, you would have got a nice gain. I mean, it ran and killed it. Late to the game, you recommend crypto to a new investor or stick to stocks, newbie? I would definitely stick to stocks now. Why? Because stocks are at a discount. You know, maybe not NVIDIA, maybe not Meta, but, you know, we were able to buy those last year at a discount, but you have way better opportunities there. And then I do think once crypto does come down, you may have a great opportunity to get in. But what JG is telling you, save 10% of every paycheck, every dollar you touch, put it into good stocks, and then use the 90% for whatever else you want. But, you know, if you start now, start early, build a portfolio of owning good names that you know about and that are really, you know, big parts of the United States economy, you're not going to go wrong. But I think, again, right now, just stocks are cheaper than crypto. So why would, you know, and if you are going to go to crypto, I wouldn't touch anything except Bitcoin and Ethereum. It's not a recommendation, just my opinion. SPX will break to 26? I mean, depends how bad things get. You need a lot of bad things. Gaza's Rafah border crossing with Egypt will open on Thursday to allow foreign passport holders to leave. Solana will take over Ethereum. It shouldn't. And if it does, you shouldn't want that. Remember, Solana was founded or partly founded by Sam Bankman. It's a fraud, unfortunately. Maybe it finds a way to rise with that history, but I think you're playing with fire. I just honestly think, call it a day. Bitcoin, purist. If you really insist, then you go on Ethereum. Other than that, I don't. You know, Solana may be good, but just don't forget its history. Solana is tied to Sam Bankman. Kava. No, everyone asked me about Kava. I still haven't ate there. And then I think every IPO this year has dropped too. Solana's still fraud, says the Twitch. He used his first time chat on that. And then Solana's been hacked 2 times. There's profits everywhere else. Yeah, I no shame in saying that. 2 standard deviations. Go look up the video or go watch every other watch list of the last couple of weeks. You know, I've made an effort to recap it on the big earnings. I think at least once this week or last week. Otherwise, you could search how I turned 160 into $2,000 on Tesla. I literally explained standard deviations. Not one link mentioned. I don't like crypto. I don't think you guys get it. Like I'm telling you, the Sam shit, the fact that it's outperforming. I mean, again, I didn't like the market this year, and then eventually it comes down. But with crypto, bro, it's just something's wrong with crypto, in my opinion. Something is very disturbingly wrong with what has happened since Sam Bankman. So, again, I still own some crypto. It's not as if I am, again, I tell you with everything, my answer to this next decade, it truly is diversification. But I just don't. I can't get behind it, unfortunately, until we let things wash out and it actually real consequence. There hasn't been a real consequence of multiple frauds, hacking, scams, all of it, and it's still holding a price that I'm up, still 50,000% on or something ridiculous. So all I'm saying is just that, it's there. Sam is old news, but I'll respect yours. I feel you, but I've been in this space for a while and I've seen a lot of shadiness and things get over it, but I'm just telling you that the Sam thing was gargantuan. The Sam thing, the collateral. Remember the issue, you saw how the market freaked out about collateral that was a government related bond. And you don't even fucking know any collateral attached to however many billions of dollars of Sam, all the intermediaries and all the other parties. So I feel it. I'm not trying to get people to not buy crypto. And if you do like it now, that's on you. And again, I own a lot of crypto still. It's not as if I am a no coiner. And, I got a bag. I got a gigantic bag in crypto. But at the end of the day, it's not I'm not down to throw new money at that right now. And I don't think getting in on crypto now, it just does not remind me of getting in on, I told you guys at 10,000 in 2020, back in the day, literally go to the trading fraternity. You will find videos of me in 2016, 2015 telling you to buy a Bitcoin. It's like, I love this space. Don't get it wrong, but I don't think now's the time to start anything with it. And just, it's hella weird. And unfortunately, there hasn't been a consequence of some of the most deepest shit involved in it that is related to collateral and a lot of things. It still creeps me the fuck out. Unfortunately, I'm just creeped out by it. Wait till the tether drops. I love this space, but I get your point. Yeah, I know it because you see it's outperformed this year. So my take has not been helpful, but like I'm saying is just like I don't mind holding Bitcoin as a long term and adding it in there. You know what I'm saying? But that's it. You're right. It is the most transparent system we got. But for some reason, your judicial system and your government, you don't know who are the creditors. You don't even know the collateral. Once we found out banks' collateral was dog shit, we were down 20% how fast? Bond yields ripped how fast, right? You literally, the minute we found out one bank had bad collateral, that bank was sent into receivership in 48 hours. Same thing for the rest of them, right when their collateral got threatened. And that's why I'm saying you have been denied access to the information on the collateral that has all been tied to Sam Bankman and potentially upwards of $10 to $20 billion of fraudulent transactions that have got to spread through the ecosystem for over a year and a half, 2 years. So that's all I'm saying is that's weird. It is transparent, but until they tell us what wallet is what and that, who's holding that, it's insane. That's why I'm like, to not have a consequence and go up 30% from there, something just does not sit right with me, unfortunately. But homie, you talking like someone is going to fix the broken system. All we want is to make like 500 on a shitcoin. So we're not having a real discussion then. Again, I bought Bitcoin at $300, like 300 nominally. No abbreviations, no nothing. You get what I'm saying? Like, I get it. I want people to make money. I want people to make more than $500. Again, the last alert we had on buy Bitcoin was buy at 10,000 in 2020, and then I sold out at 43 to 46,000. But it's not about the money in the sense like you can make money. You can make $500 a day flipping it. I'm not against that. But if you're trying to say that you want to go and buy it and hold it and treat it as a long-term after it rallied another 35% this year, I'm just still scared of crypto is my answer. You can make money as much as you want and go back and forth all day. But yeah, it's not what I just don't think that opportunity of buying and holding on it right now comes without a massive amount of risk. The SPY's not up that much. I hate to break it to you, unfortunately. And what I mean by that is that you pull out the chart, we've been at the same spot almost for 3 years. So again, if we move up here, you were here October 2021. Again, even August, October, we were a little lower, but like you start looking at the chart at different points, a lot of things have been very stable, believe it or not. That's the irony of all of it. Even Bitcoin, I mean, this one's actually lower. So like I'm saying, I think I sold out around this drop. It still hasn't even recovered that. I wanted to get out here, but my escrow didn't open up till later. And again, you know the story, but in general, it's a pretty wicked chart. Even the 3 years now, Bitcoin's same 3-year spot. Beginning of January when Elon pumped it, you're at the same spot, but so many things have happened, and now interest rates are higher. You don't know the full extent of the biggest frauds that have occurred throughout all of it. I don't think it's the same entry of 30,000 with Elon getting in. It's not the same, unfortunately. At least in my opinion. But again, I already have some, so it's not like I miss out on it, but I'm just not really willing to add more to it at this point. Waiting for a break. Well, market's moving around here. We're waiting on Powell. We got over Euro close. This was Euro close, so we're back up to the Euro close point. Maybe it does, but just watch the 4,200. Very solid points. I believe you have massive upside on alts, but don't buy right now. I feel you. As long as you approach that responsibly, you'll be good. Because until crypto opens up buying opportunities, you should probably be buying bonds or getting yield back on your money. You see what I'm saying? Again, I have all of that crypto money in bill for the last couple of years, or the last year when we did it. Again, I took the money, I bought houses with it. I've been waiting to buy back in. Again, all of that profit that I made, I just stuck it in a bill, waiting for the time to go buy it. If interest rates are higher than it's ever been, I'm down to collect off interest for this period until crypto can return. And once we get low rates and all of that, and then you let more things work out. The entry you missed, that's why it doesn't make sense. It doesn't make sense because my previous entry, which I thought was high, that $20,000 you're talking about is still higher. You can't even pull up my entry on a 3-year chart. We got in October of 2020. So literally Bitcoin was like $9,000-$10,000. And again, I bought at 300. I was like, it's expensive, but with what was going on, the halvening, the low rates, everything, I said it's time. And again, we did it all live on stream. But like you're telling me now, after all of that fraud, that 20,000, 100% higher than even my last purchase there, which was a phenomenal purchase. I can't justify that with everything that went on again, and with interest rates paying out. So eventually it'll go. I'm not saying Bitcoin's going to die, but until there's more clarity and more macro calming down, that's it. Yeah, sub $100 or less for Tesla, unfortunately, if you want that in the long term. Big dilemma. You short a 0-day put credit, 414 to 416. The max gain is there. I want to close before Powell. It's costing me 30. Just close it. That's fine. I mean, $200 max risk, so you're still limited. But at the end of the day, if you already have if you're going to go $30 for Powell, that's insane. The extra 30 for Powell, just take the other 170 and call it a day. Do you know any successful funded traders on Wall Street? Again, most people that I've ever encountered Like even if they started as like a retail trader and wanted to do the trading for a living, if they actually killed it, they just ended up going to Wall Street. So they just ended up making their own hedge funds and other stuff like that. But I don't really interact with too many like traders, if that makes sense. Besides, I mean, the cult, but like I don't know what people are doing, more or less. TLT is wrecked because inflation was coming back up, then economic data got good, and then Jerome Powell started talking about how he's going to raise it up, and then that's it. Prop firms are a scam. People will tell you differently, but I don't get paid, nor is my money with them, so I'm incentivized for it to work out. So again, they don't hold my money. I'm not hostage, nor am I promoted to say it, but we're not going to get into that talk today. It gets people riled up sometimes. JP Morgan, I think our purchases are 126 and 116. So I think below 116 was fire. I think even 107 we got some. Do hedge funds like Michael Burry have long terms, or do they trade? I think the aspect of a hedge fund, unless it's like a fund where it's to hold long, I mean, they'll hold some stuff, but it's not, they don't have the same commitment of 10 years minimum. A lot of funds don't run like that. If anything, those are just the family offices now of the day and the bigger funds that they're not necessarily there to go after gain as much as capital preservation and just, adequate growth. Yes, I ban people for the promotion. I don't trust any of that things. I mean, you could do it. You could come in here. Oh, I banned you. I meant to time you out. But yeah, again, I mean, it's simple. You like things. You want to share something, share it to people privately. But I'm not going to give a platform for people who sell shit most of the time. The only time I've ever done that, I've given Hugh, it's like usually if they're down to provide info and they'll do it without asking for anything and are willing to share their info and stuff like that, that's what I could get behind. You're the only IG, the only influencer that does not follow you, and every other one, and nobody follows you. Well, yeah, because then you'll know where they got it from. But I feel, yeah, it's all a little club. But that's the thing. I don't play along. If you guys haven't noticed, I am not good for brands. I'm not good for business. That's it. I speak my mind. I have enough money where I don't want $1,000. I don't want your $100,000 promotion. I'm not here to circle jerk with you to go sell something. But unfortunately, I mean, you see it. You could get ganged up on pretty easily. All it takes is 5-10 greedy motherfuckers who want, you know what I'm saying? That's it. But I'm gonna keep doing it. But I'm not here for business. I mean, I'm here. I really do love it. Again, after listening to that Inky thing that he sent me, bro. Dude, I'm telling you, it's for real. This is something I love, bro. You have no idea from the moment I turned on the stream when nobody was here, how my life culminated, my experience and everything that led up to the moment where I could turn this on and share it with people and have a genuine connection where it's, again, where I'm saying yo, you should have access to the highest level of stock stuff without anybody throwing a paywall at you, fucking with you or not. And again, you see it. You see the reality. You've watched me do amazing. You'll watch the good, the bad, the ugly. You know what it's just, but at the end of the day, I love it. I love being here. I love what I'm doing. The people around me know that. It's all of it. But, because again, bro, I've seen views go up. I've seen views go down. I've been punished. I've been rewarded. It's you don't keep motivation to show up if that's not the case. If I didn't really love it. And that's why I'm saying, there's not too many people out here who love this shit. And, I'm not here to just promote myself and, saying I'm better than everyone, because I'm not. I'm a piece of shit too. Some of you have got to see all of it. But at the end of the day, it's just a lot of don't underestimate. Wall Street is a lot of money. Everybody wants to part you with that money. They're going to sell you stuff. They all work together. Again, they'll be nice to you if you help them sell more shit. If not, you're going to be ousted. It's the same, dude. It's the same thing as a lot of other industries. But, I hope you just, I hope you can learn the love that I have from it, because I know you will be successful. And if you learn the long term and those skills as well, I know you will be successful. But it's like being here for the right reason, being because you want to, doing it because you love it, man. Nothing will ever replace that. And you'll see through all the bullshit. You'll have your ups and downs. You'll sometimes good, sometimes bad, but you know, it's there. It'll do a lot for you, but you got to have the love. And just, again, I said this the other day, a lot of things in the market, they're trying to give you everything you want with like a minimal amount of effort. And that's why, you know, that's how you know it's a problem. Trying to give you everything you want with a little amount of work, you know what it's set up as, but that's what this whole industry is built on, you know? So, amen, but it's all love, baby. It's all love. On prop firms, it's a scam. I'm telling you. It's not, you know, we've had a lot of talks on it. Maybe later, you know, we got to start preparing for Powell here in a little bit. We only have 30 minutes, man. A drone attack on coalition base in Syria causing minor injuries. Confirm the bet's off. Don't ban me. Sir, you could buy your ticket out. I'll let you buy it out for $20 right now. But you guaranteed me $100 if I was correct. So if you want to buy out early, $20 to that super chat. Otherwise, again, in 30 minutes, we're going to make our decision. Would you like insurance? I hate when they ask me for insurance at the table. You know what I'm saying? I hate it. I'm like, no, I don't want insurance. I'm poor. Then why did you make the bet? I mean, that's crazy. All right, man. Should we do it now? I guess 11, 12, 1, 2. Yeah, we have 30 minutes till. Give it 5 minutes. Let me go get me a drink. Let me go get me some water. Let's, go pee for a little bit. And then we are going to, we're going to see what happens, man. We're going to see what happens. That's it. We're going to go. We'll recap everything, though. So in about 5 minutes here, let me go to the bathroom. Let's get this all set up. And then we are going to begin to go over Jerome Powell. I guess we could wait 15 minutes before. I'll give you mine, and then I'll see if I could get analyst comments. Yalla. All right, I'll be right back. Follow me on Instagram at The Trading Fraternity. I love you. God bless you. GG. And I'll see you soon.
So the subprime lending market, competition heated up in 15 and 16, and there were a lot of new entrants to the space. So issuance of subprime auto ABS has been at record levels over the last few years. So there's just a lot more transactions underlying the index, including those from smaller, newer, deeper subprime lenders. So there are lenders that are even at 20+% 60-day plus delinquencies. So it's a dollar weighted average, and I think that's an important part to understand is that the composition has really changed. But no doubt, right? The subprime borrower is under stress. Rates are high, persistent unemployment, persistent inflation resulting in reduced real income. The subprime borrower has exhausted the pandemic-related savings that they built up. So delinquencies and defaults are rising.
How much of this it is important to understand the composition and the change there, and thanks for pointing that out. On the other hand, not on the other hand, but in addition to that, right, we have gone through this pandemic where people got these stimulus checks, right, and they were allowed to work at home. Many people may be finding ways to make more money with less work and reaching to a car payment that maybe wasn't advisable. How much of this is a leftover, kind of a hangover from the pandemic?
Yeah, I mean, certainly in, sort of mid to late 2021, when we saw government stimulus run out, we've seen incremental increases in delinquencies, particularly in the subprime space. But really what they're doing is just pulling themselves out of these historically low levels. So, I think that there's still a lot of utility in the vehicle and in the priority of making that payment. So, that could be a factor that mutes the effect of further deterioration.
What is this going to mean for credit, or what do you see when you look at especially these new entrants with such high delinquencies? Are they much more resistant in giving out credit? Are they starting to pull back?
Subprime lenders are pulling back. Sometimes they're reducing or even eliminating that lowest credit tier borrower. They're also making changes to things like thresholds for PTI and DTI. Subprime lending has really shifted into where underwriting is so automated that lenders can make changes in reaction to the environment very quickly, and we're seeing that.
Margaret, thanks so much for your time. Interesting story, and this is the kind of data that we really need to watch, and that the Fed is watching, I'm sure, as well, in order to make interest rate decisions for the future. Coming up next, speaking of that, the surveillance team takes over as we await the Federal Reserve decision at the top of the hour. Tom and Lisa joining
at the top of the hour. All righty. Chattadonia. Y'all ready for this? Down. 30 minutes until the Fed FOMC, an hour until Jerome Powell. Okay? So, don't forget, it is the statement, and then you are going to go over the press conference that's 30 minutes later. Hold on, I forgot to send a stream alert if anybody wants to recap this. There you go. I'm glad some of you paid attention and listened earlier and through the watch list, because we've said it a lot here. So give it a couple of minutes. But I don't think today is going to be that crazy, in the sense that a lot is expected for nothing to happen. But there is a couple of things we got to be watching out for. So you should know by now. I hope you know the key words, and then we will see what is up. Bagging it. Yeah, go to the Twitch again. No, it's YouTube. So literally, I have two of these, bro. So again, I have both going on right now, but my YouTube one, this one will just cut out randomly. So we have a backup stream if you don't want to miss anything. Again, that's pinned above right now in the YouTube comments. Refresh. So, anyways, like I was telling you, the word that you need to be looking for today is financial conditions. I don't know what's going to happen, but the way I'm looking at it is I do believe when you hear him say financial conditions today, he is going to talk about long-term interest rates. So when he does that, I think the market is going to move on those candles. So during the press conference, if you hear him talking about financial conditions, tightening, loosening, bringing up long-term rates, that right there, those are going to be the candles where you rip and drop off of. I really do believe that for some reason, just because that was the latest stuff he's kind of talked about, and that has been the major story. Okay? So that's the first thing that I really want to make sure everybody knows. But then, like I said on the watch list yesterday, the problem that I have is that I think a lot of the market has ignored the context leading into Powell. That being said, I think initially, whether it's at the statement or whether it's when Powell starts talking, right? I believe that right when he starts talking, it's going to sound very hawkish. He is going to, you better expect it. Everybody in the world is expecting this right now. He's going to say his statement talking about how if inflation goes back up, he is going to, he's going to add and do this and do that, and he's not afraid to raise rates, right? But above all else, I still think the market is going to respond hawkishly initially. Why? Because the context of the last 3 months, before we were reacting to anything here, we were dropping because of oil going up and economic data being very strong. Even Powell, at other times, that's what helped him come up with that dot plot that caused all of this. Powell is aware of all of these factors. So that's why we do have to just watch out for his attitude today, because Powell's not an idiot. I said this on the watch list yesterday. You really have to understand this. Jerome Powell knows what he is doing. He knows what will sound bearish, what will sound hawkish. He knows that the market will try to front run him. He is very well aware of the communication mechanism. That's what he says. You've heard this from Powell. He says he is aware of the communication method. He is aware that if he says something bullish, the bonds will get a bid. If he says something bearish, the bonds will sell off. He is aware of that. So that's why I'm just saying, regardless of anything else I'm telling you about today, just be aware of his attitude. You know what I'm saying? Just the little words he says, how it strings together. But like you'll know if he's being cautious or not. You'll know if he's responding to, and what I mean by he's aware, bond rates just blew up. You know what I'm saying? The last month, the last 3 names, your guy is aware of that. That's why I'm telling you the financial conditions with long-term rates is the most important thing here, because he knows what has happened. He knows the impact, and he knows that the markets are already reacting to this. So how he wants to go about addressing that, I do think that's going to be the meat of the bone. But like I said, going back to the beginning, though, why do I think Powell will be interpreted as hawkish? Initially, I think it'll be hawkish. Then after that, I think they're going to brush it off, or we're going to respond to whatever he says about said financial conditions. But the reason is, people are missing out on the context, but also that is what happened at the Fed minutes not too long ago. How many of you remember? It's actually the start. I believe it was right here. Let me double check. I'll get you the exact date so there's no confusion. Yeah, August 16th. Or no, October 11th, was it? No, it was October 16th. Or August 16th, excuse me. Right here. We were already dropping, and then we died right here. Why? Novo hires Fujifilm unit to fill Wegovy weight loss drug. Oh, that's good news, I guess. Because remember, they're running out of supply. That's been their problem. Why did we drop August 16th? The minutes. The Fed minutes. We never move on Fed minutes. And then that led to your first little flush here, where it's also exact spot that you flushed leading into where you are today. The last rally. Why? The hawkish pause. Hawkish pause, hawkish skip. Remember, it was one of those, the meeting before, right? On July 26th, look at we were doing good. You had the up and down, you went up, but then when we got the minutes for that meeting, we were reminded of the hawkish skip. We were remember at the time, Powell said we're going to do one more hike and then we're going to start slowing down. He kept it around the same, but he was being hawkish about all of it. And then what happened? Once we were like, yeah, that's good. We started dropping, and then a couple weeks later, we were reminded about what the hell he said during that speech. Even though the data was old, we were reminded of how hawkish it was, and everyone was like, damn, the minutes were really, really hawkish. And then everybody started selling off. So no, the SEP was right here. So you didn't get a SEP. You got a SEP in June, and then in September, not in August. This was just the Fed minutes. We had the biggest reaction on Fed minutes, and it was all because of the hawkishness that preceded 1 month before and you already knew it all. It didn't even matter. You already had the Fed meeting and all of that, and we still had that reaction because inflation was up, the data, and everything else, and then it led to this type of reaction. So that's why I'm saying I do think that the last couple of months, we had a reason for Powell to be bearish, and then lately it got bad with financial conditions. But now I think once we hear what he has to say, a lot of it will be on an older context, and that's going to scare people. But then once he starts getting to the new stuff, then it's going to be a toss-up of either bounce or not, or good or bad. This is just my opinion on all of it. So that's the first thing, and then the first two things, and then like I said, it's boiling down to financial conditions. I'm telling you. Otherwise, everybody today says this event should be nothing. Believe it or not, most analysts, most funds, they've came out today and said, well, the data in the morning was more important. People thought the bond refunding was more important. The data, whether or not we actually get relief, they're saying Powell is going to stick to the same script, which I agree with. I think he's going to talk about he's going to make sure and this could come out as really hawkish, but he's going to make sure that he is not raising rates, but he will if inflation comes back. So other than that, though, it should be a simple meeting today. There is the possibility. The only other thing that I boil this down to is that although everybody wants it to be a non-event, I'm worried about the financial conditions and how he discusses it. But the fact of the matter is, you're right at the point. So I think this is going to open up the door or the trap door, and then we go from there. And then the final thing, I'll just tell you, because I told you guys early today, again, I'm recapping a lot of what we were speaking on in the morning and on the watch list, so you should all be prepared by now. But the only other thing that I would say is that there's one event where we die today. There is one specific scenario that I believe will lead to death and destruction instantly. And that would be if Jerome Powell talks about long-term rates and he talks about their effect on financial conditions, but he says that long-term rates need to go higher for them to feel better about stopping inflation with long-term rates. So if he pretty much says long-term rates need to go higher for us to get to a place where we feel confident, then that will be the most bearish thing of the day, of the month, of the year probably. Because then that's Powell greenlighting, destroy the long end of the curve so that we could slow the shit out of everything down. But then again, that would be a new change, because last time he discussed it, and this is what I mean. If you're not understanding what I mean by financial conditions, why that's the most important thing you need to listen for today, you may be missing out the point, because you need to understand financial conditions in context of higher long-term rates. Do you understand? Powell has already addressed this in the last 30 days. But the whole general idea is that when long rates go up, it tightens financial conditions. So that's why if the financial conditions, we've gotten tightening, but then you have to ask yourself, is Powell, is that going to be good for him? If he says long-term rates are doing a good job of tightening, then everything's good to go. If he says the reverse, then you have a problem. Stream keep cutting out. Refresh if it is. I don't know why it's doing that. Again, Twitch is working beautifully right now. Senator Kennedy? Exactly. Let's see what we have here. Thank you. Play him. How do you press play?
Grocery store. Inflation has fallen, but we all both know that's disinflation. That just means it's going up less rapidly.
Exactly.
Prices have not fallen.
Fair point.
I love him.
Unless we have a recession, a fairly serious recession.
This is great. Before Powell, are you fucking kidding me? Thank you, Lord.
For the rest of our natural lives.
Employment, however, is very strong by any standard.
Very strong.
You cannot give that a D.
And if you look at history going all the way back to the 1950s, the 10 periods of disinflation that we have had since then, based on history, unemployment ought to be minimum 6%, 7%. It's obviously not, and that's a good thing. But I think what has skewed that was the pandemic, and there was a lot of slack in the labor market that has been absorbed. But let me say it again. I give it a D.
I honestly,
because the economy
help me get an interview with
American people, not vice
I'll try,
versa,
but
and
like,
American
listen,
people because of
Chad,
inflation,
if you could get me an interview with this guy,
badly, and
I will
even
sit down
those
and talk to
who
him for
have
10
seen pay
hours.
Raises have not seen raises higher than the rate of inflation.
Exactly.
So if we turn then to, the top orders of business in Washington, foreign aid, obviously one of them. We were just talking to Congressman Sherman about how exactly that's going to happen. Not clear if these IRS cuts are the right way to try to offset that spending. Is it important to offset that spending, or just more important to get the aid out the door?
Because he's so funny.
Well,
I love him.
I'm glad to see somebody is
I don't even know what
about
policy he stands
offsetting
for, but
spending and not
his
just borrowing more
personality
money.
has just drawn me.
Looking at, I think, the way most Americans look at it, there are two major issues right now.
He's
They're
being
not the
calm
only
right now,
issues.
too. That's the crazy
Number
part.
one, the biggest
He's
domestic
being
issue
more
is
politically
inflation.
correct on
And the
CNBC
president
than on the floor of
does
Congress.
not have a plan to deal with inflation.
But the Fed does.
Because the Fed does. But you can't really get inflation under control unless you attack it on the monetary side by the Fed and the fiscal side by Congress. And the reason that the president doesn't have a plan for inflation is because it would require him to spend less. Number two, the biggest international issue obviously is parts of the world are on fire. And it is clear to me that China, Iran, Russia are working together. Their goal is to have China dominate the Indo-Pacific and sub-Saharan Africa, have Russia dominate Central and Eastern Europe, and have the Ayatollah in Iran dominate the Middle East. And that is not a world that is safe for America, and we have to address it.
So let's talk about the question of sending military aid to Ukraine and to Israel at the same time to fight Hamas. Do you expect that those two items
been on
will
news
move
for too
together
long.
through Congress,
He's
move
like Iraq.
separately
Oh,
through
I meant
Congress, and where
Israel.
specifically are you on sending more military aid to Ukraine, A, and aid to Israel?
Good question, as usual. Right now, present company excluded, most members of the media on Capitol Hill are interested in talking about process because process is sexy. Who's mad at who? Who's up? Who's down? Who's
Exactly. Process is sexy.
I'm interested in substance. We don't know what's in this bill. We know it covers Taiwan, Ukraine, Israel, the border, and a whole bunch more domestic spending. But we don't know the details. And I had a conversation.
This is the bill that's come out of the administration.
This is a supplemental. And I had a conversation with Mitch.
He voted no on the CHIPS Act, the debt ceiling suspension, and on the Inflation Reduction Act.
We need some language that everybody can look at so we can look at the substance. Forget the process for a second. Okay? That's what a lot of people want to talk about. Has the House gotten the edge over the Senate? I don't care. That's not, I'm interested in the substance.
Don't the dollar figures tell you the substance? It doesn't sound like there's that much in the shadows here if it's basically as described for Israel, Taiwan, Ukraine, the border. We've seen the dollar amount. So what's the holdup?
It's how they spend the money. I've seen plenty of money go to presidents for border security. Well, define border security. Some presidents define it as securing the border. Others define it as
don't say
more
sexy.
welcome
Nightbot will
mats.
time you out. He thinks you're a sex bot.
How they're going to spend this, how much of the money for Israel, for example, is going to go to humanitarian aid. I'm not against helping innocent people. I want to help innocent people. But I want to know how much money Europe's putting up, how much money the Arab League's putting up, how much money the EU's putting up, how much money the UN is putting up. I want to see what the assurances are that the money we give for humanitarian
He's not as fun when he's not in Congress.
Doesn't go into the pockets of Hamas. Now, that's just one example out of about 100 questions I have. And again, while the process is cool to talk about, and I get it, it's important, the substance is a hell of a lot more important.
I want to come back to a point of substance, and that is, do you see yourself and the majority of the Republican caucus in the Senate voting in favor of additional military aid for Ukraine?
Conceptually, the answer is yes. And I say that conceptually because, Tyler, we haven't seen the details. And the border security is important. It's going to impact that vote as well. You can talk theoretically, metaphysically, all you want to about, do we want Ukraine to win or Putin to win?
Of course, you could talk about it with Peter Pan, but it doesn't mean it changes the process.
But
where's it going?
It's what else is in the bill and how it's all tied together.
And how's it all
You'd be able
tied?
to work with the news. Are you both Louisianans?
Yeah,
now?
Mike's a great guy.
Is that you think that would help?
I'm delighted. He's whip smart. He's humble. He's consistent while being self-confident.
Can he do president?
He does great impersonations. He does. He does great impersonations. And let me tell you something. He's a nice guy. If you don't like Mike Johnson, you don't like Border Collies or Golden.
There it is.
He's just a really nice guy.
If you don't.
I would say
exactly. There you go. I'd take a deal and I'd bear hug it and French kiss it and I'd take it home with me. Exactly. Amen.
I don't know what the
I reclaim my time.
All right. We have to leave it there, Senator.
Okay, thank you. I yield back.
Did I say French kiss on the air? That's okay.
You did, and we're happy.
He said, do you want me to French kiss your hair then? Is that more acceptable?
Thank you.
Thank you.
A quick check on stocks, which are losing some steam ahead of the Fed decision.
They're trying not to die of laughter. Look at them. That's why they cut the screen off so quick. So was that Carl? The Carl Quintanilla? I don't know if that's him or not. They cut it, bro. They were trying not to die of laughter, bro. They're like, because that's it, bro. He came in at the end. He was like, and exactly, I'd give it a bear hug and then I'd French kiss it. Am I not allowed to say I'd French kiss it on the forehead? A little bit of tongue action. Yeah, can I not say? That's fine there. It's simple. Metaphysically, it'd be a metaphysical. I'd kiss it metaphysically with my tongue if I had a deal presented to me like that. But until then, it's just process and processes. Exactly. I yield back. Thank you. Have a wonderful evening. That's great. I can't believe we got it. He's hilarious, bro. That's what I was telling you. I was like, that one, he seemed more calm, but, oh, dude, don't let him get to you. But now, Chattadonia, I still got more. We got 10 minutes till Powell. Not to fear, so here it is. What do we got? The Fed is widely seen holding the benchmark interest rate today in a range of 5.25 to 5.5 at today's meeting. We heard from a slew of policymakers leading up into the event. Leading up to this meeting, and even some of the more hawkish members signaled that they supported a pause. If that happens, it will be the second consecutive pause and the first time in the tightening cycle that they have held rates for so long. So again, the back-to-back pausing, baby. The back-to-back pausing. Oh, remember, they paused. That's what it was. They paused in July, then they restarted, and then they paused. They tricking you. So I think we did technically have more than 30 days, but then it adds up. But again, because they've re-raised it, but now this will be 30 days and then 2 consecutive pauses. This will be the first time. So here we are barreling toward the end of 23, and who could say for sure that the Fed has finished raising interest rates? While no change is expected today, Powell will likely warn that inflation remains high and that further tightening may still be needed. Not everybody is convinced by that message, but not everybody is convinced that inflation is on a glide path back to 2%. Regardless, it has been another extraordinary year, and remember that as recently as March, derivative traders were betting on rate cuts this year, barring a shock that that's probably not going to happen. From Bloomberg's economics Anna Wong, she says, in a well-telegraphed move, the FOMC will likely hold rates steady for a second consecutive meeting. Even though core inflation crept up in September, a whole summer of disinflation means end-of-year PCE inflation is likely to undershoot the Fed's latest forecast, allowing officials to wait a bit before deciding if a final rate hike is needed. The Fed is likely to maintain its tightening bias after recent economic activity. Surprise to the upside. That said, Bloomberg expects the labor market to cool quickly over the rest of the year, which is why we do not think the Fed will hike again in 2023. One of the big reasons Fed officials feel comfortable pausing again is the recent Treasury rout. Yields on the 10-year note have climbed more than 100 basis points since July, briefly rising above 5% in October. Some policymakers attribute a lot of that move to a rise in term premiums as an increase in the compensation investors demand for bearing interest rate over the life or the risk over the life of the bond. The development is obfuscating the need for more Fed action in the short term. Market consensus has generally bet on the FOMC leaving rates unchanged. Equities-wise, this isn't necessarily a bad thing. Bespoke Investment analyzed the average path of the S&P 500 on Fed days since 1994, and the FOMC began releasing its decisions on the same day as the meeting. The chart below will show that when policymakers hold rates steady, the S&P 500 has risen an average of 0.2 compared with 0.37 gain when rates are cut and 0.21 gain when rates are raised. This is so literally the market goes up no matter what is as the outcome. So literally, if you raise rates on average from the 1970s or whatever, you go up 0.21. If you hold it, you go 0.26, and if you cut, you go up 0.37. So not bad, I guess. Bloomberg intelligence strategist Ira Jersey says that markets will be keyed into any signaling from the Fed meeting into the statement and press conference. And though he doesn't expect any revelations, the market could shift meaningfully, particularly into the end of 24. He notes options on SOFR futures are pricing for the Fed to remain on hold or cut rates well below 4% for all of 2024, widening the scope of the movement. Key thing here will likely be seen in both the statement and Powell's press conference in the willingness to keep a door open to future hikes. Many Fed officials aren't ready to say they're done hiking, pointing to persistent strength in inflation as something that may warrant more interest rate increases at a later moment. The period between the September 19th and 20th meeting, and this one has brought some surprisingly strong readings on inflation and the economy more broadly. Here are some third quarter headline numbers. Third quarter GDP growth was a whopping 4.9 higher than forecast, in a historic figure for U.S., where growth tends to hover around 2 to 3%. So again, this is what I mean by context. September payrolls were also strong, with employees adding 336,000 jobs, nearly double what economists had been expecting, and then a variety of inflation indicators cooled less than anticipated and posted slight gains. The employment index, a broad reliable indicator, ticked up 1.1 in the third quarter, a pace far above the pre-pandemic range of 0.7. Sadly, they did not include a 50% run on oil since June. But that'd be one more thing I would add in there. So again, we got 5 minutes now until the release of the statement. Powell comes on 30 minutes after that, so keep that in mind. But we're getting close to the event. I have got you everything up to date, I think, for the most part. So again, I've given you analyst comments. I've given you my opinions, what I expected. Even and now you hear the analyst. I'm sure some things are matching up. You should be up to date though right now. Nothing's expected. Everybody's still kind of worried about the signaling about raising more. A lot of shit went down in this last quarter. And sure enough, we're right at 4,200 with all of this happening. How come you don't look at the Fed futures? Because they're in la-la land. I haven't looked at the Fed futures since pretty much SVB or a little bit after, because after the market made those adjustments, everything fell back. Once the curve gave up on pricing and cuts for 2023 or early 2024, the whole entire futures contracts, they all just shifted to believing Powell and matching up with the dot plot. And then even as the dot plot changed, they've been there. All that's really mattered is leading up into the event. We looked at it today. It's been showing us. We looked at it the day after, too, because remember, leading into this event, we didn't know November was going to be another pause. This one was still on the table. 6 in Fun potential merger. I had a headline on one of those earlier in the morning. Yeah, Cedar Fair explores potential merger with Six Flags Entertainment. Sources. There's Six Flags. They're still down. I don't know. Is it off of earnings? What was it earlier? FDIC to suspend sales process for Republic First. Let me see if I could find the Six Flags thing from the morning. Oh, wait. That was JP Morgan this morning. I did it. I did it. 200 shares, 1913. Top tick, Josh. Sure enough, it turned red already. We'll see, man. We'll see. Coming into Powell, I know. I'm ape shit. That's just a buyout rumor again. I got one in the morning. People were talking about it, but then it was the JP Morgan news. They just downgraded the shit out of them, and now you have this merger news. Yeah, not a recommendation. You will lose money, so be careful on the next episode of Top Tick Josh. 3 months of Top Tick Josh led him to getting clapped. Will it return? There it is, across the wire. You're getting more news. All right, stream alert out. What did you buy? I bought Six Flags, baby. Woohoo! It worked. I'm up 3% on that shit. Oh, wow, that moved quick. All right, well, there you go. I'm still up 2, but yeah, that popped up 3% real quick. Top tick, baby. Is it fun buying? I don't know. It should be a roller coaster ride. Yeah, again, you see it on the wire. So Troy got that early. I got quick confirmation, and then I think it was from Reuters, and then Wall Street Journal picked up an exclusive on that real quick. So again, you have all the news. You watch that in real time, though. Again, I've been sitting back on a lot of these plays because I've been clapped the last 3 months, and they haven't really been rewarding. So that's I decided to go in for it. It's working for now. I got $100, 150 now. Oh wait, shit. 40 seconds now. All right, man. So get ready for Powell. You could go to the Fed website. That's going to have everything. Again, watch the bonds. We will watch the statement. There will be a move, but don't get too jumpy. Statement shouldn't do anything too crazy, all right? So keep that in mind. All right. 15 seconds. Good luck, Chad. Good luck. Stop fossil finance day. All right, man. Get ready. 2, 1. Boop. Where is it? Fed interest rate 5.5 versus 5.5 expected. Bonds not moving too much. Let's get the pre-written statement. Where is it? It's not on the website yet. What the fuck? All right, hold on. Oh, there it is. There it is. So now it's out. Let's see if there's any changes. Recent indicators suggest that economic activity expanded at a strong pace third quarter. Job gains have moderated since earlier in the year, but remain strong, and the unemployment rate has remained low. Inflation remains elevated. Fed repeats it will assess extent of additional policy firming. U.S. banking system is sound and resilient. Tighter financial and credit conditions are likely to weigh on economic activity. I think that one's a new statement. They say economic activity expanded at strong pace in third quarter. Job gains moderated but remain strong. Yeah, 6 is ripping, but, bro, it's Powell right now. Don't worry about that for now. So let's see. All right, hold on there. Inflation remains elevated. Policy setting committee strongly to returning the 2% target. Fed says tighter financial conditions are likely to weigh on economic activity, hiring, and inflation, but the extent remains uncertain in assessing. So I think the only change was about the economy a little bit there. So we'll see. They'll continue reducing holdings of Treasury. They said they're prepared to adjust policy stance as appropriate if risks emerge. That's the phrase I was expecting from Powell. Fed inflation remains elevated, says policy setting committee strongly committed to returning inflation to 2% target. Says tighter conditions and credit conditions are likely to weigh on economic activity. Again, you've heard that a couple times. So again, I think a little bit of that hawkishness talking about employment being strong and then literally weighing on the economy with the rates so far. But for the most part, it's all about the press conference. That one, I think it was a little bit more hawkish, but I don't think it was like, ground changing, if that makes any sense. Yeah, and then 6 went up. Again, I was up like 12%. Now I'm back up to 10, so we'll see here. But again, that was a buyout offer. Fed vote in favor of policy was unanimous. All right, man. So again, I think you're going to move here for 30 minutes. I would kind of punt a little bit. It's not really that crazy. Again, I say a little bit more hawkish, but I don't think that's enough. They say inflation remains elevated. Fed notes at the top of their statement unchanged. Markets rising a little bit, then coming back at force. At first blush, there wasn't look to any big changes to the statement. Again, you could use the Twitch if you're having any lagging here. Again, I don't know why we are having the lagging. I've upgraded everything so far. All right. Yeah, he paused. We have officially paused with Mr. Powell. Again, they did not raise rates. He talked about, the rates actually weighing on the economy, said labor was strong. A couple of slight statements that sounded exactly the same. No real changes, saying they're going to keep assessing. It's so far, it's what we were anticipating leading into it. Again, this is the whole nothing's going to happen. The statement wasn't that bad. Bonds barely moved. You got to wait till that press conference here. All right, now we got to load up all of the Fed stuff. That's funny. The Fed is playing a video ahead of this. I've never seen them do this ever. That's actually crazy. So if you go to one of the Fed live streams, they're streaming like an educational video ahead of everything. That's crazy. I bought Six Flags. I'm up on it now. We got that hella early. You literally 10%, 12% at the peak. I'm still up 7.5 now on it. It's starting to come back down though. YouTube, yeah, use the Twitch link though. A lot of people are complaining about the YouTube lag, unfortunately. And then BSGM, I don't know. I have not looked into that one. I know I still have it. All right.
That helps maintain a healthy U.S. economy and a stable financial system. The board and the reserve banks together help ensure that consumer and community voices are heard at the central bank through consumer-focused outreach, research, and analysis. This helps keep the Federal Reserve's actions, policy...
So weird. All right, so I got it live. I'm ready for it. Again, analysts say the crucial sentence in determining how much more policy tightening is needed to bring inflation has not been altered. So some people don't like that. Six Flags, Cedar Fair near merger deal. That's coming across again. They're reiterating it again. 12% pop. Now we're up 5% from when we got it. Okay, where's the other one? All right, not too bad. So again, the line is that Powell will reinforce the committee remains highly attentive to inflation risks. Giorgio Ciappellani, Penn Mutual Asset Management, emphasizes that the massive move in intermediate to long-term rates today. He adds that he is keen to see whether these hold after Powell's press conference. No dissents today. This was yet another unanimous vote. Again, they said the U.S. banking system is sound and resilient. Tighter financial conditions and credit conditions are likely to weigh on economic activity. And then Treasury's getting kicked, and that's it so far. No one's really tweaking out, though. So again, first take, this is what we expected. You're getting a little bit of that hawkishness, but not to the point. No real statement changes. A little bit of Fed admission that rates are high enough to slow things down, but also, once again, discussing the strength of the economy and the jobs market, which is kind of keeping them in a weird way. Yeah, very muted for now, but that press conference, we got, 24 minutes now? So first watch every 5 or 15 minutes at a time. We'll see where it takes us from here. But not too bad for now. Not too bad for now. You never going to say the ship is sinking? Yeah, maybe. I will. I mean, I'll make a video on it. But usually Powell, Powell's attitude, though, if he wants something, he'll let you know. Again, like I was saying before all of this, just don't underestimate that my man, he's aware of long-term rates. He's aware of what's going on. Yes, the guy does owe me $100. Or when I see him next, that's it. I gave him the opportunity. He didn't want to take it, unfortunately. All right, so watch whatever the market does. I wouldn't read into it too much unless we really, really dump. But even then, I do think you have quite the interesting scenario here where that didn't change much. You're getting a little bit of movement, but now we have to, we got to be focused on young Powell's presser. So yields extend fall barely, but they have unchanged. The Federal Reserve's been keen on inflation risk, and it's likely that Jerome Powell will emphasize during his press conference. So again, we're already aware of this. Lindsay Rosner, head of multi-sector investing at Goldman, she says moderately updated the first paragraph to reflect changes in recent data, but explicitly referenced financial condition tightening. That's the big item of note. Rate markets sharply unchanged. So there it is. Again, at least other people are picking up on it, but they're saying the fact that even in the statement now, he referenced financial conditions, they're saying that's the biggest item of note now. So again, I told you that hours ago, but let's wait here until the press conference and see what he actually says. So it's in the statement. Other times he's put shit in the statement and then he don't touch on it in the presser, but hopefully he does communicate something related to that. But now a couple of market watchers are putting their vision there. So in addition of a word, really, Powell will presumably give us more on this. But in the last statement in September, the Fed had said tighter credit conditions for household and businesses would likely weigh on the economy. Today, he says tighter financial and credit conditions are weighing on the economy. So last month, he didn't mention financial conditions. He mentioned credit conditions. So that's the only one-word change that you're pretty much getting right now. Credit might refer to banks making it harder to get loans. Financial suggests more of a market situation. The run-up in bond yields in recent months in particular we could guess. But again, Powell will likely say more. It's good. This is playing out how I thought. This is good for now. That means if this is what people are saying and that's the only change, a lot of those questions are going to be about this. They're going to say, why did you say financial conditions versus credit? Why are you talking? And then now, if people think he's responding to the market, we're honing in on it, baby. We're honing in on it. So not bad. The line in statement, again, we already had that. Swap contracts tied to the Fed dates are about steady, pricing in 10 basis points of additional tightening, translating to 40% probability of one more hike by January. So watch out for those Fed future ones. I'm not bullish yet. No, I don't know what he's going to say. That's what I'm telling you. That's why, but we honed in on what you need to look for. Like I'm telling you, before any of this came out, I said financial conditions, and sure enough, that's the new thing that was added today, and you're going to get at least 2 or 3 questions about it now, considering it is a standout. So we don't know. If he says, like I told you, if he says something bad about it, we're going to have a really big problem. If he looks at it favorably and communicates that, then we're going to have a nice little rally here, but it just really depends on what he means by that. So the meat and potatoes will be in the press conference. As Chris says, Powell will likely get asked about the nod to tightening financial conditions. How is the Fed taking that into account? And is that the main reason rates were left unchanged today? Other key questions for Powell will certainly revolve around the possibility of future rate increases. Let's see if he says anything about December meeting being live right out the gate in his opening statement. And then the statements make no reference to geopolitical developments. That's fucking crazy, actually. So in this whole time, Snapchat, Meta, all these companies, the Fed did not mention Israel-Hamas situation at all. Not one reference of geopolitical situation. That's crazy, actually, because he talked about it a little bit earlier, but considering everybody is ignoring that oil went from 60 to 90 ahead of this, I'm surprised that geopolitical tensions were not used as an excuse. There's no change in language referring to Fed's continuing runoff of portfolio bonds. Economists have been extended the expected duration of this, known as quantitative tightening. That's because QT has so far shown little signs of disruption, draining of bank reserves that happened in 2019. The main innovation in Wednesday's statement is addition of financial conditions as a force to weigh on economic activity in the second paragraph. That's an obvious reference to the surge in yields, in a sense, codifies the recent Fed speak about long end doing work of short rates and restraining the economy. That's a positive for financial assets and adds to the rally impulse provided by the refunding in ISM. So again, analysts are already flipping what I told you bullish. So keep that in mind, but we hit it right on the head with financial conditions. That's all this whole thing is going to be about now, and everybody in the media is just fucking running with it now. So the Fed's baseline outlook makes a lot of sense, says Richard Clarida, former Fed chair, or former Fed advisor, or former Fed board member. The risk, however, is inflation remains too stubborn, but if we were to give advice to Powell, it would be to keep the door open for more hikes, he tells Bloomberg TV. Oh, Six Flags, they had another pop. Nice. So we're back to 12% on that one. They're already trying to spin it bullish. So like I'm saying, if financial conditions is viewed favorably and Powell communicates that, hey, financial conditions are tightened, that's why we're bringing it up and that's why we're slowing down, the market's going to like that. But if he says anything negative or has to combat it, then we could run into a problem. But I think you guys are well prepared for this. Again, I didn't know it was going to play out exactly like this, but we kind of hit it on the head. But we now need to see what he actually says. But very short term until Powell opens up his mouth, people are liking that, generally speaking. But there does seem to be a bias to try to flip this positive. Again, like I'm telling you, I told you this hours, I told you on the watch list, within minutes of getting this, analysts are already saying, oh, this is great for markets, because now he's worried about financial conditions. So we'll see what he says, but you could get a general idea for now. But remember, everything does boil down to that press conference. So until he opens up his mouth, just don't fall for anything too easily. And then Six Flags right back down. I don't think Six Flags likes it when the market goes green with it. Big players are going long. Yeah, that means they're worried about the cut. But then again, that's where the economic data and how that plays out. But let's see if Powell is going to take the opportunity to loosen or tighten financial conditions today now. So again, we're good, man. We're good. We're coming close to this. You know what I'm saying? Again, the fact that we could even be this right hours before the event, that helps a lot. But it's clear that the FCI, the financial conditions, how Powell is going to communicate that here, it's going to hold a lot of weight. It is going to hold a lot of weight. So we don't know yet. Keep your head on a swivel. Don't get trapped by any bias. But like I'm saying, if he says it needs more, we got a big problem. But if he kind of, uses it as a reason to why they stopped and saying it's good work, then the markets are, again, I'm already seeing the analysts salivate over it right now. So the decision and statement were broadly expected. The question now is, which section of the statement will Powell double down on? Does he highlight the rise in bond yields, or does he zero in on remaining highly attentive? Diane Swank, chief economist, KPMG, tells Bloomberg that her concern around May and June is where the Fed will be then, and she adds the optionality of rate hikes and the fact that each meeting is live is important. The challenges of putting the term financial conditions in the statement is that financial conditions can go up and down, says Clarita, adding that Powell may regret that he included that in the first place. Yeah. Indeed, financial conditions have tightened over the past few months and have obviated the immediate need for further rate hikes, but Goldman Sachs Financial Conditions Index shows that it's merely recovering the loosening from previous months. We are even at the previous peak of last September. He doesn't even know how to regret something. He didn't regret transitory. Very mute statement. Even the market's coming down a little bit, but I think we're getting a little jitters now because, again, there was a minor change with that statement, and that statement could be either really good or really bad, and people are already thinking good, but this is showing, what he's about to get asked in those questions. I do think that is going to be very crucial. And yes, like the video. If y'all are here, especially if you got the watch list, you got a nice front run on all of this, but hit that like button, and we are pinned. If you go see in the pinned chat, just in case, we've had a little bit of lag today, there is a backup stream just in case. So when Powell starts speaking, you might as well cue that up now, go through the ads just in case so it don't take you too long. But if you do cut out, you have a backup stream, and we haven't even started yet, man. Again, we got a little bit more on the way here. This isn't even the real action of all of it. Again, one slight change has happened so far. What's my record? I don't know. For calling out Powell days, I'm here every day, but I don't know. Ask the chat. I mean, how many of you have witnessed a Fed day with me? And have you learned something that you didn't learn on the TV, or did you learn it ahead of time? You let me know. But other than that, I don't know. But I feel very grateful that everything I told you for the last couple of hours was on point, because, again, everyone was saying this was going to be nothing. Now we just got this little event. And honest, I feel a little bit ahead of the curve with it, but we still don't know what's going to happen. Every time. It's good to hear. Well, I'll leave the record up to you, baby. But God bless you all. I hope you are ready. And just get ready now. I mean, it's now. Now we gotta. Hopefully we don't get too jumpy at any moments. But this is now. You still gotta burn another 10 minutes of the market moving before we get any sort of freedom here. I haven't looked at gold actually. I mean, there was a pause. I feel like gold should be going up a little bit. I think it wants to, but you still need to have that speech, unfortunately. And then don't forget about the big tech and anything else that is on the way too. Remember, we still have non-farms. That's the crazy part. We are still going to follow up all of this data, and Powell hasn't even spoke. Go Powell, baby. Amen. God bless you, XRP. All right, man, let's see how this plays. I just don't know if that's the thing. Right now, the analysts are like, yeah, financial conditions is bullish. But remember what I told you. What if Powell is pissed off? And just if Powell... So in a weird way, I don't feel as safe just yet. But I do want to see how he talks about those financial conditions. The fact that it made it into the statement is already wild. Some people are trying to downplay it a little bit, but we'll see. Neil! What's up, baby? XRP. UPOP. Whoop. Yeah, Clear Science. That was up a decent amount, then came back down. Do we have any more of this? Let's see. So 2 items in the news may pop up during the press conference. Labor agreement between auto companies and workers. What that means, and then conflict in Middle Eastern may spill over economically. The World Bank warned that even a small disruption to crude supplies could remove between 500,000 and 2 million barrels. As pointed out, it was a unanimous vote today, and we have had no dissents since the Fed started hiking, and none of President Joe Biden's Fed board members have voted differently than Powell. And then Anna Wrong writes, we read tweaks to the policy statement as somewhat dovish, with the committee careful to state that recent strength in activity has already passed, emphasizing instead the moderation in job gains, considering the various ways officials could have crafted a more hawkish statement. Given upside surprises in inflation and activity, this suggests the FOMC is inclined toward an extended rate pause. So Bloomberg's already saying Anna Wong has been very accurate and has been very ahead of the curve, but she is from Bloomberg, and she's saying now that she's saying it's bullish. Again, they're saying that statement, the financial conditions, is bullish. So again, that's the second analyst. She holds a lot more weight, but that's the second analyst to already say this is what's it called? This is it has a dovish tilt just because they talked about financial conditions. It's so bearish. I don't think anything has changed. I think the admission of it is what I've been telling you. Shit has gone down and Powell's aware of it. It's clear financial conditions have tightened. Again, going back to our level, the last time you heard about, I said this all on the watch list yesterday. That's the crazy part. Last time we brought up financial conditions, you were roughly around the same spot when we started reacting to it. So it just, the fact he brought it up, it's an admission that the stock market's getting fucked, but it's also something that makes you calm down with rates. It's kind of a double-edged sword. So that's why I'm saying we still got to hear what he has to say about it. And now, with this being the context, just wait till you see the types of questions they ask him. That's where I think it gets very, very wild. One boomer. Yeah, Anna Wong's good. I think she's actually a very good at her job. She's the head of Bloomberg Economics, and she kills it. 6 still holding up. Again, the buyout offer, we got a nice gain on that. Powell in a little bit. How can it be bullish since a few words? Again, I told you about these words before anybody told you about them, right? I don't have that same interpretation yet. I am firmly holding the same mentality I had prior to even knowing it. I need to listen to Powell. I don't know how he is going to twist that question or how he's going to twist that. But initially, the way that the analysts are saying that it's bullish is because it means Powell will not raise rates again, and it means he is responding to the market coming down. So that means that as the market's coming down, if Powell is bringing that up, that means he's trying to calm it down. You know, and that's like an admission that, okay, the Fed tightening is working. So that's why by him talking about financial conditions again, people are trying to skew that into that realm. Yeah, no, I feel you. I know you didn't say that, but I just want to make it clear just because, you know, that's how it is on Wall Street lately. You know, you could follow along and you could learn. And like I'm telling you, I may have been right on one end of this, but I still need to wait for the full event to go through. But on the first read, these analysts right now, they're shooting off the hip, but they're liking what they're seeing. So it makes sense why they like it, but I'm just saying, it's, you know, the nail's not in the coffin until Powell talks, and he very well, you know, who knows what question he will be asked about it. But, you know, like I said from the beginning, just hone in on this word, financial conditions, this phrase, and it should guide us today. So it's working for now. But for the most part, everybody, the market's barely moving. Bonds are barely moved. That's above all else. Don't get it twisted. You know, screw the equities. Bonds ain't moving off of this. You know what I'm saying? So that is another big key to this that will tell us what people really think. So get ready, my friends. Get ready. Yeah, you got about 6 minutes. So we'll have it up. I have 3 different feeds. I may bounce around trying to get the fastest one. So we'll see. Yeah, yen's not moving. It's again, equities are around here. You have a clue. So I'm just telling you right now, I think a lot of people, they're waiting to fucking pile in on this if Powell confirms bullish. But at the same time, some people, the algos, are waiting to just press a button on what he says here because you're not moving and neither is bonds, currencies, or anything else. So equities are doing whatever they want. We're arguing it. The analysts are already prematurely interpreting it. So let's see what happens. But keep in mind, you know, we still got this event in 5 minutes. He's going to talk in that composition. And I'll tell you right now, I usually say this ahead of time. Okay? I usually say this ahead of time. The first 5 minutes of Powell's speech, usually, that is pre-written statements, meaning none of it should be new. It should all be what was included in that written statement that we just read. Are you okay? I hope you all understand that because you're going to watch the market move. Usually right when he starts talking, even if it's pre-written, the market's going to go up. That's usually what happens every time, at least for a couple of candles. Okay? So, but just don't forget, it's not new information. Now, I will tell you, the word financial conditions, I was telling you, that's going to move the candles today. I told you before any of it. So I'm still standing by that. Financial conditions, that word, just be mindful when it gets said and look at the market when you actually hear that. So that's the first major thing I'll tell you. And how do you know the speech is going to end? He concludes it by saying the Fed has a goal. He ends it with some like equality thing. He's like, our goal is to maintain equality and make sure that's how you know he's about to end the speech. So that's the end of the pre-written statements. And then the Q&A, that's where we start to get the real action. So keep that in mind. You got 3.5 minutes. Price stability ain't that important. No. Today, the word is financial conditions. SPX to 5,000. Who knows? He could say it subtly, but he could also destroy us very subtly too. That's why I'm saying you guys got to... The fact that what I told you is happening right now, that means we're still served up a 50-50. He either crashes us or he helps us out a lot. Because again, he brought up financial conditions, but what if he actually does tell you they're not tight enough yet? What if he tells you about financial conditions, acknowledges them, and says maybe a little bit more would be better? You know, that's the thing. There's still a possibility he just pisses on the parade right now. So it's not like that in a weird way, man. It could be a Uno reverse card, or it's going to be a very nice one. But let's see. Don't say that. It's okay. I said this hours ago. I said, you know what I'm saying? So it's not, this isn't even my reaction. This was just my preparation leading into all of this. That's the craziest part. So right now, that's why I don't think we're getting a real reaction in the market. We're waiting for Powell to come on. But so far, what little info we got, everything's on par for now. I think the algos are still waiting. You're going up a little bit here now. Again, Apple leading. The bonds are still break even for the day. So let's see where this could take us. Again, if you do notice outsized bond moves during the speech, I would pay attention to those. Oh, damn, where's the dollar too? Yeah, dollar's back up. That's not good. Remember, I was freaking out about the dollar this morning. See the earnings. I'm going to keep the dollar up. Bottom right, dollar. Bottom left, long-term bonds. Top left, SPY. Top right, Apple. SGen, little pop. Remember, they're getting bought out with Pfizer, I believe. Data dependent, Jay. All right, U.S. stocks add to gain after Fed rate hike decision. So again, the analysts took it bullish right away. Now, again, even as we start to go up, the auto algo comments or algo headlines are just saying SPY's up now following the event. Still at 0.54 on the SPY, NASDAQ 0.78, and Dow Jones up by 0.35. To give you a little market check, Powell's going to come on in 45 seconds. And to give you an idea, Dow Jones, 15 names green, 15 names red. NASDAQ, you have 48 names red, 53 green. And then S&P 500, you're looking at 274 red, 229 in the green. All righty. Where the fuck is he? They're not even playing it, dude. That's insane. Bro, they changed the news this week. Something happened, bro. This is so weird. They're not even playing him right before. I know that may sound weird to you. There you go. Okay, thank God. Oh, they just didn't hit on the... all right, the Fed website should be ahead. Well, why do they still have the music? I think there might be a couple seconds delay because usually on the Fed website, you see this ahead of everything. So again, he should be coming on here. I don't know where he's at. Are they still? All right, there you go. Let's see which one gets it quick. So CNBC's behind. Fed website, we got that one up. And then I have the original OG Fed feed. All right, Fed website, YouTube has it faster.
Good afternoon, everyone. Welcome. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices.
Go to the Twitch if you want uncensored.
We
you don't want me to talk over it too much.
Inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without
I
price
will
stability,
chime in
the economy
on.
does not
I'm
work
going to
or
chime in on all
in particular,
financial
without price
condition
stability,
comments.
We will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming.
Again,
and
you
how
know all
long
of this.
policy will remain restricted.
So that bullish
based on the
reaction from the
totality of
statement is
incoming
showing
data,
up right
the
now, but
evolving
this isn't
outlook,
new.
And the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and
Yeah,
well
he's
above
not wearing
earlier
glasses.
expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
We're going up because this is pre-written statements. This happens all the
to
time.
The risks that high inflation poses to
wait
both
till the press
sides of our
conference for
mandate,
real moving stuff.
and we
All
are
the
strongly
headlines
committed
now.
to returning
It
inflation
just, again,
to our
it's off the
2%
pre-written
objective.
statement.
As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's
That's
meeting
weird.
to maintain
Long-term
the
bonds
target
are
range
kind
for
of
the
showing
federal funds
weakness,
rate
but then
at
the yen is
5.25 to
rocketing right now.
5.5%.
Good call out on that.
And to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields,
financial
among other
conditions.
factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country.
The final one.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
I mean, it's definitely the Powell that's worried about financial conditions. Kind of seems like he's back.
Howard Schneider with Reuters. Thank you, Chair Powell, for doing this. To what you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
There it is. He's asking about the long-term bond yields.
Thanks for your question.
How it affected their decision.
So, I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target. The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting, that it will slow. As for the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident yet that we have achieved.
So he's not confident
yet. So that is the broader context into which this.
So before answering the question, he's telling you he's not confident in whatever yields have done. Now he might hit it with some bullishness after, but so far.
Obviously, we're monitoring, we're attentive to the increase in longer-term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent. And
so he's saying tighter conditions could affect him, but they're not tight enough.
To be seen.
But I don't know, man.
Things are fluctuating back and forth. That's not what we're looking for. With financial conditions, we're looking for persistent changes that are material.
So second thing is that old Powell, where it's like they
the longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So, in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher borrowing costs for households and businesses.
So started off negative.
And those higher costs are going to weigh on economic activity to the extent this tightening persists. And, the mind's eye goes to the 8%, near 8% mortgage rate, which could have, pretty significant effect on housing. So that's how I would answer your question.
No, just as a quick follow-up,
wasn't even bullish enough.
In your opening statement and just now, you seem to imply that you are not yet confident that financial conditions are restrictive enough to finish the fight.
Yeah, I got one. He says,
Yes, that's exactly right. to say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and we're not. I will say that we're not confident at this time that we've reached such a stance.
Again, he's just reiterating the financial conditions aren't making him confident.
And that is
the guy asked him twice.
Going into these future meetings is to be, just determining the extent of any additional further policy tightening that may be appropriate to return inflation to 2%.
Yeah, yen's coming back down and bonds. So first question kind of answered it. It wasn't as good as we thought for now, but just wait if he doesn't say anything favorable. That was question number
Chair Powell,
one.
Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
So, let me start
Dollar's
by saying
rocking
we
it
haven't
up
made a
now, too.
decision
Again,
about
bonds are the
September. You're
first
asking
mover
a
down.
Hypothetical there, but
Equity's moving way more.
We're going into the December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings, some data on economic activity, and so we'll be taking, and also the broader situation, the broader financial conditions situation, and the broader world situation. We'll be looking at all those things as we make a decision in December. We haven't made that decision. I would say, though, that
so again, punting on the whole.
The
are
idea
you done?
that if you the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate.
So he's telling you he'll raise at any moment.
And again, we haven't made any
that.
decisions at all about December.
Again, it's just compounding with the momentum
here.
here.
Decision in December.
You're going
today.
straight down off that
really,
last
it was
headline.
a decision for this meeting and understanding broader things.
Again, he didn't give a gold star to financial conditions and said, well,
Nick Timmeros of the Wall Street Journal.
Nikki T.
Chair Powell, did the Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. No. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently.
Market likes that,
which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent
he's trying to avoid
this will
answering
be.
it.
You can see how volatile it is. Different kinds of news will affect the level of rates. And I think any kind of an estimate that was precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating
he's kind of
into
unsure that
how many
financial
rate hikes
conditions will keep tightening.
If I could follow up, I guess what makes you confident that tighter What makes you confident that tighter financial conditions will slow above-trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see if you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds.
I think the danger is the market interprets
rates are so
this.
high now. I mentioned again, we're getting
conditions
reports
aren't
from
tight
housing
enough.
that
That is the bad side. That's what I'm getting for now.
But you're right.
But he's trying
this
to
has
toe
been
the
a
line.
resilient economy, and it's, I think, been
He just
surprising
said no
in its resilience. And
recession,
there are
GDP is strong,
a number
everything.
of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we just we take it as it is.
Thank you. Colby Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture and what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth. We look at growth insofar as it has implications for our 2 mandate goals. We look at that. And we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
Okay. And just in terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts.
We're
still very focused on the first question, which is have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question we're focusing on. The next question, as you know, will be for how long will we remain restrictive? Will policy remain restrictive? And what we said there is that we'll keep policy restrictive until we're confident that inflation is on a sustainable path down to 2%. That'll be the next question. But honestly, right now, we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think it's so important to get that first question, as close to right as you can.
Again,
Steve Leisman, CNBC.
He's
Mr.
fighting
Chairman,
back against the
I
bullishness.
assume that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee, but then you just said that we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? One additional hike.
I think you're talking about one additional.
Yeah,
I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of additional policy firming,
it's just hammering home he'll raise rates
2% over time. That's the question we're.
They said no, not at all. You got
so
a
is
nice
it right to think of that as a
hiking
hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking: is should we hike more? It's not, and that is the question. And you're right that in September
so he said they're still thinking about hiking even in this.
But
now it's starting to turn a little more hot. It was already getting bearish there, but now, like I said, that goes from fighting against the bull bias to now.
Thank you, Chris Rugaber at Associated
Press. Again, he's kind of just saying we really want to raise.
Since
I don't
the last
believe
meeting,
him,
the
but
auto workers strike has finished. Oil prices have leveled off, and yet on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there, as you point out. Global geopolitical tensions are certainly elevated, and that goes for the war in Ukraine. It goes for the war between Israel and Hamas. We're monitoring that. Our job is to monitor those things for their economic implications. So the UAW strike, as you point out, appears to be coming to an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there. But I would go back to the bigger picture from our standpoint is we've got a very strong economy, strong labor market, making progress on the labor market, making progress on inflation, and we're very focused on getting confident that we have achieved a stance of monetary policy that is sufficiently
Again,
restrictive.
I don't
That's
think
really
it's
our
off this
focus.
question, but
Great.
he
And
did
just
bring
one
up
quick thing.
risks of
You
war.
last month had gone to
First
York,
time.
Pennsylvania, where you talked to last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by York as a town with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear and is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly in the conversations we had in New York. And I walked away from that even. Just thinking that we really, the best thing we can do for the U.S. is to restore price stability.
I don't think he's bearish or bullish. I think
fully restore price
the market
stability and
is
not
now
fail
going to
in that
might
task
force
and
him
do it
into
as quickly
something,
as possible, but also with the least damage.
Powell. He's just in the process of changing the words back to the words we freak out about. It's harder to
Chair
navigate.
Powell, Rachel Siegel from the Washington Post.
So again,
Thanks
he's
for
like, I'm
taking
going to
our
keep
questions.
raising rates. I'm going to keep
You've
raising
spoken
rates.
before
but
about
he's
the
not.
pain that would
But
likely
he
be
needs
coming
you
for the economy in order to
believe
get
that, but
inflation
now
down.
the market's
but
still kind
since
of
the economy has
responding.
not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
Well, I think everyone has been very gratified to see that we've been able to achieve, pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a historically unusual and very welcome.
Well, people still
result.
kind of believe him.
And the
That's
same
why
is
I'm
true
thinking
of growth. We've been saying
until
that
the
we
market
need to see below
realizes his
potential
BS
growth,
and starts doubling
and
down on it.
Growth has been strong, but
he has
yet we're
afforded
still
himself
seeing
that
this.
opportunity
I think
for it not to happen.
I still believe,
but
and my colleagues,
like I'm saying, maybe he
for the most
slips
part,
a little
I
here.
think still believe that it is likely to be true. It is still likely to be true, not a certainty, but likely that we will need to see some slower growth and some softening in the labor market conditions to get to fully restore price stability. So, but it's only a
being
good thing
careful,
that we
but I'm
haven't
just saying,
seen it,
if
and
the
I think we
market
know
stops
why.
believing him,
since
it's going to
we
go
lifted
back
off,
to
we
bullying
have
him and then more
understood
wild swings.
that there are really two processes at work here. One of which is the unwinding of the distortions to both supply and demand from the pandemic and the response to the pandemic, and the other is restrictive monetary policy, which is moderating demand and giving the supply side time to recover, time and space to recover. So you see those two forces now working
Timmy
together
tweeted he doesn't believe
to bring down inflation.
Timmy said
But
it
it's
doesn't seem like he
first
talked up
one
a hike.
can bring down inflation without the need for higher unemployment or slower growth. It's supply side improvements like
Timmy's still in the
shortages and
in the room.
bottlenecks and that kind of thing going away. It's getting a significant increase in the size of the labor market now, both from labor force participation and from immigration. That's a big supply side gain that is really helping the economy, and it's part of why GDP is so high, is because we're getting that supply. So we welcome that, but I think those things will run their course, and we're probably still going to be left, we think, and I think, we'll still be left with some ground to cover to get back to full price stability, and that's where monetary policy and what we do with demand is still going to be important.
Against that backdrop, if you've gotten any clarity on lags, if you have an economy that's been so resilient to high rate increases, does that suggest to you that there isn't necessarily this huge wave of tightening that's still coming through the pipeline and that it may have already come into effect?
I continue to think it's very hard to say. So it's been 1 year at this meeting. 1 year ago, this was the fourth of our 75 basis points hikes. So that's a full year since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. it's very hard to know exactly what that might be. But you can, for example, an example of where you wouldn't have felt this yet is debt that had been termed out. But it's going to come due and have to get rolled over next year or the year after. So, and there are little things like that where the effects are just taking time to get into the economy. So I think we have to make monetary policy under great uncertainty about how long the lags are. I think trying to get a clear answer and say, I'm just going to assume this is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy time to get into the economy. And it takes time, we know that, and you can't rush it. So slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
Michael McKee from Bloomberg Television and Radio. I'm trying to connect the dots here.
This will be good. But again, I think the market might try to bully Powell. I'll explain afterwards, but again, he's playing the same game.
I had always said before, a period of lower than trend growth.
It always pops on Michael McKee, too.
And two, it sounds to me like you're basically saying here that the dot plot's out the window, that every meeting is live with the possibility of a rate increase for right now. It doesn't matter about the turn of the year, and that there's not an objective way to determine whether or not you've got enough tightening in the system. It's just going to be a subjective judgment meeting by meeting.
Well, so let's talk about
the dot plot. What it sounds like. Great question.
The dot plot is a picture in time of what the people in the committee thinks is likely to be appropriate monetary policy in light of their own personal economic forecast.
That was a perfect way to explain it.
In principle, when things change, that's not like a plan that anybody's agreed to or that we will do. That's a forecast that would change. For example, I mean, many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3 month period between that meeting and the next meeting. But nonetheless, it's out there, and we do personally update our forecast, but we don't formally update the dot plot. So, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out there our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that data. In terms of, we're not really changing the way, in terms of growth, what I said was below potential. So what you have here recently is growth that is temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is what's potential growth this year. People think trend growth over a long period of time is a little bit less than 2%, or
don't tell them. So
just
they're
around
factoring
2%.
in potential.
But what we've had is with
might explain
the
a lot of your fucking revisions.
Improvement in the size of the labor force, as I mentioned, through both participation and immigration, and with the better functioning in the labor market, and with the unwinding of the supply chain and shortages and those kinds of things, you're seeing actually elevated potential growth. There's catch-up growth that can happen in potential, and that means that if you could be growing at 2% this year and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could clarify what I asked about meeting by meeting, are we essentially now supposed to assume that it's a meeting by meeting, live meeting with a chance of a rate increase that will be decided on subjective criteria rather than objective at each meeting?
Great question.
It's a simple question. I don't know that I want to just accept anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting.
Well, is it objective? Is the sky blue? Hold on.
Sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at, and then we've come very far with this rate hiking cycle.
It is what he's saying, but this type of meeting, they're trying to get it out of him.
At the September meeting,
I'll explain after. I think the market might try to put it on Powell.
Additional hikes, so you're close to the end of the cycle. That was an impression
because he's talking about the financial conditions, and he brought it up.
It's not a promise
But
or
he's
a
not.
plan of the
It's
future.
not changing
and
anything.
So we're going into these
and he's not
meetings
telling
one by
you
one. We're looking at
the
data.
limit of what
As
it
I
is.
mentioned,
So
we're
then
also,
he needs to sound hawkish.
We're proceeding carefully.
And I don't think he
because
wants
we
to be. And I
can
think the
proceed
market
carefully
might
at this
bully
time.
that. That's
Monetary
what I'm telling
policy
you.
is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
Again, we've been running more off of this weird him trying to say stuff. We're like, do we believe that?
Hi, Chair Powell. Neil Irwin with Axios. In light of the run-up in long-term yields that we've seen the last several weeks, have you given any consideration to the pace of your asset runoff program? And if there were a judgment that the higher term premium was endangering the
All right, new
mandate's
high of the
goals,
day.
would that be a reason to think about
goodness.
slowing or suspending QT, or should we think of that as more of a technical question around reserves?
So committee is not considering changing the pace of balance sheet runoff. It's not something we're talking about or considering. And I know there are many candidate explanations for why rates have been going up. And
Yeah, I
QT
don't
is
think the
certainly on that
market's
list. It
stupid.
may be
I'm
playing
saying
a
the market's
relatively small
smart.
effect.
They don't
Although I would
believe
say at $3.3 trillion in reserves, it's not. I think it's hard to make a
If
case.
he wants
that
to raise
reserves are
rates
even
one more
close to
time, why the
scarce at
fuck
this
is he
point.
talking about financial
So that's
conditions?
not something that we're looking at
Especially
right
if he's
now.
saying, well, we don't know yet about those financial conditions. It doesn't make sense. I think he needs to sound
Victoria
hawkish,
Guia with Politico.
but
I wanted to ask
he
about
doesn't
the
want to be
Basel
too
III,
crazy about
endgame
it
capital
because we would
proposal.
die at this point.
You've gotten a lot of
But then I
pushback
think
from
people are
people
kind of
on
picking up
different
on
aspects of the proposal, and you
So we'll
yourself
see, but
expressed
that, like I'm saying,
some
I'm still
reservations.
neutral.
And I'm just
like I'm
curious,
telling you, that's the only thing I
could
can
you
get out of
accept
this.
finalizing that proposal without significant
Because he
changes?
changed what he changed, but he's not discussing the financial
So
conditions.
that
as if
proposal
they did
is out
anything.
for comment, and
That's what
we
I'm saying. I
expect
think people
a
are
lot
trying
of
to call
comment.
his
We won't
bluff
get
or
those
try to-
comments until
try to put some pressure
the
on
end
him.
of until well into next year. We've extended it, the deadline, and we'll take them seriously. We'll read them. I'll say what I do expect is that we will come to we're a consensus-driven organization. We'll come to a package that has broad support on the
Okay,
board.
another new high.
So does broad support mean more
That's even
support than the
Apple's
proposal
leading.
had?
It means broad support.
Okay, next question.
Janelle Marte with Bloomberg. So, in addition to persistence, when you look at long-term treasury yields, what else are you watching to evaluate how those tighter financial conditions are hitting the economy and if it will lessen the need for further tightening? Also, do you
Good
think
question.
that those
He's not gonna
higher
answer it,
yields
though.
could affect
So I'm
banking
saying the
stress?
nature of these questions and the lack of answer.
So what do we look at? we
That's where
look
it's
at
like
a
calling
very
his
wide
bluff.
range of financial conditions. And in fact, as you'll know, different organizations publish different financial conditions indexes, which can have 7 or 8 variables, or they can have 100 variables. So there's a very rich environment, and we tend to look at a few of them. I'm not going to give you the names, but there are a few of the common ones that people look at. And so they're looking at things like the level of the dollar, the level of equity prices, the level of rates, the credit spreads.
Okay.
Sometimes they're pulling in credit availability and things like that. So it isn't any one thing. We would never look at, for example, long-term Treasury rates.
He's not even
in
giving
isolation.
you have no criteria to even
Nor
follow
would we
with
ignore
it.
them, but we would look at them as part of a broader picture, and they do play a role, of course.
So he brought up financial conditions today, but he's not telling
you
you
standard
if there's
financial
a
condition indexes.
perceptive measure. He's always
Your
denied
second
it,
question
but
was-
even then, once again, it just throws him back a year ago. It's very different.
Banking stress. So it's something we're watching. As you know, we did have there were issues with interest rate risk and also funding uninsured deposits in the March, the things we went through in March and thereafter. And so we've been working a lot with financial institutions to make sure that they have good funding plans and and that they have a plan for how to deal with the kind of portfolio unrealized losses that they have. We do think the banking system is quite resilient. We had a handful of bank failures, but so that's what we're out there doing, and we don't have any reason to think that these rate hikes are materially changing that picture, which is one of a strong banking system and one where there's a strong focus by banks and by supervisors on liquidity, on funding, and those sorts of things.
Thanks, Mr. Chairman. Scott Horsley from NPR. Last week, you and your colleagues put forward a proposal to lower the cap on debit card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just what y'all are seeing in terms of the use of both debit and credit cards in the
This question shouldn't move us too much.
So you're right. We put a proposal out for comment is what we did. And, this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things once they're out for comment, and we do hope that stakeholders, and we know that they will use this opportunity to express their views. They haven't been shy about that. So that's critical, and that's what I can say about that now.
Thank you. Thanks, Chair. Edward Lawrence with Fox Business. So over the last 3 months, the year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
The progress is probably going to come in lumps and be bumpy, but we're making progress. I think the core PCE came down by almost 60 basis points in the third quarter. So the best thing I could point you to would be the September SEP, where the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the twos, and the year after that further into the twos. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get as you get further and further from those highs, it may actually take longer time. But the good news is we're making progress, and monetary policy is restrictive, and we feel like we're on a path to make more progress, and it's essential that we do.
Well, you've said in the past that doing too little on interest rates could take years to fix, but the cost of doing too much could be easily fixed. How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves, and we know that if we fail to restore price stability, the risk is that expectations of higher inflation get entrenched in the economy, and we know that that's really bad for people. Inflation will be both higher and more volatile. That's a prescription for misery, and so we're really committed to not letting that happen. For the first year or so of our tightening cycle, the risk was all on the side of not doing enough. We've come far enough that the risks have gotten more two-sided. You can't identify that with a lot of precision, but it does feel like the risks are more two-sided now. But we're committed to getting inflation back down to our target over time, and we will.
Simon.
Simon Rabinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient. Of course, part of the resilience of the past year stems from the Bank Term Funding Program that you launched in March. Given that bond prices have not recovered, that unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
Good question. We haven't really been
the bonds.
About
the
that
2
yet.
years moving around. It's sensitive to policy.
It's November 1.
But just look at the long end of the curve.
We'll be making in the first quarter.
They
of next
still
year.
don't know what to do.
Sorry, quick
At least the
question
10-year does.
About inflation expectations. The Michigan Sentiment Survey showed a big jump in
Well, we
one-year
gotta get out of these
inflation
recent
expectations
ranges.
last month from 3.2 to 4.2.
New high on the SPY.
Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions. If it stays elevated next time around, how big of an input will that be into your December thinking?
Yeah, we look at a range of things. I think the UM thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary in that, but that didn't get picked up. So we look at many things, and so really look across the broad array of surveys and also market-based estimates, and we do that really carefully at every meeting and between meetings. And it's just clear that inflation expectations are in a good place. The public does believe that inflation will get back down to 2% over time, and it will. They're right. So, and there's no real crack in that armor. You can always find one reading that is a little bit out of whack, but honestly, the bulk of them are.
Seems like Powell's not worried about
clear
inflation getting entrenched.
That the public believes that inflation will come down, and that's, of course, we believe that's critical in winning the battle.
Yeah, you do.
Hi, Chair Powell. Megan Casella with Barron's. Thanks for taking our questions. I wanted to see if you could talk about the neutral rate. You mentioned today that you're still debating whether rates are sufficiently restrictive, and you've recently said that.
So again, we're above that other level in the morning,
policy is
42.50 now.
So I was curious if you could elaborate on that at all and whether that means the neutral rate in your view
42.50
has
to
risen.
42.70.
Yeah. So first thing to say is that it's very important. It's a very important variable in the way we think about monetary policy, but you can't identify it with any precision in real time, and we know that. So you have to just take that. You have to take your estimate of it with a grain of salt. What we know now is, within a range of estimates of the neutral rate, policy is restrictive, and it's therefore putting downward pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to sort of agree as a group on whether R-star has moved or not. Some people think it has. Some people haven't said that don't think it has. Ultimately, it's unknowable, and so really, again, what we're focused on is looking at the data and giving ourselves a little more time now to look carefully at the data by being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves. I think, years from now, economists will be revising their estimates of R-star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to we have to have those models and look at them and think about them, but ultimately we've got to look at the effects that policy's having, accounting for the lags, which makes it difficult.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm curious if you have any concerns whether wage inflation at its current level could risk pushing up overall inflation or reacceleration.
So if you look at the broad range of wages, wage increases have really come down significantly over the course of the last 18 months to a level where they're substantially closer to that level that would be consistent with 2% inflation over time, making standard assumptions about productivity over time. So it's much closer than it was. And that's true of the ECI, which is the one that we got this week. It's true of average hourly earnings and compensation per hour too. So, and all of them are kind of saying that, which is great. And you have to look at a group of them because any one of them can be idiosyncratic in any given reading. So that's what you see. And so what you saw with the ECI reading was, if you look back comes out 4 times a year. If you look back a couple of quarters, you'll see it was much higher, and then it came down substantially in June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our expectations internally, too. So I think we feel good about that. Also, I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation so far. Although I do think it's fair to say that as we go forward, as monetary policy becomes more important relative to the supply side issues I talked about and the unwinding of the pandemic effects, it may be that the labor market becomes more important over time, too.
Nancy.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
So as I mentioned, I think for much of the last year and a half, the concern was not doing too much, not doing enough. It was not getting rates high enough in time to avoid having higher inflation expectations become entrenched. So that was the concern. I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down, although that we're still trying to gain confidence in what the appropriate stance is. But you can see that we think, and I think, that the risks are getting more balanced. I'll just say that. They're getting more balanced. The risk of doing too much versus the risk of doing too little are getting more closer to balance, because policy is I think clearly restrictive at 5.25% to 5.5%. That range, if you take off a mainstream estimate of the expected inflation, take 1 year inflation, you're going to see a real policy rate that is, well above mainstream estimates of a neutral policy rate. Now that's arithmetic. It doesn't really. What the proof is really in how the economy reacts. But I would say that we're in a place where those risks are getting closer to being in balance.
And you said the proof is how the economy reacts. What are you looking at to be sure you're not overshooting?
Well, I think what we're looking at is, is inflation still broadly cooling? Is it sort of validating the path we saw over the summer, where inflation was clearly cooling and coming down? Now, we've seen periods like that before, and there hasn't been follow through. The data have bounced back. So what are we seeing? Are we seeing, is inflation still coming down? So that's the first thing. Second thing is, in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online, and with labor demand still clearly remaining very strong. When you have the kind of job growth we've had over the last quarter, it's still very strong demand. So, and you see wage increases coming down, as we discussed, but coming down, in a kind of gradual way. I think we want to see that whole set of processes continue.
Brian Mena, CNN. Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if there's been any structural change in consumption.
I wouldn't say there's been a structural change in consumption. I would say it's certainly been strong. And so a couple of things. We may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. There may be, we've been, like everyone else, trying to estimate the amount of savings that households have from the pandemic when they couldn't spend on services really at all, or in-person services. And, there can still be more of that than we think, although at a certain point we're going to be getting back to pre-pandemic levels of savings. We may not be there yet. So clearly people are still spending. The dynamic has been really strong job creation, with now wages that are higher than inflation in the aggregate anyway. And that raises real disposable income.
I'm just listening.
And that raises spending.
He hasn't said anything too
which
crazy yet.
Which continues to drive more hiring.
I kind of already have
so
a
you've
good
had
opinion on this.
that whole dynamic has been, and also at the same time, pandemic effects are wearing off, so that goods availability, automobile availability is better, or was better. I think it still is. And from a business standpoint, there are more people to hire, and there's more labor supply. So the whole thing has led to more growth, more spending, and that kind of thing. And it's been good. And the thing is, we've been achieving progress on inflation in the middle of this. So it's been a dynamic. The question is, how long can that continue? And I just think the existence of this second set of factors at this time, which is the unwinding of the pandemic effects, that's what makes this cycle unique, I think. And we're still learning. Took longer for that process to begin than we thought, and we're still learning about how it plays out. That's all we can do.
So to Daniel, for the last question.
Last question. It's kind of short.
Daniel Avis from.
Usually we go to like 12:45.
Just a quick question following up on an earlier one. With regards to the Israel-Hamas conflict, the Fed's financial stability report said that Israel-Hamas conflict and the conflict in Ukraine pose important risks to global economic activity, including the possibility of sustained disruptions to regional trade in food, energy, and other commodities. You've had organizations like the World Bank warning of a possible surge in oil prices if the war spreads to other countries in the region. I'm just wondering how the Fed is monitoring these developments in the Middle East. You mentioned they are, and just what the potential economic impact could be if the conflict does spread to other countries in the region. Thank you.
I wouldn't want to speculate too much, but I'll just say so. Really the question there is, does the war spread more widely, and does it start to do things like affect oil prices in particular, since this is the Middle East we're talking about? The price of oil has really not reacted very much so far to this. As the Fed, as the Federal Open Market Committee, our job is really to
what
talk
about energy
to
before
understand the
the
economy
war,
and the economic effects. And it isn't clear at this point that the conflict in the Middle East is on track to have significant economic effects. That doesn't mean it isn't incredibly important and something for people to
to
take great, really important notice of. But it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body. But what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine, the same. War in Ukraine, did have immediately very significant
may or may not
macroeconomic
do
implications
anything that
because of the
affects the
connection to
Fed.
commodities. So, thank you.
Thank you.
Thanks very much.
Very interesting. All right, Chad. So I don't know. I might shock a couple of you right now. So here's the deal. There's a couple of things. One, the beginning of his speech where everybody, when we started running up, like right when he just came out and there wasn't anything there, the beginning was mostly bullish. So this is a chart here, amount of hawkish or bearish statements. Once again, for the 5th straight meeting, it was bullish. But now here's the deal. This is what I kept saying over it, man. Up, like right around here, I was like, okay, it started to sound very bearish in my mind. And it's funny because literally at the same moment, Nicky T, he tweeted, again, Nick Timiraos, the Fed Whisperer, he tweeted how in his ear, it sounds like Powell isn't really trying to do another rate hike. And this is what I've been saying. My whole interpretation of all of this, I think it was borderline neutral. It did lean a little bit more when he kept talking financial conditions, the way he was pretty much acknowledging that, yeah, the financial conditions and rates aren't even tight enough to solidify that type of, lack of rate hike. That's where it started to get pretty bearish. But here's the deal. The way I'm looking at it right now, I really think we started going up because I think the market may call Powell's bluff. Once again, a year ago, he brought up financial conditions, and that's where we would get the volatility. That's where we would get the back and forth of nobody, believing. Yeah, you may have heard, I heard it too, but at the same time, did you also catch the very obvious effort to sound hawkish? But then again, this whole pop here, it's all analysts. I'm seeing people, everybody's looking at it, and they're just like, well, they don't believe him. That's the attitude I got. The second half was, he was saying a lot of words. He was pretty much saying how longer term rates, it could do this, it could do that, but there's no real objective measure to say that it's the end. You mean people are trying to front run calling his bluff? Yes, exactly. But this time it may work because I don't know if Powell necessarily, he wanted to sound hawkish, but can he be hawkish? That's the ironic part about it. That's why, but I think it's just front running and people trying to put Powell a little more pressure. So I don't know if you like it or not. Like I'm saying, I don't know if any of you got it. The market started moving up, but right around here, I was like, okay, Powell's not answering the question about financial conditions. Again, he brought this up out of nowhere. He started bringing it up like last year. Everybody was really, really focused on it, but he's not telling you there's a rate, even the level now. He's not telling you anything. It was just like when jobs and all of those other things. So at this point, I think a lot of people are starting to say, yeah, this is bullish, but yeah, I'm saying he was fake hawkish. Exactly. That's a great way to put it. And I think the market just started buying it up as they started to realize he was fake hawkish. You know what I'm saying? Yeah, he may have planted a seed, but it's fake hawkish to the point if if inflation returned, he could be hawkish again. But then if something crashes or gets worse, I don't think he's in the position now where, again, that's why like they kept saying, well, is every meeting live? He was like, well, not, he wouldn't answer that. But at the same time, he would not tell you that he was done. And borderline, this is the same Powell you have seen. The only difference is financial conditions. And that's why I'm saying with now bringing up financial conditions, but not giving you any insight to it, and then everybody buying the shit out of this so far. It's not even that big, but it could be, depending on where we move. Again, we're already past certain levels, but I think it was fake hawkish. It was fawkish is the better way. Can we make a new word here at the chat? I think it was fawkish. It was fake. It was a fox hawk is the best way to put it. Again, because I think he could pivot to it, but I also, again, the way Nikki T and all these people, even right before, immediately, everybody was just saying, oh yeah, this is bullish. Because again, I was there to believe it. I'm down if he really gave you an answer to that. But in a weird way, though, I think he's still in part of leaving the door open. It kind of exposed Powell a little bit, if that makes sense. We'll see. We have to see his follow up. And then remember, there's a non-farms report. But like what I'm saying, I mean, here's the deal. You've seen this many times before. But when it's all said and done, like whatever you're seeing on the market right now, I mean, the bonds ain't really feeling it too heavy. So that's the thing is that the bond market's trying to agree. I think they want to try to test it as well too. But at the same time, it's not like you're getting. This is on TLT. IEF though, that did make a sizable move. The 10-year is giving a response, but like I'm telling you, we have to make progress out of like the recent ranges. So the 10-year is, and that's where, again, factor that into the peaks. That's going to be the real driver here. But for the most part, we were moving before Powell. That's what makes this all too interesting. But you're back to 4.7, man. So if we fall below 4.75, this gets actually really bullish here for the bonds. Again, or at least calming down wise, because that's what happened last time. Once we broke through 4.7, we're able to find our way back to a 4.5 in a calmer range. So very interesting. And again, bonds are even telling you a little bit about the future. But yeah, I hope that helps. I think it was fawkish. It was hawkish. Again, there was dovish comments in the beginning. They added financial conditions, and that could have been the thing, but he did not want to talk about it. And at the same time, in kind of avoiding that question, I do think it kind of just highlighted it. He could have really told you what was good there. I don't think he just doesn't want the front runners. And that's why I'm like, all right, let's see. After this, I think it's people trying to call the bluff, but I don't know if it's enough to get it going. And then I don't know the next follow-up with Powell, but you have Apple earnings and non-farms. Yeah, earnings today. We have PayPal, Roku, Qualcomm, SMCI, Airbnb, Etsy, SEDG, Elf, Melly, ALB, ET, MRO, ACLS, MSTR, Run, Dash, Car, First Solar, Cuervo, MCK, CLX, SRPT. I thought we already had some of these, though. I think SRPT and a couple of those already reported. And then AAL, AFL, AIG, and EA Sports. It's in the hike. Yeah, but Powell was different though. Again, in a weird way, I think Powell was the same, but the reaction this time around was a little bit like I'm saying, he just brought up new elements. It was kind of like he's trying to work away from the same speech. If that's what I'm saying, he changed the wording a little bit, said the same thing, brought a new concept, but did not elaborate on any objective measure or checkpoint to reach, while at the same time saying, "Oh, I'll raise rates tomorrow." You know what I'm saying? So very, very interesting. Powell is definitely baby back. Maybe old Powell comes back, but that was very subtle. Everything was very subtle about it, but I wonder if calling the bluff will be or not, and if people actually follow through with it. That's where I'm at this point. You said don't. Yeah, he kind of said don't. That's what it sounded like. Where he's like, well, where he just said don't. That's kind of what you got there. Where just again he's saying I'll raise rates. That's his version of don't. It's just like I'll raise. If we're gonna raise it. If anything shows it, we're gonna raise. Or is it a live meeting? He didn't. That's the thing though. I think that's where Nikki T didn't think, or why some people heard bullish, because he didn't want to tell you every meeting was live. He didn't want to scare the shit out of you. I don't think he could afford it. But at the same time, he wouldn't say it's a live meeting, but he also at the same time wasn't saying that, yeah, they're done and that, no, he's like, yo, we could keep going. But that's why he even there was another question. He said there's no weird precedent about stopping and starting again. He just doesn't want to cut. So SCU, what's this? This thing's dumping right now? Whoa. Sculptor cap. I don't know. This might be a SPAC. Run. Well, you got a couple more solar earnings, but I don't know if the company is solar and didn't have good earnings until the market really rebounds. I don't think they will rebound either. Because again, the ones in solar who did good, like Junko or First Solar, I believe, they killed it. They ran 15, 20, 30% on some of those. The market didn't blow up then, but I mean, at face value, I think we could have went down, but at the same time, there might be a period for everybody to again just say, well, I don't think Powell is going. I believe Powell is going to raise rates again. That's very dangerous to believe this year, but again, hawkish. It was a fake hawk. So again, he said it what he was saying was very hawkish. That's what I'm trying to tell you. Again, the beginning words were not hawkish at all. He brought up financial conditions, but literally, like, after the first three questions, all about financial conditions, it started to sound very hawkish. It sounded as if Powell was setting up a window to say, hey, if financial conditions tighten, we'll stop. But even then, he wasn't confident in what he's seen so far. That was the message he was sending, that there was no certainty with what's happened already. And honestly, there's not even a level you could look for that will even stop him, if that makes any sense. So that's where it started to sound really hawkish. But in a way of sounding hawkish, I do think the market, it will kind of called his bluff, because why would you bring up financial conditions? Why would you not say these meetings are live if you're not ready to change something? So I think everybody heard the hawkishness, but I think people are buying it in response to trying to call his bluff. And now Powell, he may not be the same Powell where he could just as easily raise rates anymore, because once again, he's paused for 2 months in a row, and you heard what he said about it. Financial conditions or the data, I mean, you don't really have a range to even know. So we'll see. But like I'm saying, I mean, the bonds aren't fully believing it. The 10-year is. 30 years saying kind of limited there, and that can't get above it. But the 10-year is falling below the level we want. Like I was telling you, as a result, if the 10-year falls below those latest peaks, we're going to like where this goes from here. If not, and it holds a higher range, then we got a problem. I don't think he's in the corner, but it depends what the market does. You see what I'm saying? Because what happens if the market just buys the shit out of this before the next time hearing Powell? Apple earnings is good, rates come down, and we forget about everything. Then Powell's going to have to, he'll get put to the test, or vice versa. In a weird way, I think Powell doesn't want equities to decline, but he doesn't want the bonds to rally. That's what it, and now think about everything you just heard him say and what I just told you right there. He doesn't want stocks to go down. He doesn't want them to go up too much, because then, inflation could get back, but he still has wiggle room. But at the same time, it's not even like he just doesn't want the bonds to catch a bid. That's all. 2-year, 5-year, he just does not want the bonds. He wants rates to stay high. He doesn't want the market to crater like it has with this velocity that parallels to literally March 2020. He doesn't want that. But he also doesn't want it to rally up, and but that's where I'm saying, that being said, if I could pick up on that, and anybody with a couple $100 million could pick up on that, they may be trying to call his bluff now. It's a very awkward scenario for him, but that's why the only way he gets if we really rally off this, you're going to have to wait till he comes back and bats it down again if he really did. Order filled. Or then again, the data will do it for you. Don't forget, you have jobs data here on Friday in 2 days. So, a very interesting scenario, but that's it was subtle. It was subtle, but it was different. It wasn't the same bullshit Powell though. It was, if that makes sense, but this was a kind of a different meeting than the last couple ones we've had of waiting for pause. Because like I'm telling you now, he's paused again. That's 2 pauses in a row, and that's why I'm saying he sounds hawkish. He sounds like a fake hawk because it gets harder to go back to being a hawk after you stop the whole train. But then again, he made it clear. He was like, I will start the train up again, but from a historical context, that's difficult. But then again, anytime the market has doubted Powell, you fucking paid for it, and Powell was correct, except for transitory. I mean, maybe it was, depending on how you want to look at it or who you voted for. But hopefully that makes sense. Very crazy. That was a fun time. How much time we got left? We got 25 minutes left. Foxy Powell. Again, bonds, I like the 10-year, though. Again, that was another thing I told you ahead of time. It didn't matter what he said or not. These are some of the more broader factors in response. But like I just showed you right here, we're below that peak now. So if we could get even below 4.7 and get back to those 4.5s, bro, I mean, that's half a basis point of difference. Even then, a quarter from just where we were at a couple weeks ago, that's both tightening and loosening conditions all in one. So that's why I'm saying how Powell feels is very interesting. But he was aware of the conditions tightening. He just didn't want to tell you what they meant. And he just wanted you to know he'll still do another one, but also that every meeting isn't live, but they've already stopped, but he's down to start again. Apple is tomorrow, Thursday. We have Airbnb, PayPal, and several others here after the bell. I could get you guys earnings previews if you'd like. You just got to like the video. You know what I'm saying? Show some love. But if you are going to stick around here for earnings, we will be here. If there's any company you want, we could start pulling them up. We already went through PayPal and Airbnb in the morning. Powell can't stop this rally. He can, but right now, I mean, his turn's over. This is like a turn-based game. It's like Mafia Wars in 2006. So Powell just had his turn, and he came out with fake hawk. It didn't, it was not effective. It kind of was. I mean, watch the January odds on the Fed futures, but we have to see how high or how fast if we do rally, if it actually holds up. Maybe that's where we should start. It has to actually hold up. Same goes for the bonds. But at the same time, it's like you will have another speech with Powell, and then you also have data to speak for Powell. If that non-farms comes in super hot again, I mean, there you go. So there's a couple of things. But after the bell today, we got PayPal, Roku, Qualcomm, SMCI, SolarEdge, Airbnb, Etsy, Mercado Libre, Albemarle, and Elf. All of these are kind of big names. They're like in the middle of like gigantic and small. But, most of these names are kind of household names. So we went over PayPal. Do you guys want Roku? Let me see how many likes go up. If you want Roku, like the video. This is how I'll gauge which ones to do. I'll just see, I can tell how many people want it. So we're at 2,002 likes right now. If you want Roku earnings preview, like the video. It went down a like. What the fuck? So I don't think they want Roku. Okay? If you want Qualcomm. Oh, wait, never mind. That was 30 people. Okay, let me try Qualcomm, like the video. If you want Qualcomm, like the video. You had 30 people for Roku. Okay, Qualcomm. We're at 250. That's 28 people. Wow, more people want Roku than Qualcomm? Oh, you sick fucks. All right, well, let's start with Roku then. We'll go in, because I was going to do Qualcomm anyways. You sickos. We already went over PayPal. I could cover it again, but you should probably check your sleeping habits. Okay, you probably woke up late today. That's okay. I'm not trying to make fun of you. I'm trying to help you make better decisions. Okay, so I'll go over PayPal once again, but in the meantime, maybe you should take note of when you go to bed and when you wake up. Try to lock down a schedule. What? I'm just saying, I saw my opportunity to inspire. Why are you getting mad at me? I'm still going to go over PayPal. I love PayPal. Shit, man, don't you mad at me? All right, Roku. I can't believe more of you want Roku. That's so sick. That's disgusting. That's crazy. So many adjectives. Breaking, shocking news. You guys are wild. Are you kidding me? You told me if I was if it was Survivor and I had to pick a teammate like Roku or Qualcomm, I ain't picking Roku. You know what I'm saying? That's insane. I couldn't pick that. That was my teammate. I had to select. I was like, oh man, that's like playing NBA 2K and you get matched up with the 62. He ain't even got bronze or anything. Don't hate. I'm not hating. I'm just shocked. I'm shocked. Did I not? Why won't it load? I already got it queued up for you, man. I'm not hating. I'm waiting. All right, let me get Qualcomm queued. That one's still just being stupid. I saved everything, but my computer. All righty. Here's for young Roku. So analysts, again, this could be out of date. I haven't double checked, so that's the thing. These are analyst updates, but just lately when the market moves around a lot, analysts like to change their opinions and shit. So this may be out of date or a little bit inaccurate. It just all depends on if there was any recent changes in the last 7 to 8 days, which is possible, but I do not know unless I double check, and I'm not willing to double check because it takes a little bit of time. So revenue is expected at 857. The company guided 830 to 875 million. Gross margin expected to come in at 43.1, 51.1 on the platform, and a loss of 14 on the player. EBITDA a loss of negative $29 million versus guidance of negative 40 million to negative 20. EBITDA margin loss of 3.4. EPS loss of $1.96. Active accounts 75.3 million. Streaming hours 26.2 billion. Average revenue per user 40.3. Oh, okay, Roku. That's still great. That's great average revenue per user. That's crazy. They got negative margins and shit, though. Q4 revenue expected, this is for their guidance, revenue is expected to come in at 953, gross margin of 42%, EBITDA of loss of 51 million, EBITDA margin loss of 5.4, active accounts 78.35, streaming hours 28.17 billion, ARPU, average revenue 39.67, and then an EPS loss of $1.22 a share. Since last quarter of July, they have lost 17%, S&P down 9.4, XLY down 12, near-term options imply a 14.3% move. Last 4 quarters, gain of 31, gain of 1, gain of 11, then loss of 4. Revenue has beaten 17 of the last 20 quarters. EPS has beaten 17 of the last 20 quarters with 2 in line. Forward quarter revenue has beaten consensus 11 of the last 17. Is Roku? Let me see their chart. No, they feel like they should be up way more. That's crazy. I would have wanted a put if they were still up here then. Because, dude, their last earnings, they murdered it, but they've already given it back. So you're just back to the whole 11% earnings. That 30% outlier, they gave that up quick. Yeah, Qualcomm, low-key, though, you're right. Qualcomm sucks as an earnings play unless it surprises. That's the thing. That's why Qualcomm is a great surpriser. But I would say 8 out of 10 earnings, nothing's going to happen. It's all going to move in line. But that's the thing. When Qualcomm comes out and if they come out with a home run, that shit will be up 17, 20%. And then that's a 2,000%er usually. But usually if it's not, it's kind of a small mover in its own little weird way. Iron Condor, well, you can. But like I said, if they come out with a blowout beat, you're going to get squashed and you'll have to pay because those options don't price in a lot. Check Albemarle. Well, we'll go in order. I mean, oh shit. I felt like we had an hour, but we only have a little bit of time. So let's just, honestly, can I just read these to you without screenshots then? That could save me a fuck ton of time. Because I gotta load it in my computer. I have so many, you know how many screenshots I have on this PC? It's disgusting. All right. But I just messed up the picture. Because these things are good to have. Damn it. All right, never mind. I just messed it up. All right, so Qualcomm revenue expected tomorrow or today to be $8.51 billion versus guidance of 8.1 to 8.9. Gross margin of 55.9%. Operating margin of 30.2. EPS $1.91 versus guidance of $1.80 to $2. Share repurchases of 758 million. Quarter revenue. What's this? QCT. There's Q4, QCT, and QTL. So they have different metrics of their guidance on the timing. QCT revenue $7.26 billion, guidance 6.9 to 7.5, EBT of $1.8 billion, QTL revenue 1.25 versus guidance of 1.1 to 1.35, and then EBITDA of 924 million. Next quarter guidance Q1 revenue $9.19 billion, gross margin 56.2, operating margin 32.4, and EPS of $2.21. Share repurchases of 708 million. Since last quarter, Qualcomm is down 18.3%, S&P is down 8.3%, XLK down 8.1%. Near-term options imply 7.8% move. Last 4 quarters for Qualcomm. Are you ready? Loss of 8, loss of 6, loss of 1, loss of 8. A year of straight earnings losses, like they had their CEO's last name was Spiegel. Evan Spiegel, just in case some of you will get offended with all the global conflict going on. Revenue has beaten consensus 15 of the last 20 quarters. EPS has beaten consensus 18 of the last 20 quarters, 2 in line. Forward quarter revenue guidance has beaten consensus 9 of the last 20. And forward quarter EPS has beaten consensus 19 or 12 of the last 19 quarters. And then I got a little bit more for Qualcomm. Areas in focus, China handset demand. Investors will be watching for updates, China market handset demand given ongoing weakness in the country. Android, Samsung, Huawei. Some people see upside to third quarter results due in part to Android rush orders ahead of the holiday season and recent new headset launches, although Samsung GS24 share losses and Huawei internal chip developments are headwinds. Investors will be looking for updates on Android demand, Samsung share and Huawei chip details. Apple iPhone data on iPhone 15 demand has been mixed, with investors will be looking for any additional details on demand trends and updates on the Apple modem chip agreement. Qualcomm, again, year to date, they're underperforming the S&P IT index, which is up 33%. The S&P is up 9%, and the SOX, which is up 27%. 69% of analysts have Qualcomm at a buy equivalent rating, unchanged from last month and up from 59% a year ago. 28% of analysts have the stock at a hold equivalent rating, unchanged from last month and down from 41% a year ago. Dang, a lot of the holds flipped on that. And then 3% of analysts have the stock at a sell rating, unchanged from last month and up from 0% a year ago. The average price target is $137.17, a 25% premium over the current price. So that is for your boy Qualcomm. So next up in line, Super Micro. Joshua, how do you be Super Micro? Okay, now explain it to me. If I said something was super, would you say that it was big or small? Exactly. You say it's big. It's super. It's amazing. Then how can you be Super Micro? I don't Okay, micro machines. Does that mean that they're small? Exactly. So how in the world can you be a Super Micro? This makes no goddamn sense. I reclaim my time. Thank you. Why don't I have a preview for SMCI? Ooh, sorry guys. I can't find the previews for some reason. Let me double check. I got SMCI headlines coming up, but usually if I run it through this, it just spits me out something. Boo. Let me double check. That's weird. I don't know why. I thought SMCI is popping. You know what I'm saying? Like, how are they going to play them like that? Or no, I'm thinking of the other one. But no, SMCI is insane. That's really weird. Yeah, no micro machine. What do you mean, Melly leak? Are you okay? Maybe. Actually, let me double check. Check Melly. That's a huge pop. They do report after the bell. That's a huge mover. SK Securities. No, I got the preview. Hold on. Let me check foreign. Mercado Libre is kind of going crazy. I'm not seeing anything on that yet. Yo, Melly's rocketing. Did they put it out? No. I wouldn't doubt it, though, in a weird way, because we only got 10 minutes. But that is, I mean, it's a weird beginning day of the quarter and everything. But they have earnings right before. That's a very awkward buy ahead of it. It's literally already up 5. I think they moved like, 10 to 15 their last earnings? I think they moved up $100. I mean, it's already almost there. Melly, no, it's like the Amazon of South America. Okay, that's running. I don't know. It's a rumor if anybody says. No one's saying it's leaked, but again, they have earnings after the bell, and they're up 5%. Melly leak 3.7. Are you sure? All right, some people are picking that up right now, but I don't have it yet. You'll have to wait. Yeah, I'm getting it one place. Mercado Libre 376, estimate 356. We can't confirm it though. I hope you realize that. So I don't until it shows up on their IR website or whatever. It's very hard to say. You never. Sometimes again, remember that one time Bloomberg put out last quarter's earnings ahead of time, and there was a reaction to a degree. So right now, the sourcing of it is limited, but I am seeing numbers come out, but it's not on the website. So just watch out. But again, like I said, it was either a leak or something, but you got the move. Okay. And then 10-minute rigged. We already had that. You're on the way down. Solar Edge, we did Airbnb. Do you guys want, I think solar's all bad. Let's do Etsy. We were going to do Mercado Libre. That already came out. And then we'll do Albemarle. So we'll do Etsy and then ALB and call it a day. Because again, there's only 9 minutes left. All right, revenue for Etsy. Revenue expected 631.3. Guidance was 610 to 645. Gross margin 70.6. EBITDA 174.4 million. EBITDA margin 27.6 versus guidance of 27 to 28. EPS of 50 cents. GMS 3.04 billion versus guidance of 295 to 31. Ending active sellers 8.37 million. Ending active buyers 96.65 million. Quarter 4 revenue 845 million. Gross margin 71.7. EBITDA margin 235.7 million, EBITDA margin 27.9%, EPS of 86 cents, and then GMS of 4.09. This is for quarter 4. Since last close, they are down Etsy 34.4%, SPY down 9, XLP down 12. And near-term options imply 12.9% a move on earnings. Last 4 quarters, loss of 14, loss of 6, gain of 2, gain of 14. Revenue has beaten consensus 18 of the last 20 quarters, and EPS has beaten 16 of the last 20 quarters with 1 in line, and short interest is 10%. Man, you're moving here at the finals. The final, that was, we're not even at final 5, but 10-minute rigged, you got a little bit of action. Yeah, Melly, there's a report of a leak. I can't confirm it, though. So the company hasn't admitted it yet, nor is it on their IR. You could double check, but there is people throwing numbers around right now on Twitter. But the source is murky. Who's the next guy? Albemarle, ALB. Where's Nancy? I have Redfin in the long term, yeah. Again, we sold covered calls. I mean, we're still up a lot. So again, I think like our exposure on Redfin is like 30% of our initial price now. That's why like even at this price, we're still up like 150 or something on it. It's fucked up. Again, those covered calls worked out in our favor. Is it ALB? I'll double check Melly once we get over this. Don't forget to ban your $100 better. When I see his name, I will. You know, he's kind of kept it low key since losing the bet. I don't know why. Again, I said the attention was nice for a little bit, but like, you know, we made a deal. I'm a man of my word, bro. I say I'm very big on deals. All right, so your boy Albemarle, ALB. Net sales, $2.53 billion. Energy storage, $1.83 billion. Specialties, $386.4. Ketgen, $273.5. Adjusted EBITDA, $609.1 million. EPS of $3.79. Revenue full year guidance for December full year revenue $10.4 billion to $11.5 billion. EBITDA $3.8 to $4.4 billion. EBITDA margin 37 to 38%. And then EPS 25 to 29.50. Since last quarter, Albemarle is down by 32.8%, S&P down 8.4%, XLB down 10.8%. Options imply 7.8% move. Last 4 quarters, loss of 2, gain of 2, gain of 5, gain of 3. Revenue has beaten consensus 9 of the last 20 quarters with 1 in line, and then EPS has beaten consensus 17 of the last 20 quarters. Yo, Conoco, Hess, yo, a little flush there on some energy. Hold up. Is there any backlash for leaked earnings? It depends how. Sometimes it's an accident. Sometimes it's purposeful. Depends if anybody did anything on it. All right, we have time. No, we don't even. Oh, shit, bro. Yeah, hold on, bro. You got to watch out. I try to get as many previews. Again, I know with Powell, it kind of made our day a little bit weirder there. So, Chattadonia, get ready, though. The new guy, he is about to be arriving here. So, listen, when I say earmuffs, that is your signal to mute your speakers because this new guy comes on and it gets very loud in here. He starts screaming. Some people have very sensitive ears. We've had reports of eardrums bleeding, dormant baby back bitch coming to life. It's vicious when it happens. So I just want to give you a warning. Make sure you're good. Have a great viewer experience. And just, as just part of my thank you for you spending your time with us today, I hope you learned something. And I don't want to end it on a bad note. So when I say earmuffs, just make sure that you mute your speakers because it gets very, very loud in here, okay? It sounds good? The term is earmuffs. It's very simple. Just 2 words. You'll be good. You'll be good. You'll get it. I think everything will be fine. You know what I'm saying? Amen? Amen. All righty. Earmuffs. Earmuffs. This is the time. Earmuffs. All right, ladies and gentlemen, we're making our final approach. As we make our final approach, you guys are holding on to any bags. Please stow them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisles with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. So we make this final approach into San Diego International Airport. It's about 79 degrees and sunny, looking like a good day unless you thought Powell would actually answer your questions because he didn't. And now it looks like the market is trying to call his bluff. But we'll talk about that later. The other good news is we're no longer under COVID guidelines until the election. So all we ask from you is you exit 1 row at a time and drop a GG on your way out. As always, we appreciate you guys in business. If you're interested in the Nicole Rapid Awards program card, please flag down your flight attendant and we'll get you that as soon as possible. As always, thank you for flying with the coat and hopefully have a wonderful evening. Let's go, baby. Bring it home. What an interesting Powell. For now, you're still holding the gain. You don't have much time left. We still have data tomorrow. More earnings after the bell. And stick around because we're going to have all the earnings right now. But now you have 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, it's time to wrap it up. Bring it home. Finalize those plays, shares, futures, options. Speak now or forever hold your peace. Powell said a couple of things. The market heard a couple of things. And the bond market moved a little bit, but we still have a lot more. Anything could happen. Apple tomorrow after the bell. The non-farms on Friday. And maybe Powell has changed today. It's already been wild. Welcome to November. You have less than 10 seconds left. Wrap it up. Let's go. Bring it home, Chad. 6, 5, 4, 3, 2, 1. Ding 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 ding. Horna. Let's go, baby. Oh, Chattadonia. We did it. We made it. 7 hours in the books. Earnings are already coming out. I need a GG. Drop them. I'm going to cue some up for you, baby. Let's go. Don't matter if you made money or lost money. I know you learned something, baby. Let me get that GG. Show love to you and all your other chads. So you got some good sportsmanship out there. So that you really contributed. So you care about more than just your stats. Even if you hate me, you got at least love for one person in here. Drop that GG, baby. All right, let's go. Hold on. We got Airbnb down. Qualcomm. I didn't even